All right, good morning, everybody. Thank you so much for joining us today. My name is Greg Lewis. I'm the marketing manager for MetaStock, and today you are 6 minutes and 17 seconds away from June 2024 Traders Summit. Thank you so much for joining us today. Let's start out by watching this video.
Hi, my name is Kelly Clement, and I am the president here at MetaStock. You know, one of the biggest questions I get asked is, what is MetaStock, and how can it help me in my trading? Well, if you give me about 3 minutes of your time, I can show you. MetaStock is an award-winning software and data package that has been helping traders for over 40 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock works across all asset classes, including stocks, futures, forex, options, crypto, and more. MetaStock is designed to help you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategies should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? What are the best options to trade? And of course, how do I know where prices will go next? At the core of MetaStock are its power tools. The power tools are designed to give professional-grade analysis tools to private traders. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting. This allows you to see how your strategy would have performed over time. One of MetaStock's most powerful tools is its charts. MetaStock allows you to navigate through your charts through browser-like tabs, arrange them in ways that you see fit, or group them in layout windows that allow you to quickly access your groups of charts. And then with the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, well, you're going to love OptionScope. OptionScope puts all the critical information at your fingertips, displaying sortable, customizable, color-coded options data, even including the Greeks. You can then take this data and analyze your options with the built-in strategies with risk-reward graphs. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you'll appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has systems based off of popular strategies, things like MACD, Bollinger Bands, turtle trading, candle patterns, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. As you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to create, build, and test their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package powered by LSEG, a world leader in market data. Zenith is a comprehensive and flexible system with an extremely powerful search tool, which includes fundamental and economic data. Add on our world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 35 consecutive years. To find out more about MetaStock and how it can help you in your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Okay, everyone, thanks so much for watching that video. Again, thanks for joining us today. We'll be starting here in about 2 minutes. Again, my name is Greg Lewis. I'm the marketing manager. On the other side is Jeff Gibby. He's coming at you from Salt Lake City, and he'll be hosting today's event. Today's event includes 7 speakers, and I know you're going to enjoy every single minute of it. I'm sorry, I have a little distraction going on outside my window. I think a bird just hit my window. I hope it's okay. That distracted me. Oh, okay. So make sure today to like and subscribe. We always do appreciate it when you can help us with your support. And then that way you'll be notified whenever we have a live event like we have today. And also, Let's see what's I'm being messaged a lot, so let's make sure I'm not messing anything up. Okay, yeah, my boss is telling me I sound great. Thanks, boss. All right. Sorry, I'm completely lost. Oh, so if you want to take advantage of today's special offers that many of the presenters are offering, just go ahead and go to our homepage, and you'll see a large banner at the top that says MetaStock Summit, and you can go there and then register for the summit, and then you'll be eligible for these offers. You don't need to do that. You could just stay here and watch on YouTube, but it's up to you. And also, while we're on the subject, sorry, I'm being inundated with incoming messages. We do appreciate it when you participate, ask lots of questions, do make lots of comments, but please just be nice and respectful of everyone, and we would appreciate that so we can all just have a good time. All right, we're starting in about 20 seconds. Again, make sure you ask tons of questions, like and subscribe. Thanks so much for joining us, and successful trading.
All right. Hey, everybody. It's Jeff over at MetaStock. I hope you're doing well. It's good to see you this morning. I'll be kicking us off. That means I'll read a legal disclaimer and talk about our sponsors and kick off the event. So in any case, if you're watching us on YouTube, hello. If you haven't already, make sure to like and subscribe. We do events like this all the time. We'd love to have you as part of the channel. And if you like this type of content, like it and subscribe to it so that you can get more information in the future. In any case, let's go ahead and kind of get the lawyers happy. Today's demonstration is designed to instruct to you on using MetaStock and the accompanying software plugins. It's not a recommendation. Excuse me. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators, features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in this presentation should be construed as investment advice or the solicitation to buy any security. So as we go through the day-to-day, if you have questions, make sure to ask them. If you're in GoToWebinar, it's on the questions button. Go ahead and just type in whatever questions you've got. It's good to see all of you. Hello, Anton, Anise, Shams, Kelly, Vincenzo. Always good to have you guys around. Anyway, as we get started, I do want to say thank you to one of our longest running sponsors at the Online Traders Summit, and that is Stocks and Commodities Magazine. They've supported us since the very beginning. They've been publishing articles on technical analysis since 1982. They've got 1.3 million subscribers. If you don't get the Stocks and Commodities Magazine and you're watching on YouTube and you want to get a free issue just to see what it's all about, go to metastock.com/traders-summit. And in addition to Stocks and Commodities, a free magazine, there's tons of other bonuses you can get from all of the presenters today. So there we go. All right. Also, we're MetaStock. We'll talk a lot about MetaStock today, but MetaStock has been rated #1 for 31 years by the readers of Stocks and Commodities Magazine. And I love MetaStock. I use it to scan the markets once or twice a day, every day. But you can also use it to test ideas. You can use it for our patented forecaster. You can find out more about that at metastock.com/traders-summit 3-for-1. We'll talk a lot about that today. So, in any case, our first guest today is Stephen Primo. Steve's been a partner in MetaStock for what must be close to 2 decades now, at least. We really appreciate Steve. I love Steve, and I love bringing him in here because he's always very, very direct. He always explains stuff in a way that's very, very understandable to me, and he always does a really, really good job. So we always keep bringing him back. So without further ado, let's go ahead and bring him on here. Steve, how are you doing today?
Hi, great, Jeff, and thanks to everyone coming today this morning.
Yes, thank you, everybody, for thank you for being here, Steve.
Sure.
All right, I can see. Oh, oops. I could see your screen, and then I got rid of the console. Where'd it go? All right, I assume we can see you.
Yeah.
Okay, cool. I will, Steve, I'll let you go ahead and take it from here.
Okay, thanks, Jeff. And once again, thanks to everyone. This early morning, this promises to be a great trader summit. A lot of great speakers coming up. So thanks. We're going to start off by actually talking about 3 exit strategies that will change the way you trade. They're extremely powerful, but you're going to see in just a moment after I explain them all to you how simple they are. And these strategies you can actually apply to any method that you're using right now, any market, any time frame. And I really think they'll greatly improve your trading and your exits. For example, let's look at this chart here. Here's an older chart in Google, and we're going to be looking at this chart mainly throughout the presentation because we're going to show you all the strategies as they apply to this one chart. Let's say you're interested in this, but you have no idea because it kind of looks like it's going up, then it's going down, then it's going back up. But ultimately, your method or your trading style, whatever it's based on, generates a buy signal right here. Okay. Well, here's what happens with so many prospective students that we have that come in new to us saying, Steve, I'll get a signal on my method and it'll actually work out pretty well. So I feel very comfortable with trading this, but only in the entry portion of the phase, because I'll either stay in too late or I'll get out too early, but ultimately this is what happens. And then I give it all back. And so what turned out to be a nice trade will actually turn into a loss, or it just is, makes me not want to pull the trigger because I don't feel comfortable with this particular method. Well, really, it's not the method so much. It's just your exit strategy. What if I could have told you that trading the same method, whatever it's based on this signal, you could have actually exited right here, right at or very near the top. And this is just going to be one of the 3 exit strategies that I'll teach you today that will, in my opinion, change the way you trade. And you'll know all the rules. You'll know exactly how to implement it in any market and in any time frame. So this promises to be a great educational presentation today. Thank you once again for joining us. My name is Stephen Primo. I am the president and founder of Specialist Trading. I've been trading now for 47 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. If you're not familiar with what a specialist is, if you ever Google those old pictures of the trading floor with lots of paper all over, scattered all over the floor, and people yelling and screaming with these weird hand signals, specialists were those traders behind those large wooden podiums that actually specialized in making a market, roughly about 50 or 60 stocks. So in the old days, before the internet, before electronic trading, what you would do is you'd call your stockbroker on the phone, say you wanted to buy 100 shares of XYZ. Okay. Your stockbroker in turn would call the floor trader for that firm. He would take your order to buy 100 shares of XYZ. And then the floor trader would walk up to the trader who specialized in making a market in that particular equity. So I did that for roughly 9 years. I made markets in stocks like IBM, Waste Management, US Air. I made markets and traded through the crash of 1987 and the bull market that followed. And in the mid 90s, I left the floor to manage money and to also teach. And I'm happy to say I formalized Specialist Trading with Pro Trader Strategies roughly about 15 years ago. And now we have students in over 115 countries and in virtually every state in the United States. So our one focus, our one goal is to be an educational company. We just simply want to educate traders to hopefully take their trading to the next level. And that's the attention to detail you'll see in today's educational presentation. Now, before I begin, as always, we are required to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these 3 exit strategies today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, since we are first and foremost an educational company only, all examples are strictly for educational purposes only. Now, another way to get education on a daily basis, free education, is to follow us on Twitter or X, however you'd like to call it. Every day, I post upwards of 5 or 7 different snapshots of signals our methods have generated, and also little bits of financial wisdom. There's our handle right there. You may want to copy that down, abbreviation for specialist trading, at SPCLSTTRADG. As I said, lots of free education on a daily basis, so please feel free to follow us on Twitter. Now remember, as I stated in the opening statements, we are an educational company. If you've come here today thinking that I'm going to tell you what I think the market's going to do, or what I think the next best stock is to buy, or what you should be selling, or what the perfect time frame is, well, that's not really what we do. As I stated, we're focusing solely on educating you, giving you the power of knowledge that has stood the test of time so that you can make your own trading decisions. If there's one thing I've learned in my 47 years of trading, the traders that are still around, the traders that just didn't have a good year, maybe a good couple of years, but had a good decade or maybe a couple of good decades, are the ones that make their own trading decisions. They listen to mentors and find educators like you'll hear today, but then they take that information and they take charge of their own trading. So that's our goal, and that's my goal as a mentor, not to force feed you signals, not to tell you on a nightly basis what to buy or sell, but simply to teach you how to trade with the specialist edge. This was the same edge that was taught to me some 47 years ago when I was struggling. Actually, I struggled my first year or two on the trading floor. And my mentors taught me these same things that I teach my students around the world. So hopefully they'll be able to sustain you as well. Okay. Now, I'm going to show you a lot of examples today using these 3 different exit methods, but please, let's wait till the end to take any questions. I know you may have a lot of questions and I want to answer all of them, but I like to take them at the end. That way we won't run out of time, and I don't want to step on the next speaker's time. So if you do have a question, kindly write it down and try to remember it. I promise I'll get to it at the very end. Okay. Okay. With that stated, let's begin. And I'd like to start out by something that my mentors taught me, because once again, a lot of people think, well, Steve, you were on the trading floor, you had a license to steal, you had all this free money coming in. But as I make no mistake about this, I tell all my students, my first year or two, I struggled tremendously. I was basically just trading water, because I was doing all the things that I would have been taught, but I'm sure that you're being taught the same way, but nothing was really making sense. It wasn't until my mentors came up to me and they shared with me these principles and these concepts that really turned my trading around. So here's what they said today, and here's what today's theme is going to be. Having an exit strategy can avoid unnecessary pain. Now think of it. How many times have you been in a trade, you've gotten out too early, and you see the thing go straight up? It's the worst feeling in the world, right? You think, gosh, I made just a few dollars. I could have made thousands of dollars. Or how many times have you stayed in a trade too long, and you see a nice profit you had that you would have been more than willing to take turn into a break-even trade, or maybe even turn into a major loss, okay? This is the major pain we're talking about, the unnecessary pain, because most traders come into a trade and the last thing they have in their a plan is an exit strategy. Sure, they know exactly where to enter and they know what their strategy is based on, they know where to place their stop, but when you ask them, well, where are you going to get out? Well, they'll say, well, I'll kind of figure that out as it goes along. I know it's going to have a profit, so I'll figure that out later on. But you have to know in advance, specifically in advance, at least have some type of trading plan so you can avoid this unnecessary pain. So here's what we're going to be talking about today, and let's kick it right off. Let's start with exit strategy number 1. And this is based on the previous highs, previous lows. Now, the concept behind this method is that price tends to gravitate towards the previous high if you're going up, and towards the previous low if it's going down. So price acts kind of like a magnet. These lows and highs are kind of like a magnet pulling the price either down or up to these levels. So it stands to reason that these would be some high probability points to exit. So who is this technique for? Well, it's specifically designed for traders who want a fixed exit. You may say, what's a fixed exit? Well, a fixed exit is one that stays at the same price, no matter what. Okay, the market could be going sideways. It could be going really straight up with a lot of volatility. Makes no difference. It's going to be fixed. Now, one of the advantages to trading a fixed exit is that you will know oftentimes even before you get into the trade where your exit is. So this will help you in deciding whether you want to take the trade or not. For example, what if you have a buy signal and you establish where the fixed exit is and you get a profit of maybe 1 point. You say to yourself, well, wow, that's not very good because I'm risking 5 points to make only 1 point. So maybe you wouldn't want to take that trade. This is where a fixed exit can help you in deciding whether you should trade or not. Or maybe a fixed exit will say, hey, listen, you make 10 points and you're only risking a couple of points. Well, that might be a high probability setup. So this is where fixed exit traders like to use this style and this technique because it really helps in their decision process whether they should be trading or not. So let's look and go back to this chart we're talking about that we'll be looking at for all of our exits today. This is this older chart of Google. All right, so as we see here, going back in hindsight, the stock has been pretty much been going straight up, right? And then all of a sudden, it has this down move on this down day. And regardless of what your strategy is based on, and fundamental news, earnings, interest rates, maybe the full moon, it makes no difference, but it generates a sell signal for you, okay? So you say to yourself, okay, I'm going to sell. Maybe you sell on the close. Where are you going to get out? You know where to place your stop. Maybe your stop is just a little bit above where this bar is, but where are you going to get out? Remember, this first strategy is based on the concept that price will gravitate towards the most recent low, in this case, since we're short. And the most recent or previous low is right here, okay? So it will act as a magnet. Now, oftentimes, it'll come right before it. Oftentimes, it will touch it, and oftentimes, it will go past it. But either way, price will gravitate towards that recent low if you're short. So let's say we decided to place our cover of the short, whether we're going short, if we bought puts or maybe we're short the stock, it makes no difference. Once price traded at the same low, this is where we're going to cover. So let's see what happened. Isn't it amazing how price just acted like a magnet, or the previous low acted like a magnet, pulling price down to that level? Now, what often happens, not all the time, but what often will happen is that price will reverse at these points. As you see right here, it did. So this is why a lot of traders like these fixed exits, because it comes right down to that level and then it goes back the other direction. You lock in some really nice profits. All right, so let's say you took that trade, you feel really good about yourself, and then you say, well, you know what? Now I think I see a buy setup because we have this kind of high right here and we have a downtrend. And look what happened. We closed above. So let's say you're trading off of this, this pattern or this, technical analysis. And so you say, okay, so now I'm going to switch. Now I've covered my short. I'm going to go long. All right. So you know where you bought. Maybe you purchased on the close. You placed your stop wherever it is. Where do you get out? Well, we want to look at the previous high. But a lot of traders have difficulty with this because they'll say, well, Steve, isn't this the previous high right here? Well, sure, it is a recent short-term high, but you want to go back at least 15 or 20 bars. So count back 15 or 20 bars and see what the most recent high was, and that would be right here, okay? So if you entered right here and sold here, you wouldn't have much of a profit. And so you may say to yourself, I'm not going to take that trade. But having the previous high at this level, you say, well, yeah, that's a profit worth taking if we do get to that point. So you use this as your fixed exit. And as we watch price unfold, it starts to gravitate slowly but surely. The previous high is acting like a magnet that brings price right back up to that point. And there's your exit point. Now, remember, a lot of students like to say, well, Steve, sometimes it'll get right just before it and then turn around. Okay, so maybe you want to put your exit right here. A lot of students will say, well, Steve, it'll trade maybe a point or two above. Okay, well, put your exit there. The point is, it's going to most likely gravitate towards those highs or lows. So it's your decision. This is where you have to make the decisions. Remember, as I stated earlier, the only traders I know that are consistent after trading for decades are the ones that make their own trading decisions. So we're sharing with you and highlighting this high probability exit area, but how you want to exit is entirely up to you. Now, here's what happens with a lot of students. As we saw the first time, it got right down to the lows and stopped and turned around. Look what happens after this. For one bar, it does come down lower, but then it goes right back up. And a lot of students say, hey, Steve, boy, I sold it and it's going higher. Remember, there's no guarantee it's going to stop at these levels. It's just acting as a magnet to push price either up or down to these levels. So this is a good place to exit. Maybe you want to exit a portion of your position. But even though we may go higher for 3 or 4 days, look what happened after that. So looking back in hindsight, having this exit strategy, even though you got out maybe a week too early, that's okay. You still had a nice profit. So let's review exit strategy number 1. If you are long, well, using this particular method, you want to exit at the most recent short-term high. And if you are short, you want to exit at the most recent short-term low. Okay? That's it. It's that simple. Let's move on now to exit strategy number 2. And that is based on a 5-period simple moving average. Now, a lot of traders like to say, well, why a 5-period simple moving average? Well, because we're as traders, we're looking to get in and out, not rather quickly, like in 1 or 2 days, but we're looking to catch something that will be based on the short term to intermediate term. And a 5-period moving average seems to work well. Also, a lot of students will say, well, why not an exponential or a weighted average? Well, feel free to experiment. Once again, if you experiment and put the power back in your hands and say, hey, with my method, with my strategy, with my time frame I'm trading, an exponential moving average works much better. Okay, great. Or you may say, you know what, I experimented with a 3-period moving average and an 8-period moving average. That's great. Whatever works the best, but it's the concept that we're teaching you that we want you to apply. It doesn't depend so much on a simple moving average or an exponential moving average. Okay, so who is this technique for? Well, it's the exact opposite of exit strategy number 1. This is for traders who want a dynamic exit. And a dynamic exit is the opposite of a fixed exit, where a fixed exit stayed at that same place, usually based off a price pattern or some type of a bar pattern. A dynamic exit is fluid. It moves and changes with the flow of the market. So it's based on an indicator. Usually dynamic exits are based on an indicator because indicators are always moving with the flow of the market. So it will change, okay? So a lot of traders like this style of an exit because it will leave them in trades much longer. You'll be able to capture a lot more profits by staying in the trade longer if it is a successful one. And if it is not successful, well, then it'll most likely get you out right away. Okay, so how does this exactly work? Well, let's go back and look at this example in Google again. Here's our buy right here that we bought off that pattern where we broke the downward trend line. Okay, now the first thing you want to do, regardless of method, regardless of a market, regardless of time frame, is to apply a 5-period simple moving average. Okay, now the way this concept works is if you're long, as we are right here, say you bought on the close of that day, what you want to do is basically follow the 5-period simple moving average. And once price closes below, all right, it doesn't have to intersect, but it has to close below. The intersecting is not enough. It needs to close below that 5-period simple moving average. That will be your exit point. So let's watch this trade unfold with the 5-period simple moving average and exit strategy number 2. So far, okay, price is above the 5-period moving average. We continue to be above. And here's where students have mistakes where they say, well, Steve, I exited here because it was below the 5-period moving average, but it closed higher. Remember, the rules state that it must close below the 5-period moving average. So we don't care if it opens way down here because it could come all the way back up and close above by the end of the day. So you're still in this trade regardless. Okay, and that's why we don't just view it looking if it intersects, because look how we continue to go higher. And so as we track it again, here we open below it once again. That's not the sell setup because it closed back up above. It closed a little bit closer this time, and then look what happened. That is a full-fledged close below the 5-period simple moving average. So at this point, you have 2 options with this particular exit strategy. You can use exit A, which means you simply sell at the market. When you close below that 5-period simple moving average, you just get out. You say to yourself, okay, the market's telling me it's done. I'm getting out of this. I'm taking my profits and saying thank you. A lot of traders that like to trade a lot, they like a lot of different markets to trade and they're in and out a lot. They use this particular exit. But then there are more conservative traders that don't need to trade so much. And they say, well, listen, I want to give myself a little bit more room. So then you use exit B. And what that is once you close below the 5-period moving average, you will not sell unless we trade below that low of that bar, okay? So in other words, if on the next bar we come down and we trade just below it, then you'll get out. So you'd place a stop there. The traders who like to use exit B are more conservative. They want to give themselves a little bit more room because they know sometimes there's whipsaw action. You'll get out and it goes right back up. Whereas traders that trade exit A are the ones that like to get in and out. They don't mind if they got out too early. They just want to move on to the next thing, take their profits and run. So you have to decide what type of trader you are. Are you more conservative or more aggressive? Let's say we were more aggressive and we chose exit A. So we sold at the market right here, okay? We entered right here, sold right here. So we have a nice little profit, nothing big. And then look what happened. Very next bar, it gaps up and goes higher. This is where more conservative traders using exit plan B would say, well, I'm glad I stayed in because, you know, I'm still in this trade and I didn't lose anything by getting out too early, all right? So let's say we had used exit B. Exit A would be out. Well, the next day it goes a little higher but closes lower, but then it continues to go higher. Okay, we still have our stop in place right here. It continues to go even higher. And then ultimately, we have our next close entirely below the 5-period simple moving average. So let's say we had stayed in the trade. Now we have two options once again. We can use exit A, which means we get out at the market. We would have said, okay, I'll take my profits, I'll get out. Or we move this stop up to just below the bar that closed right here. And this is exit B, okay? So let's see what happened on the next bar. Well, we would have exited using the exit plan B, and with exit A, we're already out. So roughly we got out right around the same price, okay? And look what happened. Okay, do you see how this plan would have really helped you lock in as much gains as possible? Now, sure, we're not getting out at the exact top, but we're, you know, I've been trading for 47 years, and I can probably count on my hands in 47 years the times I've gotten out at the exact top or bought at the exact bottom. It just doesn't happen that often. I mean, you shouldn't look for that. You should look for something that has consistency, will be able to lock in gains, but most importantly, makes you feel comfortable enough to put the power in your hands so that you can make your own decisions, okay? Okay, so there you have exit strategy number 2. Let's review that. Remember, you had 2 exit options using this. Exit option A means that if you're long, you want to exit at the market. You want to get out on the first price bar that closes below the 5-period simple moving average. And if you're short, well, you want to exit immediately at the market once the first price bar closes above the 5-period simple moving average because you're short, okay? Now that's plan A. What if you're more conservative and want to use plan B? Okay, well, if you're long, you're going to exit when price trades below the first price bar to close below the 5-period simple moving average. A little wordy, a little bit confusing there, but just remember, if a bar closes below the 5-period moving average, you're not going to exit at the market. You're going to wait for the next bar to trade below, or the preceding bars, continuing bars to trade below that bar, okay? If it never trades below that bar the way we just showed, well, you're still in the trade. And conversely, if you're short, you'll exit when price trades above the first price bar to close above the 5-period simple moving average, okay? This is a great exit strategy for those traders who like to get as much bang for your buck. If you're going to have a winning trade, exit number 2 can keep you in for a very long time. Why? Because it's dynamic. It's not fixed the way exit strategy number 1 was. It's dynamic. It's ebbing and flowing with the market. And if the market really goes in your direction, you may be in this trade days, weeks, or even months, okay? Now let's go to exit strategy number 3. To be a little personal with you, this is one of the methods that my mentors taught me on the floor, and I pretty much use, I would say, about 70% of the time. Most of our students at Specialist Trading and Pro Trader Strategies like this because it's simple and it gives you a lot of options. And exit strategy number 3 are based on range extensions, okay? This is a very prominent way of seeing a specific different way to exit, and you have multiple choices with range extensions. So let me show you what I mean here. So who is this technique for? Well, it's for traders who want multiple fixed exits. We're going back to a fixed exit, meaning that it will never change. It's already at this level, but gives them the ability to increase risk-reward ratios. You see, with these different levels of fixed exits, you'll be able to manipulate and control your risk reward. So if you're risking 2, you'll be able to make possibly 4. If you're risking 1, possibly be able to make 3. So this is one of the reasons why it is one of our favorite exit techniques for our students around the world. So let's share with you the concept. Once again, our old friend Google, okay? Remember that first sell signal we had. Here's the way range extension works. Whenever you have a signal, doesn't matter if it's a sell like we see here or a buy, it's always based on a setup bar. Now, people say, what exactly is a setup bar? Well, whenever your strategy's requirements are all met, doesn't matter if it's fundamental, if it's technical, it doesn't matter. But when all the requirements, all the rules have been met, and you say to yourself, you know, this is a signal. I should be going long or I should be going short. It's based on a bar where everything comes together. That's called your setup bar. Okay, so in this case, when we decided to sell, it was based off this bar right here, this down bar. This was our setup bar. So what you want to do with this particular exit strategy is measure the range of the setup bar from top to bottom, okay? And when we say top to bottom, we don't mean open to close. We mean from the top of the wick to the bottom of the wick, extreme high to extreme low. This is the range, okay? Let's say it's 2-3 points, okay? So what you want to do now that you come up with that number of points, you simply, since you're short, since you're selling, you subtract that from the very low of the setup bar. And this will give you the 200% range extension. Now, what you want to do now is take that same amount of points and subtract it from this 200 level, and this will give you 300. And now you take that same amount of points, subtract it again, and this will give you 400. And you can keep doing this on and on, 500, 6, 7, 8. We usually tell our students to do no more than 5. And when you're beginning, just to focus on 200, 300, and 400% range. But all these distances are the same distance of the top to bottom. It's the same amount of points, okay? So how does this work? Well, you're going short here. If you're the type of trader that has a method, a strategy that has a lot of wins, that has a high win rate, okay? And you don't mind getting out quickly, and you don't mind just having a 1-to-1 usually risk-reward ratio, like you're basically making the same amount you're risking, well, then you'd apply strategy number, or I should say not strategy number 2, range extension level number 200, and that would be your exit. So you would exit right there, and you probably most likely make the same amount that you're risking. Your stop would somewhere be around here, okay? Now, let's say you want to make twice the amount you're risking. Well, then you would place your exit right here to cover the short right here. And if you wanted to make 3 times the amount you're risking, you make 1, 2, 3 times, you place it right here to exit. Now that's just the basic standard way to trade this. A lot of our students will trade multiple shares, let's say, or maybe trade 3, they'll buy 3 puts, all right? So then they'd exit 1 here, maybe 1 here, maybe 1 and get out altogether here. Or still another way to trade this is say, okay, well, listen, my stop is somewhere up here. When price touches the 200% level, I'll move my stop to unchanged where I got short. And when price touches the 300 level, I'll move my price down to my stop down to 200. So you're kind of trailing it, all right? And then finally, we tell our students to always exit at the 400 level and no more than the 500 level. Why? Because we have found through time, even though it's not researched and not systematically been proven, we've just seen through time that when you get to the 400% and even 500%, usually you'll get some type of a trend change. And so you want to lock in profit. So we tell our students, if you get to at least 400, you should be getting out of most of your position at this point. All right, so now that we know the concept of range extensions, let's see how this works. That's where we get out. Let's say we wanted to get out at level 400, okay? Make 3 times what we risked. Well, look what happened. We got right there and we would have exited. Even though we went down 2 more days, much lower, that's okay. We made roughly about 2 or 3 times what we had risked, depending on where we placed our stop. But most likely our stop would be somewhere up in these levels. So you made roughly about 3 times, and that's a good risk-reward ratio. If you continue to do that with any method you trade, any market, you'll be a consistent, successful trader, okay? Now, as we know, the market stopped and changed direction. This is why we tell our students, if you get to 400, and if you had applied 500, well, most likely you got in right towards the bottom, but look what happened. It went up. That's why we want you to exit the position entirely at those lower levels. But so now you say to yourself, well, I'm going to go long again. Okay, so let's just go through the entire process once again. All the rules And all the requirements have come together on this bar. So this is our setup bar. So we're going to measure the range from extreme top to extreme low, and that will equal 100%. Okay. Once again, let's say it's 3 points. You take that amount of points, and now you add it from the very top of this setup bar, and that will give you the 200% level. Okay. You add that same amount again, and that will give you 300%. And lastly, one more time, you add it again, and this will give you 400%. So these are our range extension exits. So once again, if you're the type of trader that says, you know what, I want to get in and out quickly, my stop is just below the setup bar, and so if I get out here, it'll be 1-to-1 risk-reward ratio, but at least I won't, be tying up a lot of money. I want to move on to something else, or I don't feel confident about this signal. Okay, that's fine. Remember, you're in charge. This is why we, as an educator, provide you with this information so that you can make the decisions. We're not a systematic company where we say, here's the buy, here's the sell, you get out here, you buy here. No, that, in my opinion, that's a recipe for disaster. So you should be making your own decisions. You want to get out at the 200, at the 300, or at the 400. And once again, we always tell our students, regardless of what you do, once you start getting up to this 400% level, you should be seriously considering getting out, because this is most likely where the trend will change. So let's say you decided to get out right here. Okay. All right. So you're going to be basically making 3 times what your risk is. That's, once again, a great risk reward ratio. And look what happened. Price got right there. You would have exited right at the 400% range extension. And as we said, look what happened to the trend. It automatically changed. So now you see why this method is so popular. I use this all the time. My preferred market of choice is the E-mini futures. I use this all the time trading futures. And it's a great way to control your risk reward ratios. And it's a great way just to simply be in charge of your trading. Let's review exit strategy number 3. If you're long, you want to measure the range of the setup bar. The setup bar is the bar where all the requirements were met for a buy setup to be generated. And then add that range to the bar's high. These are the range extension levels. Usually go up to 2, 3, 400, and that should be it, especially in the beginning. And conversely, if you are short, well, you just measure the range of the setup bar once again, and then subtract those amount of points from the bar's low. These are the range extension exit levels, okay? So there you have it. 3 very simple but powerful exit strategies that I truly believe will change the way you trade. Why? Because for the first time, you're adding some structure to your exits. Okay, so many students, we have so many beginning students join our courses, and they say, well, I just never really knew where to get out. I would just kind of play along with it and decide on my own. I would be very subjective and just kind of let the market tell me. But you have to have some type of structure in place. It's okay for the market to tell you, but you still have to have some structure, say with a fixed or a dynamic type of exit. And there's where these 3 exit strategies can really help you. And guess what? They're yours now. You can start applying them as early as today. Now, what happens so many times is, especially with beginning students we have, they say, Steve, this is great. Wow, I never knew there's so much attention, given to exit methods. But guess what? I don't have a strategy to trade. Maybe these students haven't been trading long enough. They're just beginners. Or maybe they spent $10,000 on this fly-by-night method that didn't produce any great results, and they just said, I'm not going to trade this anymore. I'm just losing too much money. So this is a common problem. A lot of people say, great, I have exits, but I don't have a method to apply this to. Well, here's the good news. We have a special attendee discount for all of you taking time out to join us today at the Online Traders Summit. We're going to offer you our Secrets of a Stock Exchange special. This is a 3-hour video seminar. Some years ago, I was asked to be the head speaker at a conference in Colorado. And I spoke where I gave a lot more information on different high probability trading edges, not just exits, but also entries, also stop placement. And they recorded the presentation. So this is a 3-hour video seminar that was recorded from a conference I spoke at. That's yours now in this Secrets of a Stock Exchange Specialist trading course. You're going to see many more high probability trading edges to help you with your trading. I also talk about which indicators not only to use, but which ones not to use. I go into the differences between a system versus a strategy. I also go into detail and share with you the #1 chart pattern that you should have in all of your strategies to generate a high probability setup. I also talk about being on the right side of the markets, how using this special tool can help you automatically identify what side of the market you should be trading on. And you can apply all of these techniques and everything in this 3-hour course to any market and any time frame. But here's the best thing about this 3-hour course, okay? You're going to get the complete rules to a full-fledged strategy. So as I said before, if you're coming into this online summit today thinking, well, this is great, but I don't have a strategy to trade, guess what? In this 3-hour trading course, you'll get a full-fledged strategy, all the entry rules, the exit rules, and the stop placement rules. And you can start trading right away. This is strategy number 1. Now, let me share with you some of the highlights of this particular method. This is a pullback method that's designed to buy at lower levels and to sell at higher ones. So if you're the type of trader that doesn't mind waiting for a lower level to happen either in a stock, future, currency pair, crypto, and it's a high probability buy area, well, this is where a pullback method can help you, okay? This is what strategy number 1 is based on. It's one of our premier pullback methods at Specialist Trading. Let me show you some recent strategy number 1 signals. These are setups that actually happened, okay? Here's an older chart in ARHS, okay? As we can see, the overall trend is up. Now, pullback traders don't just like to buy and say, well, this is going to go up, I'm going to buy it. They like to wait for these high opportune times at these lower levels right here. This is where pullback traders like to buy. Well, once you apply strategy number 1, look where all the buy signals were, right at these very lows, okay? And every time a low was generated, you had a buy signal, and look what happened. The market went right back up. In this case, right back up to the old highs. Here you had 2 buy signals right at the low, and the market just kept even going higher. And lastly, you had a buy signal right here, and look what happened in the following days. So this is a really great strategy that not only works for buy setups, but also for going short. Example in BIIB. All right, someone looking at this chart would say, well, we're slowly drifting lower, but you know, we have a doji right here. We kind of maybe have a bullish engulfing pattern. So that guy in that chat room says you got to buy this because it's kind of going to make a really nice upward move. There's a great earnings report coming out, and the economic indicators look really great. See how my decision process is based entirely on outside sources? Well, we don't base any of our methods on outside sources like news or earnings or what we're saying in a chat room. We base all of it on market behavior. And strategy number 1 is based on market behavior. And even though you may have thought it bottomed out here, guess what? It generated a sell signal just off this little bounce. And look what happened in the following 3 or 4 days, down 25 points. So you'll get the complete rules to this method, all the entries, exits, stop placement, and you can start applying these 3 exit rules that I taught you today, if you'd like, to strategy number 1. So let's break this down. You're going to get over 4 decades of information that I've accumulated, mostly from my years on the trading floor, that you won't find anywhere else in this 3-hour video seminar. Now, on our website, this course usually sells for close to $1,000. That includes strategy number 1. But here's what we're going to do today. Because of our association with Traders Summit, June 24, we're going to drop it down for a limited time only to $37. Think of that. $37. You most likely wouldn't even be able to go out to breakfast for less than $50 today. For $37, you're getting close to 5 decades of techniques, methods, things I've accumulated in my 47 years that I really feel will elevate your trading. But this is for a limited time only. Now, we're not going to stop there. We're also going to throw in an extra bonus. If you decide to purchase this right away, so along with your purchase of the Secrets course, we will also include a 50% discount on any other product we sell. So if you're interested about any other of our methods, any other of our techniques, of our indicators, you'll get 50% off if you decide to become a Secrets course member. And remember, that Secrets course membership is only $37. So a year from today, you will have wished you became a member of this course. If you're still trading the same way and not seeing the type of results, I know exactly what that's like. Because remember, I traded like that for my first 2 years on the trading floor. It's extremely discouraging and frustrating because I know you're putting in a lot of work the way I was. I was just looking at charts and trying to understand everything, and I wasn't seeing any results. You know, I was really not thinking that I had much more time left on the floor because it just wasn't working out. Well, here's where we can help. The same things offered in this 3-hour video seminar are the same things that were taught to me and that I still use in my own personal trading. But a year from today, it might go back to the price of 1,000. It may even be even higher than 1,000. So take advantage of this deep, deep discount. I don't think of most things you can buy today for less than $50. For $37, you're getting close to 5 decades of information and techniques and methods I've accumulated, okay? Here's how to take advantage of this. Contact my sister site. They're Pro Trader Strategies. They're the ones that are in charge of all the discounts and the pricing. You can email them at trading@protraderstrategies.com, or probably the best thing to do is to give them a call at area code 310-598-6677. They have trading consultants manning the phones right now. They'd be happy to take your $37 order over the phone. And remember, you can be up and running and looking and viewing this video seminar as early as today. It's not something that you have to wait and be shipped to you. It's a link that you'll be able to watch and is yours to keep forever. Now, that link you see at the very bottom is the link that will take you to the info page, and you could also sign up online using that link if you'd like. But it's not a live link. I think Jeff or someone, excuse me, may be posting that live, possibly in the chat box or the question box. But
I did, yes.
Okay, thanks, Jeff. Yeah. So that's been posted for you. You can use that as well. I think the easiest thing is probably just to call the phone number right there, because there's no obligation. Even at this low price, there's still no obligation. They'd be happy to answer any question you may have, okay? Now, speaking of answering questions, I have about 10 minutes or so. If we do have any questions, Jeff, do you want to read them off, or do you want me to take them? It's perfectly okay with me.
Let's see. We'd have a question earlier from Ahmed. He wanted to know if the strategy fires buy and sell signals automatically.
Yes, it does. It does this for you. You know, as an educational company, we're not a black box system. So even though you will get the buy and sell arrows, first of all, when you talk about strategy, we're talking about strategy number 1. When you're talking about the exit strategies, no, they do not. Okay. All of our trading strategies, like strategy number 1 or strategy number 4, another method we teach, they automatically flash those arrows, okay? But the exit strategies do not, because we want you to be a part of the process. This is something that you have to decide on your own, and it doesn't take a lot of work. You know, I was doing this on the floor without, high-speed computers and programmers, 47 years ago, and calculating these things, and it wasn't that difficult. So it really isn't. But once you understand the process, it's really simple, okay?
Right, and another question about how. Like, does it just work with stocks? Does it work with futures? What kind of instruments does it work with?
Works with virtually any market in any time frame and any direction. I know I just focused on looking at one chart because I wanted you to understand that how these 3 methods could be applied to the same chart. But I personally apply these methods with E-mini futures. As I stated, that's my market of choice. Since my background is in short-term trading, when I was on the trading floor, we would hold positions sometimes for 30 seconds to a minute. So I'm more of a day trader, and the E-mini futures fits that perfectly for me. But I still use these methods. I predominantly use the range extensions because they're so simple and they're so easy, and I can control my risk reward. And also the best thing about that is because, you're part of the process. If it's a really volatile market, if the markets are really moving and I'm looking at a 5-minute chart, then I'll change and say, you know what, I'm going to use exit level 400. But if it's a very choppy market, then I may say, well, I'll use the first exit level, 100% or 200%. So this is, once again, putting you in charge of your trading decision. This is not a black box where everyone gets out at the same place, everyone gets in at the same place. And it makes no difference what market or what time frame, okay? So that's the beauty of all of these different methods.
All right, let's see. Brian wants to know, do your trading strategies work on intraday charts? I think you just barely kind of hit that a little bit.
I just did that. And one thing I wanted to mention too, feel free to experiment with, we encourage all of our students, since this is not black box and nothing is written in stone, we just want you to apply the concept. But it doesn't have to be, as I said, written in stone. So if you say to yourself, you know what, I've experimented with this, and a 5-period exponential moving average actually works much better with the time frame or the market I'm trading. Well, then great. This is what we want. It's more about the concept of the exit strategy than actually saying, well, Steve says you have to use a 5-period simple moving average, so I guess I have to do it. No, we feel free to experiment, become a part of the process. This is how, in our opinion, you become a consistent trader, not by blindly following a signal service, but by becoming a part of the process and by tinkering under the hood a little bit, experimenting with a little bit.
Karen wants to know, does this work with MetaStock and Thinkorswim?
Well, see, in other words, since these are very simple indicators and very simple ways in which to plot, you can get a 5-period moving average virtually on any platform. You can see where the most recent high or low is, so you can just see it on site with MetaStock. And then the range extension is just something that you would have with a hand calculator. It would take you maybe 30 seconds to generate what these levels are. But it really doesn't matter what platform you're using. As I stated, these are not things that are automatically displayed. They're basically things that you have to put together. But in our different strategies, like I said, strategy 4, strategy 1 for MetaStock, the actual strategy signals where you would enter to buy and sell to go short are actually displayed.
Cool. Let's see. Ahmed wants to know, does your strategy function effectively in both ranging markets and sideways markets?
Yeah, if you're talking about the strategy number 1, because I'm getting confused now between the exit strategies and the actual strategy. Because if you're talking about a strategy in which you enter into the trade, not exiting, but you enter, yes, they will be applied to all markets, all time frames. But just remember, I don't care what method you're trading. It could be something that sells for $20,000 that someone says, we've gone back and researched it 50 years, it never fails, or something that you just made up on your own. Every strategy, and what I've seen in 47 years of trading, has difficulty during whipsaw markets. Everyone's. That's why we give you the option of these different exit levels, because if you're in a whipsaw market, well, maybe you want to use range extension exits and get out at the first level, because you'll know that it won't really travel up that much higher. It'll go up to a certain point and get out. So that's a good way to use that. If you're in a very volatile market where there's really long trends and the markets are really screaming, well, then maybe you want to use exit strategy 2 with the 5-period moving average. So this is, you have to look and decide what type of environment you're in, and then determine which one of these strategies, exit strategies, you can use. Now, the actual strategy can be applied as well. They will generate, but oftentimes our strategies will keep you out of these whipsaws because of their requirements. You won't get signals in a lot of whipsaw markets.
Carlos had a question, and I'm going to answer because I can. Carlos wants to know, can you scan on MetaStock? Absolutely. You can. There's so many different scans that you can run in MetaStock. I generally run a scan twice a day personally, but yeah, I think scanning is one of our favorite features in MetaStock.
Yeah, definitely.
You scan any market on Earth. There's almost any. I think there's about 200-300 exchanges in there. There's tons of flexibility in scanning functionality there. So we're almost to the end of questions, but I have some comments here from the YouTube side. If you have more questions, let us know. We do have a little bit of time. So Maverick says, I've got the 3-hour seminar. It's excellent. Steve, Primo strategies in general are excellent. I always use my buy-sell line on every trade that I do.
Oh, good. That's good to know. Yeah, that's another. Probably the next time I speak with you, Jeff, I'll be talking about that particular indicator.
Okay, cool. Yeah. Always happy to have you. Anyway, that's all the questions. Any final thoughts?
Yeah, my final thought is, remember, our whole goal as an educator, remember, our job is not to force feed signals and tell you what to buy or sell. As an educator, we just want to pass this information on so that you can decide for yourself. But that's what you should do with all the speakers today. We have some great speakers. I know Vince Vora is a great speaker, Jake Bernstein coming up, and get a little bit of information and education from each and every one of them. They can really highlight your trading, and I really think improve it and take it to the next level. I just want to say thanks to Jeff and everyone at Trader Summit for inviting me to speak, and I wish you all the best of luck in trading.
All right. Thank you very much, Steve. Let me go ahead and do this. I'm going to, as always, eject you just so that, just for safety. Let me go ahead and do that. But before I do, thanks for coming in. It's always so good to see you. And right. I really appreciate everything.
Thank you.
All right, let's go ahead and do this. Okay. Yeah, one of the things that we've had happen in the past is sometimes the room will get shut down. And that's always, if that happens, just log back in. And you'll see a very stressed out Jeff Gibby getting everything running again. But that's why we eject people. So big thanks to Steve for coming in. Going to move this out of the way. And we are actually also running a special. He talked about strategy number 2 or 1. We actually do have a special that we're running on the strategy number 4 that we have here in MetaStock. I'm going to talk a little bit about that real quick. Strategy number 4 has an exploration. It's got an expert advisor, a layout. He's got 12 training videos that come as part of it. And here's a kind of a list of the training videos that are available. You get the strategy number 4 rules, the buy-sell line, entry and exit techniques, which he did a really good job of talking about exits today. I'm not going to read all of these. You can if you want to. If you want to get that, that's normally $5.99. We do always back everything that we sell here with a money-back guarantee, so you can try it out for a month. Here at the webinar today, if you get it as part of the summit that we're doing, you'll do $4.99. And we'll give that with a 30-day money-back guarantee. Now, I had a question earlier, do I have to have MetaStock? And the answer to that's no, definitely not. For this particular strategy, if you want to run the scanning and have the expert advice and the commentary and all that kind of stuff, you do need MetaStock, because obviously that's the engine that makes it run. What we will do as part of it is we will offer you a 30-day money-back guarantee. So, and a 30-day trial to MetaStock. So if you've never tried MetaStock before, you want to kind of take a look at it, play with the scanning, play with the stuff that's part of it, you're very, very welcome to do that. So you can give us a call, 800-882-3040. You can go to metastock.com/summit promo to take advantage of any of the MetaStock offers that we have today. And if you have questions, you want to get a little bit more information about it, our sales team is great and very, very well trained and happy to help you. So you can also get a hold of them at metastock.com/saleschannel. So, yes, Kevin wants to know what's the offer for life. The offer is for life. It's a one-time purchase. So let me go ahead and type this in the comment real quick. Metastock.com/saleschannel. All right, cool. All right. Let's go ahead and do this before we kind of migrate or translate or transfer to our next guest. I do want to say a big thanks to Stocks and Commodities magazine. I remember it's been probably 13 or 14 years ago, but I remember calling those guys over at Stocks and Commodities, talking to Jason and just kind of talking to him about kind of this idea we had to put together a full online summit that lasts all day. And I think we've probably done 100 or 200 of them since then. But ever since that first one, he's like, yeah, that's great. I'd love to support you. They've helped us with the marketing. It's a great magazine. One of the things that you're probably pretty serious about for coming to an all-day event is learning. And one of the things I like about getting the Stocks and Commodities magazine in the mailbox every month is the fact that I can actually kind of get in there, read different articles, and have them delivered to me. So I can always kind of be learning some new functions and new techniques. So if you are watching this on YouTube and you want to go to metastock.com/traders-summit, if you register, not only can you get a free magazine, you can also get a free courses from Vora, Steve Primo. All of the presenters today have done a good job of providing some bonus offers that you can just sign up for. So to do that, go to metastock.com/traders-summit. You'll register for the event today. And what you want to do is just select the offers that you want. Now, what's going to happen is those offers are going to be fulfilled by the companies. So give them a couple of days. What'll happen is tomorrow I'll come in and kind of distribute all the different lists to everybody that wants the offers. And so give them a couple of days to kind of get that out to you. But a big thanks to Stocks and Commodities magazine for sponsoring the event forever, ever since we started them. We appreciate that. So, of course, we're MetaStock. We're going to talk a little bit more about MetaStock. We can scan the markets. Love scanning the markets. You can do it as many times a day. It's not like some of those old server-based solutions where they ran a scan for you yesterday and they're giving you Friday's results. You know, you can run your scan anytime. It'll run. You can kind of see it complete. You can run any market you want. You can run any time frame you want. It's very, very flexible. And that's one of the things that even me, I've been using MetaStock, like 27 years now. Even me, I used to go in there and I just wouldn't be able to trade without it because it is so functional and kind of helping you do that. But that's not all it does. It tests trading ideas. You can actually go in and there's a forecaster. It'll give you advice in terms of what's happening. 31 years it's been rated #1 in its price category. And pricing on that starts, if you're here in the US, it's going to actually start at about $69 a month. If you're overseas and you're looking at international markets, it's $59 a month. What we're going to actually do is if you buy a month, we'll give you the second and third month for free. Then you can do that at metastock.com/traders-summit 3-for-1. And I'm going to put that in the chat as well. You can also do that also at the Summit promo link too at the very top here. So 31 years in a row, it's been rated #1. Thank you. For those of you that have been using MetaStock for decades like me, thank you for voting us year after year after year #1. I appreciate that. So there you go. All right, making sure we didn't have any questions. Our next guest is Vince Vora. Vince is a good friend of mine. Vince likes to look at kind of the slopes of moving averages. A lot of the stuff that he talks about, particularly when it comes to money management and risk management, are things that I take very, very seriously. I think they're the best things to learn. Vince has also been a partner in MetaStock for decades and a very, very good friend and mentor of mine. We really appreciate kind of like all the work we've done with him over the years. He's created some of the most successful strategies that we've had. And let's go ahead and get you started, Vince. How you doing today?
I'm great, Jeff. How are you?
Great. Good to see you. Let me go ahead and make you the organizer or the presenter. So that should pop up on the screen.
Yes. Let me know when you can see my screen. You should see a slide. It says
I can see
trading win.
you, and I can see a bull and trading wins. So
Excellent.
Everything's coming through. You sound good to me. I guess it's my turn to get out of the way. Your turn.
Well, thank you. Thank you again for having me on. As Jeff was saying, been working with MetaStock for many, many years. They have a great team there. Everybody from Jeff to Scott to the sales team, everybody just fantastic to work with. And glad to be part of this presentation where, as Stephen Primo said earlier, there's a great lineup of speakers. I kind of miss seeing them. We used to have live events before, the whole COVID thing happened. And so we used to see each other in person a lot. That hasn't happened for many years. Hopefully we'll do some of that soon. But welcome, everybody. I'm Vince Vora. I'm the head trader here at Trading Wins. And I've been doing this for a very long time. Throughout the years, have developed many systems and strategies and have coached many students, especially over the last eight to 10 years here. Before we get started, just a quick disclaimer, trading can be risky. Obviously, don't trade with real money until you're very comfortable with the system. And as Stephen was saying earlier, our job here is not just to feed you picks. That's not what we do. What we do is teach you the right way to trade the markets, a way that reduces your risk, but more importantly, gives you an edge in the market in order to do this, not just profitably, but consistently profitable. So let's get into it. Let me bring up my MetaStock platform here, which is great. If you haven't seen the new upgrade 19, it is fantastic. So if you don't have it, you should grab yourself a copy. But what I want to talk to you about today is our Victory 2.0 indicator. We came out with our Victory, our first version, back in 2019, and we have been using it ever since. But earlier this year, we added a few additional features which have been popular. And the strategy itself has been very consistent. So I'm happy to share it with you. Let's get into it. First, I'm going to explain to you what you're seeing on the screen, all these little arrows and these lines and so on, the ribbons down below. And then I'm going to get into the rules of exactly how I prefer to use this strategy. And along the way, I'd like to share as many charts as we can. Show you anything from individual stocks to ETFs, indices, futures, Forex, you name it, crypto, if that's what you prefer, any time frame. This works on any time from any market, by the way. We tested this different exchanges around the world before we released it. So by all means, please type in whatever symbol you'd like me to pull up. I will go through some of the more popular stocks that a lot of people like to trade, but if there's something you prefer, by all means type it in and ask any question along the way. I'll try to answer as many as we can. So what you're going to see here are a number of arrows. Some you'll notice are smaller and lighter like this one, but any symbol that we have, whether it's an arrow or a line, anything on the chart, if you hover over it with your mouse, it will tell you exactly what it is. So here's a long setup right here. And then you'll notice that some of the thicker arrows, a little darker in color, when we hover over it, it'll say HPB. This is part of the new 2.0 upgrade, where the HPB stands for high probability buy. And then we also have on the short side, high probability sells and so on. There's one here. So what that is that, you know, the original algorithm really consists of only a couple of indicators that, when they line up, give you a very strong edge in the market. We like to trade with trend and momentum on our side. And when these two indicators line up, there is a very high probability that it's going higher. Now, recently, what we've done is we've added a couple more layers of confirmation to that. So the high probability signals give you an even greater edge. So that's what these symbols are. And red, obviously, are shorts and high probability shorts. And then we have exit flags. Sometimes you'll see yellow bars, which means you shouldn't be long or short. You should be on the sidelines. But you'll also notice that once we're in a trade, for example, this long, all the bars will be colored the same. They will all be green until we get an exit. Now, you don't automatically always go from a buy to an exit and a sell to an exit. You may just go from a buy to a sell, for example. Okay? So the one rule I want you to remember is that whether you're long or short, any change in color means you should exit that position completely. Not scale out part of it, but exit it completely. Okay? Along the way, you'll also see these dots. Like this one that says long RE. That's long re-entry. What this means is the same criteria that came together here for this long has come together again. The only reason why we put a dot instead of an arrow is to let you know we're already in a trade. Okay? And so if you miss that, you can now jump in, or if you're more aggressive and you're already in it, you can add to your position there. Then along the way, you'll see these TP here, long take profit or short take profits. Those are just an area where if you were in this trade from the beginning, you can consider taking a small portion off and banking those profits, okay? If you're more aggressive, again, what you can do is enter here, take, say, a third off here, and if you get another entry after that, you can add that third back if you like. Take a third off, add a third back, etc. But like I said, when you change color, you want to close the position out completely. Okay? So the other piece is this blue line. And as I hover over it, you'll notice it is a 20-period simple moving average. We use this to judge the amount of momentum behind the trade. So what we're looking for with this blue line is the slope on that line. It can be flat, which if it is, we're not really interested in taking these setups. What we're going to focus on are the signals, the setups that have a slope on that 20 in the direction of the trade. So if we're looking at a long setup like this, we want that 20-period moving average to be sloping higher. And the more significant the slope, the stronger the momentum is in that direction, which is what we want to see. So something like this reentry here, a little while ago on QQQ, here the NASDAQ 100 ETF, was just about the most perfect setup that we can look for. When I explain the rules to you, you'll understand why. But the starting point is that slope on the 20. When it is sloping that significantly, there is a lot of buying pressure, and that's what we want to see. So that's how we use the 20. Then there is down here what we call the ribbons. And what we're looking for from these ribbons is to confirm that two higher time frames than the time frame that we are trading are actually in line with what we're trading, the type of trend or setup that we're trading on that lower time frame. So this happens to be the daily time frame. You'll notice that the top ribbon is weekly, the bottom one is monthly. Now, we certainly can switch if you're, for example, a day trader. You just right-click anywhere in your chart, click Apply Template, come down here, and say we're going to trade off the 1 minute time frame. We're going to go to the other extreme. Okay, so we're going to bring up the 1 minute template here, and what you're going to notice on the ribbons is that you get a 3 minute and a 5 minute, two higher time frames, right? We can go and apply the template for, say, the 5 minute or the 30 minute, right? Whatever time frame you prefer to trade, and what it's going to do is give you two higher time frames. So on the 5 minute, you'll get the 15 minute and the 30 minute. And what you want to make sure of is that the color here on both matches the color of the bars on the time frame that you're trading. When you're trading with all three time frames aligned, again, you have a significant edge in your favor, and the likelihood of that move to continue in that direction is quite high. And that's what we're trying to do here. Okay, so whether it's a 1 minute, a 5 minute, a 30 minute, etc., daily chart, you're going to have the opportunity to look at the two higher time frames without, going here and flipping and changing time frames. At a glance, you'll have everything right here for you. Okay. Now, before I get to the rules, I just want to show you one other feature that was added, which is fantastic. Again, we go to Apply Template. We go down here, and we have what we call a market overview. Okay. Now, we have this so far, not only for the U.S. markets here, but also for the Indian market, the Nifty, and the ASX over in Australia. And we will likely add more as we go forward. But right now, those are the three that we have. And what this does is gives you a top-down view of the whole market. Let me show you as I bring up the market overview here for the U.S. markets. And there's also a multi-time frame where you can split this into, say, daily and weekly at the same time. This is just one view, but you'll be able to change the time frame if you like, just like on any chart. Now, you'll notice that there's multiple symbols here. Not only is there the ETFs for the Dow, the S&P, the NASDAQ, and the Russell, which are the four main indices that I look for to sort of gauge what the overall market is doing, but then there's each individual sector here, from communications to consumer staples, energy, financials, etc. And what this is showing you is what the color of victory would be on each of these charts at the same time. So when you're looking down the right-hand side, which is the current time, now, you'll be able to tell whether it's a bit of a mixed picture or whether everything is aligned. So when you're at a time where just about everything is green, you know that you're in a strong upward market. And when everything is red, you're in a strong downward market. So this kind of gives you a quick glimpse of the overall market. Also, you don't always want a portfolio with everything, all positions aligned in one direction, right? Even if you're in a strong bull market, you're going to want one or two positions in the opposite direction. So, throughout here, when we were in a strong bull market, energy was not. Energy was going in the opposite direction. So we could look at the energy sector, pick out two of the best short plays there, and add those to the portfolio. So it's just a very, very handy feature to have. And in a quick glance, it gives you everything in one view, and then you go and you break it down from there. So Victory not only will highlight stocks or any market actually that's in a strong trend, one direction or the other. But if you take that top-down approach where you're looking at the overall market and then breaking it down by the sectors, and an example, or semiconductors recently, right? The NVIDIA of the world, AMD, etc. Those chip stocks, all in the same sector, and most of them were trending strongly. in the one direction. Things are kind of changing now. So here's the latest trade going from here. And now today, we're getting that changing color. So if you were long NVIDIA here, if we close out the day like this, then you'd want to exit that position right now. It doesn't mean that the full long trend is over. If you look at the weekly and the monthly, we're still solidly green here. What it means is we should be out of this trade on the daily time frame and then be waiting for it to turn around, get back above there, give us a green signal, and look for another long opportunity there if that happens. Okay, but this is NVIDIA, and let's go over some of the rules now. And I'll tell you the types of setups that I like and focus on the most. So to break it down, first of all, I will say that if you get a copy of this indicator, you're also going to get a training class that goes with it, where we describe exactly how we trade this, go over the rules, and tell you exactly which ones we want to take and which ones we don't. The idea here is not to take them all. Victory not only will help you highlight those strong trends that you want to take advantage of, but more importantly, it's going to highlight areas of consolidation, just like this, which we want to avoid. This is where most traders lose their money, right? In here, you can buy just about anywhere and make money when there's a strong trend. But can you keep that, right? And this is where people get chewed up in here. Because if you were to buy here, you get stopped out, right? You go short and you get stopped out. You go long and you get stopped out. And you're just giving away your money in areas like this, where if you can identify these areas, you not only avoid them to keep your money, but you can actually turn this into an opportunity, because this is a clear channel. And all you have to do is mark the highs here and the lows of that channel and wait for a break one way or the other. In this case, the break happened to the upside into all-time highs. So no resistance overhead, and this just took off and had a monster move. The other thing you should know is that when you identify a channel like this, once there is a breakout, what you can do is measure the length of that channel, and the move that happens afterwards is usually very similar in size. So have a look at the length of this line. If I were to draw a line here on this move, right? It is very similar, is it not? That's exactly what we're looking for. So not only do we avoid getting chopped around and we keep the profits we had made in the previous run, but then we just sit and watch. And the longer it goes on, the better it is, because the more explosive the move is going to be when it happens. And then we wait for that breakout. And once we do, we take advantage of it. And we know more or less how big the run is going to be. Very exciting. So these are the things that we're going to look for. We want to avoid these signals, but we want to take the ones with slope, right? With that 20. So let's go back here and find a typical setup. And this one here is a great one. And here's why. Number one, we look for a signal, right? That's rule number one. Green arrow, red arrow, long, short, whatever we prefer on the time frame that we want. And then we're looking for that 20 period MA, the blue line, to confirm to us that it is a signal that we may want to take. Step one, does it have a slope in the direction of the trade? If it does, like this one did, an upward slope. And you might ask, what degree of slope is acceptable? Any degree of slope is acceptable, but about a 45 degree, just visually, like the line I'm drawing here, is what I would consider to be very significant. So anything with this kind of slope or higher is fantastic, right? Slightly less is still okay. As long as you have any kind of slope, it's good. But something like this or greater is fantastic. So here we had a real nice slope. The other thing is that we want to take signals close to that line. We don't want to buy away from that line, because typically when you buy away from that line, it ends up snapping back. Okay. So in this case, yes, it did run some before pulling back, but in many cases, it does this exactly. And so we don't want to buy high and sell low. We want to do the opposite, right? So we want to buy near that 20. Also, we want this bar, the bar that corresponds with the arrow, to close near the high of the day in this case, right? Near the high, the top half or quarter of the bar. That gives us a higher likelihood that it will follow through in that direction. Okay. Then we want to look at what's overhead. So we want to look to our left and see if there's a lot of previous activity or not. Okay. If we see a bunch of blank space like this, that is to our advantage. Why? It means there's an open road ahead, no overhead resistance. If there was a ton of previous activity there, this would have a much more difficult time going forward, right? When we're breaking out to new all-time highs like that, and there's absolutely nothing overhead, it's the best case scenario. So at that point, we enter the trade, and then it becomes a matter of managing that trade. Where do we add to it? Where do we scale some out? Or where do we exit the trade completely? That is it, okay? And I'm going to show you in a little while another feature called the expert commentary that will help you hold your hand throughout the trade and tell you exactly what to do along the way. But these are the types of trades we look for. So whether they're indices, you can look at the SPY, for example, S&P 500, or any other ETF. Here is another great set. Now, here's a great example. So we had a long here. Does it meet our criteria? We have a signal. We have a significant slope in the direction of the trade. We have a bar that's close to the 20, right? We closed pretty much at the high of that day. And when we look to our left, there wasn't much. So I think this was the previous all-time high. So had an easy road ahead, right? Did it initially move in that direction? Yes, but look what happened. It came back and took us out. So was this a winning trade? No, it was a loss. But here's the key. It was a small loss. You'll notice if you look at these signals, especially in the choppy areas, that when that market starts to go against us, victory will get you out very, very quickly. So what you should experience with victory is that first of all, you should have way more winners than losers, but your winners should be much greater than your losers. And that's, you'll notice here, what got us out, it got us right back in. Now, did we have the same conditions that would allow us to take the trade? We had a symbol. We had significant slope on the 20. The bar was close to the 20. It closed near the high, right? And a lot of blank space overhead. And this one worked out great, right? So a trade like this will make up for many, many of these small losses, right? And that's what we try to do here over and over and over again. Now, if you want to keep this even simpler than what I'm describing here, and not use like the take profits or the re-entries or any of that, you can remove some of these. You can just right-click on your chart, go to Expert Advisor, and then Expert Properties. If this comes up, just click Cancel. And now here are all the different symbols. So you can check and uncheck the ones that you prefer to use, and and remove the ones that you prefer not to see, right? And so that will clean up your chart quite a bit. At the end of the day, if you want to keep this as simple as possible, just look at the colors of the bars, all right? That's all you have to do. Look at the colors of the bars here. So, for example, let's take just a quick second and go through this exercise, all right? I'm going to uncheck all right? Here, I'm going to uncheck all and refresh my chart. Okay? Now, you'll notice that we only see the color, okay? I'm even going to remove the 20 here for now. So we strictly have the color of the bars. So if you were long when it was green and short when it was red, or just not trade to the shorts. Some people don't like trading or to the short side, right? So if you were long when it was green and out of the market when it was red, right? Just look back and have a look at how you would have done. Okay, and again, type in any symbol, let me know. And more importantly, how would you have done when you have the higher time frames aligned, right? So for example, in here, I'm on the daily chart, weekly is green, but the monthly is red. So this signal here, when we go green, we do not have that double confirmation. We do not. So this is a trade we should not be taking here, right? But this one in here, we had both green, and off it goes. Same back in here, okay? Now, here's the importance of why we add those re-entries and those other signals along the way. For example, when this initially turned green, the higher time frames were not aligned. But along the way here, then we had other opportunities where we could get in, okay? But if you want to just keep it simple, you could just look at that. And the time frame, if you're more conservative and you prefer to trade on a weekly or a monthly, right? Again, you could just follow the color. What we do with the 20 and the other signals is help you avoid these areas in here. Because if you just took the color, yes, of course, you would do great on these long runs and come out ahead in the long run, but you'd be getting chopped around here. For example, you took this green, you'd be stopped out and it'd be a small loss. You took this one, you'd be stopped out. So how do you avoid some of those and improve your accuracy? That's where we add in these other signals and these rules, right? Where we get to improve our accuracy rate and, become more profitable consistently over time. All right, let's have a look at a few others here. Some of the ones we have a membership group here at Trading Winds where we get together live over Zoom 3 times a week, at least an hour each time. And there are a number of trades we've been following for a long time. ELF Beauty, here's been one of those charts. And again, if you just focus on these areas where there is slope behind these signals and a lot of blank space overhead, these are the ones that tend to. And remember, when you're looking at this chart, you're not looking at from here to here, for example. If you entered here, your exit was up here, right? If you entered here, your exit was up here. Yes, we encourage you to take some profits along the way, but what you're looking at is you're entering here, taking some off, you're adding it back, you're taking some off, adding it back, etc. And then up here, you're exiting everything, right? Back in here more recently, this was another setup that met the criteria, and off we go. And again, if you're looking at different time frames, it works exactly the same, right? So with slope, a lot of blank space overhead. That's what you want to see near that blue line, right? This one was a perfect one. This one was a perfect one, right? And these are the trades you want to take. These are the ones that give you that edge. Down here, okay, this was a slope. You could have taken this trade, okay? Might have made a small profit here, maybe even a break even, not that big of a deal, etc. Would you take this short? No, you would not. Why? You do not have that line sloping downwards, right? If you're looking for a short, you're looking for that 20 to slope significantly downward. So any of these shorts, you would not take. Remember, as I say, if you just followed the color, you'd be long here, but then you'd be short here, which would be a losing trade. Same with this one, losing trade. So we're helping you avoid those chops and just stick with the high probability signals. Now, you may look at this one and say, we would not have taken this because we don't have slope on the 20, right? And we would have missed this. So the first answer I would give you is, yes, we could absolutely do it that way. To try to take advantage of a move like this that doesn't pull back and gives us other opportunities along that trend, we have 2 rules that we use in situations like this that will allow us to take some of these. Okay, but even if we miss them, I don't worry about the ones I miss. I worry about the ones I catch, and just because there's plenty of them. You'll notice when we do a scan and you'll look through many more charts, you're going to see that there's no shortage of setups here. So missing some doesn't really matter. What matters is that we don't take big losses. That is the key to this. You want to avoid any sort of big losses. And in that training that I spoke about, we're going to give you our money management rules. And there's just 5 rules. And if you follow those money management rules, you'll never take a big loss again. And I can guarantee you that. And I know you don't hear that word a lot. A lot of instructors like myself, we try to avoid using words like guarantee. But the money management rules, I've been trading with them for like three decades for a very good reason. Before I had those money management rules, I took a very significant loss when I first started trading, which scarred me big time. And so those rules came from that loss. I wanted to make sure I never felt that or experienced anything like that ever again. So I put 5 rules in place that make it absolutely impossible for me to ever take another loss that size again. And I'm going to be teaching you those in the training class. And they're very simple. And if you follow them, you'll make sure that your losses are always on the small side. Now, even having said that, there are situations where there are gaps. Some of you might be thinking, well, you can't control gaps. You're absolutely right. But even with gaps, you wouldn't experience a big loss if you follow the money management rules. All right. Now, what are the 2 rules that allow us to take a trade even when the 20 MA is flat like this? Well, one of the rules is we look for a break of a prior high. So we may not have it here, but when we do break that high, then we're able to jump in on that trade. So in this case, we could have taken advantage of about 2/3 of it. We would have missed that first third. The other rule is to look or wait for a retest of the 20, right? So, which never happened here. A retest, for example, is like this situation. And let's say we were looking at a trade here. It moved up. It came back to test that line, that 20, and it bounced off it, right? So it proves to us that it held support there. It came back, held that 20, and continued on in the upward direction. That is a successful retest of the 20. So here, if we moved up a little, came back and held that, boom, off we go. So we didn't have either condition here at the beginning, but we did have the first condition breaking that prior high here eventually, and that's how we could have taken advantage of that. Let me show you different markets. For example, gold, right? Futures. How many of you trade futures? You can look at gold, crude oil. There's futures on many different things. The rules remain the same. Okay, we're looking for these trades with slope that are near the 20, closing near the high for that day. When we look to our left, we see blank space, and that's what we want. We want to avoid these areas. Okay, we want to avoid these areas. That's how we do it. This one, for example, was another decent trade, and it worked. And that's what we're looking for. Again, the time frame doesn't really matter. Whatever you're comfortable with. Okay. Now, if you're say trading off a monthly time frame, right? You're not going to see two higher time frames. We don't go any higher than the monthly, but you're going to see the weekly and the monthly here, just like you do on the daily. But it works the exact same way. Now, if you ever see these grayed out bars, that means there wasn't enough of a history here, not enough bars to calculate the algorithm behind this. So if you ever see that, it's just because we needed more bars to calculate that formula. Once it started, once we had enough bars, there's your initial signal, and from there, off we go. So this was an obvious one, right? You had the signal, You had slope, you had a bar near that 20, you close near the high, look to your left, it's blank, and off you go, right? Now, this short, if you wanted to take this short, was this a valid sell? We had the signal, but the 20 was not sloping lower, was it? So again, we ask ourselves, did we clear a prior low? No, not until here. So you could have gotten short here. If you did, would you have made money on that? Yes, you would have. Or if it had come back and retested that 20, then we could have gotten it. So you could have taken advantage of this. This one here, by the way, I should say, we would have exited this trade here. This one would have been a loss. Okay, there's good reason to take this trade, but it did not work out. But what is the key here? Look at the size of the loss here compared to the win here. That's what matters. Then on a break of this low, you could have taken advantage of this short and made more money. This short here worked for a little while, but then we had a big move against us here. We would have had a loss here. Again, would it be a huge loss? No, it would have been a small loss, especially when you incorporate our money management rules. Then these signals would not qualify because of the lack of slope. This one here, here's that retest I'm talking about. So flat 20, we're not entering here. We're either waiting for a break of that high, which comes back up here, or a retest of the 20, which is confirmed on the exact same bar. So our entry is right here on this one, not here. Okay? And we have a real nice winning trade. So just based on that, then of course we avoid these with these choppy conditions. And then here again, we have slope and we can take that. So if you look at this winner, this winner, this one, and this one, compared to the couple of losses that you would have had, you come out way ahead. And that's what we try to do here. Okay. Now, I forgot to mention also here on this one, when you're looking at the higher time frames, they were not aligned here. They should have been both green. They weren't. But by the time this retested the 20 and broke that high, they were both green. So we had obviously a clear green light ahead there. You know, as anyone trade Forex here, we've been following the USD JPY, the Japanese yen, here for a while. And let me explain why. This has to do with what I'm talking about, you know, with overhead resistance, etc. Let's go back to the daily chart here. So we were watching this right around here. Let me see on the weekly. Bring in more data here. Right? Oh, where was it here? Let me see on the monthly. We're looking for a break above these highs, right? That's what we wanted to see, because we enter an area where, again, nothing but blank space, right? And we've been running nicely. We're having another good day here today. But again, this one, right? These re-entries here, see, this one's further away, right? Not my favorite. This one's real close to the 20. This is what I like. So, and again, here's another example, right? Do you take this trade? No, you don't. You have slope in the opposite direction, not in the direction of your trade, right? You know, so you're waiting for a break of a prior high or a retest of the 20. And then here, when it comes back and bounces, this is your retest. So now, even though you can't say you have slope, you have that retest of the 20 and a signal. So you have the green light to take that trade. But again, if you don't want to overcomplicate it, if you're not that experienced yet to trust yourself on judging the retest and those little things, even though we'll teach them to you, you can just stick to the very simple, obvious trades where you have significant slope, you're near that 20, etc., and you have confirmation of the higher time frame, and off you go. Remember, we talked about putting the odds in your favor, giving yourself an edge when you're constantly making sure that you have the same few points of criteria in your favor, right? The slope, the higher the confirmations, etc. You're trading with that edge over and over again. So you're going to be right more often than not. And that's the advantage here. Okay.
Hey, Vince?
Yes.
I didn't want to, when you have a moment, Crime Store Cafe would like you to look at the Dow Jones on a 5-minute, when it's convenient.
The Dow on a 5-minute? Sure.
Yep.
It's okay if I use the ETF here, DIA. Let me go back to the 5-minute chart and have a look. So here's a most recent. Now, obviously, there's a lot of areas recently that have been quiet. These channels. Remember, this is what we want to avoid. So this is what we look for. We want to avoid this, but at the same time, you want to try to turn these into an opportunity. So you can mark the highs here, you can mark the lows, and wait for a break, right? One way or the other. Now, you got a break here, even with a signal, okay? Now, is this bar close to the 20? It is not. So you have to reassess your risk on that. So if you're more aggressive, you would take it. If you're me, you would not. Now you might say, hey, well, you're missing this move. Yeah, that's okay. I would have caught this one. Here's that one, that type of trade that I'm talking about that we look for consistently. Now, whether it's on a 5-minute chart, a 15-minute, an hourly, a daily, weekly, monthly, it works the exact same way. And these are the ones that you look for. So when you're trading on a 5-minute or a 1-minute and so on quiet days, you're going to have to sit through periods like this. It's very boring, but it's also a huge opportunity as you're waiting for a channel to break. And, another way we play breakouts, when they're too far from the 20, for example, we look at them differently. What we would do here is take a half a position, okay? And then if it were to come back and retest the highs of that channel successfully, like bounce off it, or if we got another victory signal along the way, we would add the other half. So if it's riskier, meaning it's farther away, you could take a half position and play that. Or just keep it simple and just, here's one, here's one, here's one, right? The obvious, clear ones that meet the criteria over and over again. The reason why you're not seeing the ribbons here is because I still have the daily template on with the weekly and the monthly ribbon, right? What you want to do, again, is go to apply template. They're in alphabetical order, so go to the bottom here and put on the 5-minute template. At that point, you're going to see the 15-minute and the 30-minute, right? So see how these two, both green. So you have green, green, green. That's what you want to see, right? If we go back to these three, right? Green, green, green. We know we have the edge. That's all that matters. That's what you're looking for. Okay? So yeah, that's the Dow on a 5-minute. And you can look at individual stocks on it. You can look for futures, crypto, whatever. Obviously, when you're trading on a lower time frame, you need volume, right? So, for example, if we were to bring up Bitcoin on a 5-minute, you're probably not going to see a very good looking chart just because, and you can see the price action. I mean, here it's not bad actually, but typically you see how the bars look a little funny. It's because of the lack of volume. See this, right? Typically, you can't trade something with lighter volume on a 5-minute, but on a regular chart, here's Bitcoin, for example, right? So whether you trade it or not, it's not the point. What I'm trying to show you is that same criteria where you have slope, the bar's near the 20, there's nothing overhead, you have the 2 higher time frames confirming it, it's moving up. And that's what we want to see. Here's a perfect example. We don't have slope. We're not above a prior high, right? So we can't enter here. But what happens? It retests successfully here. Gives us a re-entry. We enter there. If you're not quite sure, you wait. You enter here. Either way, you had real nice upside. Higher time frames are aligned. That's all you need, over and over and over again. Trading can be boring, should be boring, because once you find that one thing that works, that edge, your job is to just repeat it over and over again and resist the temptation of trying to outguess the market. Okay? Everybody has opinions. And that's where, when you're watching, for example, CNBC, they bring all these analysts on and they're all giving you their opinions on where the market is going and so on. Let me save you a lot of time. Nobody knows what tomorrow's going to bring. Nobody. Not you, not me, not anyone on CNBC, not anyone at Goldman Sachs or anywhere else. We don't know what tomorrow is going to bring. So what we do is react to what's actually happening here. What you're seeing on the chart is not opinions. They're actual trades. It's what people are doing with their money, actually doing. They're putting their money to work here. So when you see these bars going higher and higher, it's because those are actual buys, right? People are putting their money to work, not opinions. Opinions don't matter at all. It's reacting to what's actually happening here. These rules, the algorithm behind victory, is keeping you on the right side of the market and giving you that edge to trade with day in and day out. That's what you want. Now, do you want to trade in this mess? No, you do not. Again, can you connect the highs, connect the lows? Yes. If Bitcoin breaks these lows, it's likely going lower from here. If it comes back, takes out the highs, it's likely going higher. But you know what? We can guess either way. We can have an opinion, or we can just wait and make sure that the criteria that we know gives us an edge lines up, and then we take that next setup, right? Let me show you a couple of other parts to this. If you go to the top left of your chart, click on View and click on Expert Commentary. It's going to bring up this box, and it's also going to put an arrow or a little triangle here above the most recent bar. It always defaults to the main bar here, the most recent bar. Now, this is going to tell you a bit about myself and trade wins and victory, etc. But what you want to really focus on is the middle portion here, where the system is telling you what's actually happening here. So we've been in this short trade here. I mean, we haven't taken this trade because the higher time frames aren't aligned. But since the bars have been red, it's marked as a short trade. And you'll notice that the text is always in the same color as the bars. So telling you about a short position here. And it's also giving you a level that you could use as a stop loss. So let's go back to here. You can by clicking above any bar, you can move that triangle over. Okay. Let me go back here. Or you can use the arrows up here to move it along. So if we go back here to this arrow, you'll notice, and again, green text for loss signal. It says the victory system is currently signaling a high probability long reentry opportunity. Now, if I move it forward one bar, right? Now it's telling us that yes, it's definitely in a long, but we have a level to use as a stop loss. And if I, again, move ahead, that level changes, it updates. So this is essentially a trailing stop for you. And what it's meant for are for those of you who cannot sit in front of your screen all day and follow this. You may have a family, a full-time job, etc. So this helps you set your stop, leave your order in, and go to work. And then come back. And if it's moved up, put the triangle above that day's bar, and now adjust your stop to that next level, etc. So it's going to hold your hand throughout the trade there, and it'll tell you when to exit and so on, when to adjust. So it's really, really handy. And the other great feature is if you go to the top left to the power console here, the letter P here, bring up this box. on the left side, go down to the third tab where it says Explore. This is the scanner. This is what is going to save you a ton of time and help you find trade opportunities. Okay. Now, up here in the top box here, top left, are all different strategies that are programmed in here. Of course, it's alphabetized, so mine are near the bottom here. And you'll notice that there's different ones. There's Vora Victory, there's Vora Victory Filtered, Vora Victory High Probability. Those are the types of signals. So Vora Victory are the regular long opportunities, long or short. The filtered, what we've done is added a feature where it's only going to scan for the ones that have slope on that 20. Okay, so it's going to save you time looking at anything else. It's just going to give you the ones with slope, and the high probability ones are the ones with that added layer of confirmation in version 2.0. So you can check off one or several of these, whatever you want to scan for. If you don't want to always scroll down and look for them and click them off, you right click on these and you click add to favorite. What that'll do is add it to this tab here. So instead of clicking on all explorations, click on favorites, and here they are. These are the ones that I use. So you can click on one or two, whatever, or three, whatever you like, and then come down here and select the mark that you want to scan for. So I'm going to look at North America here, and I'm going to go to US optionable stocks. That's what I like to look for. So almost 5,700 symbols. That's what I scan every night. And I go here and you pick your time frame. I prefer daily because I'm doing presentations like this and coaching and so on. I'm not sitting in front of the screen all day. I prefer the daily. This will confirm what it is you're scanning for. And then you come here and you click Start Exploration. When you do that, it's going to bring up this box. It's going to show you how many charts you selected, how many it's already reviewed. So you can see in just a few seconds, it's already gone through, almost 200 charts here, now over 200 out of those 5,700. And I have a lot running on my machine right now. Normally, you see this going a lot quicker. In just a few minutes, you've gone through 5,700 charts. And then down here, it's going to tell you how many signals it found and how many it rejected, right? And then the ones with the matches, you'll have a score on. Let me stop this here. I'm not going to let it run here. And let's just see if, yeah. So this is what you'll see. So the few that you'll find, you're going to have long and short opportunities. If there's a number 1 in the long column, it means it's a long. If there's a 0, you'll see the 1 on the short column. It means it's a short opportunity. Okay, so you can click on these column headings and sort. So if all I want to see are longs, I can just click on that, and it'll ignore the 0. It'll just give me all the ones here. You can sort by closing price. So if there's a particular price range you prefer, you can do that. You can do them alphabetically, whatever you want, or by slope. This is the slope on the blue line. So the higher the number, the better. If it's a long trade, you want the filter set to higher than 5, but you want to sort them from highest to lowest. So for example, 20, 17, 13, 8, and then we get into the negatives, which are the shorts. The higher the number, the negative number, the higher the degree of slope in the downward direction, right? And so from here, you can copy and paste these, you can print this, or you can just highlight it, right? And click on this button here, the chart, and it'll show you the chart on the right-hand side, okay? Now, here's a gap, right, today on this stock. So is this a trade we'd want to take? Clearly not. We're very far from the 20. We're not going to play this, right? So then we can go look at another one, say this one, a $35 stock, and go here and have a look, right? And here, now we have a signal that is, we have slope on that 20. The bar is close by. It's near the high of the bar so far. If we bring this down, is there a lot of activity over it? Yeah, there's some activity. So we've got to compare this one to the others and see which ones we want to take. The idea here is to take one or two of the best setups for that day, no more than that. But again, we'll go through all that training in the training class. The one thing to remember is these signals here can change while that bar is still live. So if this bar were to close at 4 p.m. Eastern, since it's a daily bar, this will close. And if there's a signal, that it stays on for life. This is not repaint or anything like that. But during the day, during the fluctuation, while that bar is open, the signal may be there, may not. So you want to wait for that bar to close, whether it's a 5-minute, a weekly, monthly, whatever it is. That's what you want to wait. But it's that simple. So remember at the beginning, I showed you that top-down approach, that template that has the 4 main index charts, all the different sectors. You get a picture of what's happening in the market overall. Then you can break down with your scanner. You run through the list of stocks that you like. You filter them by slope. You come down here. You quickly review, compare one to the other. In a few minutes, you selected your trade opportunities, and you know exactly what you're doing from there. You enter your order. You bring up your expert commentary, and it helps you follow that trade along and remind you of what you need to adjust when, etc. It is very simple. Again, we will help you through it. You're not alone in the process. Jeff is going to explain how you can get a copy of this and what comes with it, which is a lot more than just the training class, but you get to join us on our pro membership service. That includes nightly videos from me highlighting what happened in the market that day, where I think we're going for the rest of the week, and I highlight several trade opportunities, confirming the types of trades that we want to see. That's the reason for it. It's not alerts, they're not recommendations, they are the trades that I'm looking at. So you get to look over my shoulder and follow along, and I show you exactly which ones that I prefer over the others. And like I said, we meet 3 times a week, Mondays, Wednesdays, and Fridays, live on Zoom. We open our cameras, we review charts, we talk about the different things happening in the market. It's very informative, and you get to ask any question you like while you're on that session. That is where you want to follow up, get your answers. We help each other. We have a very experienced group. It's fantastic. So I'm like 5 minutes over, really. So I'm going to pass this back to Jeff. And Jeff, just want to say again, thank you. Thank you and everyone else at MetaStock for having me on again. I really do appreciate this.
Definitely, for sure. Do you have time for one quick question?
Oh, absolutely. Go ahead.
Okay, cool. Creme Story Cafe wanted to know, do you have a rough idea of what percentage the high probability trades are for being winners?
That's an impossible question to answer, and I'll tell you why. I'm not trying to skirt the question. I'm just being very honest with you. It depends on the time frame that you're looking at. When you have a very strong trending market overall, obviously the percentage is going to be high, and this is why we use the ribbons along with it to make sure that we have different time frames aligned with those signals. But for example, if you look at the Dow right now, right? And I won't make this a lengthy answer, but just if you look at the Dow right now, here, we're in a channel. We've been going sideways, right? So the performance of those signals throughout that time, it's going to be different than throughout this time, for example, if you're trading those Dow components, right? But what we try to do is break it down to that individual chart that you're looking at and give you enough of an edge using the higher time frames, et cetera, to make sure that you're in the market at the right times. When you do back testing, you're not picking and choosing when you're in the market. You're looking at the full history. So that's going to skew your results. The edge that we have is being in the market when we should and out of the market when we shouldn't be in there. That's our edge. And that's what victory does for you. It pinpoints when you should be in and when you shouldn't. So again, we're not telling you to take every single signal. We want you to avoid the choppy ones and only take these ones. We can't run a back test strictly on that. So the results are skewed that way. But we call them high probability for a reason. They give you a greater edge and a higher accuracy rate. And so that's why we highlighted them that way. I hope that answers your question.
Great job. Oh, Sean says, hey, can I add the Donchian channel to find more accurate entry signals?
You know what? We don't believe it's necessary to add other indicators, but if you, are accustomed to using an indicator like the Donchian channels, of course, that's the great thing about MetaStock is they have hundreds of different indicators and other parts of this that you can use to improve what you're doing or to tailor it to your needs. Every trader has a different style, right? So, like I said, some, even if they're using Victory, using our strategy, some will use the take profits, others won't. Others will stick to only high probability signals, others will take all of them. It depends on yourself, but you can add other indicators. You can tailor it to your own needs all you want. I'm showing you how I would do it here myself.
All right. Very cool. Thank you, Vince.
Thank you again.
And I'm going to go ahead and kind of just talk a little bit about how to get it. Thank you again. Appreciate all the work over the years, for sure.
Thanks, sir.
All right. I'm going to go ahead and do this. Go ahead and do this. All right. Very cool. And of course, we are going to talk a little bit about Victory 2. As promised, we're going to tell you about how to get it, all of that kind of stuff. And then I'm going to recenter myself a little bit in the webcam. Okay, let me go ahead and do this. All right, very cool. I'm going to talk a little bit about the Vora Victory Method 2. It has been rated our best-selling MetaStock add-on. It's got detailed commentary, breakdowns, expert alerts. I love how Vince actually shows you how to do the scanning and how it works and how to kind of put it together. It does also have system testing in it. I remember when we initially created the version number 1, it was right, we released it right before COVID became a huge thing, but it was a system that Vince had designed to kind of work well with more volatile markets, which were what we got, right? And so it ended up being our best-selling add-on of 2020. We were talking a little bit about what we could do to add to kind of improve it, and I thought we came up with some really, really good ideas that kind of go along well with what he's actually kind of done. And what he likes to look at. So as part of the new system, you're going to get the high probability buy setups, the take profit notifications or the take profit suggestions, the multiple time frame views. So if you have a daily, a 5-minute, a 30-minute, you'll have that big dashboard that kind of lists out all of the different markets and how they look on the daily, the weekly, the monthly. You can use that on any time frame. So you can change just the increment. If you're more looking at 5 minutes, Crime Story Cafe, you want to see what that's doing on 5 minutes, you can just plug in 5 minutes and it'll update and show you everything that's going on real time. So we did get some initial feedback in terms of the actual add-on, and we actually made some changes to it. We added a couple more intervals, so there's in addition to the 5 and the 30. I thought I had the proper PowerPoint to show this, but we also added it hourly and another time frame. I can't remember exactly. It was 5:30 hourly and I believe a 2-hour chart, but I could be wrong. So there's 2 different dashboards that you can use with that. And we added some dashboard markets for if you're in India and you want to see the Indian dashboard, you can. If you're in Australia, you want to see a dashboard just like this, but around Australian stocks, you can. Those are some that are available. We also redid a lot of the coloring. So you'll notice with Vince, it's got either green or red or a neutral state instead of just being blank here. That's something that's part of the new update. If you bought version 2 and you haven't downloaded the update for it yet, go to metastock.com/mydownloads, grab the download because that was a free update. So as long as you own version 2 and you re-download it, you're going to have all the new functionality and the new features that we put into it. Okay. If you're new though, with the Victory 2, Victory's obviously been a very, very popular system. We added the ribbons, we added the multiple time frame layouts, we added the take profit suggestions. All of that stuff is brand new that we've added as part of this very, very popular methodology that's been part of that we've done. So Vince talked about how you can do scanning. You can scan for just the setups. You can do the filtered scans, which looks for slip to be, if you're doing a long position, at least 5 for a long position, or at least -5 for a short position. You can look for re-entry opportunities and the new high probability scans as well. This showed the expert advisor and kind of how it shows you what the slope is, what the calculation is, what the minimum and maximum that you're looking for is. I also like kind of all of the thought that Vince put into this. And these are complete experts that have complete scans and very, very popular add-ons as well. So those are going to be part of it. And Vince actually talked a lot about his Trading Winds membership service. This is around $97 a month, or about $1,100 a year. We're going to include it for free. And what's kind of interesting is I'm a member of the Trading Winds membership, I guess. I was trying to think of a good name for it. I'm a member of that. I really like to kind of see the kind of itemization that Vince comes through. And I've actually kind of signed up a lot of people here internally. So if somebody's kind of interested, including Greg and quite a few of the sales and support guys, but if people are interested in the markets, I think there's a lot of really good, valuable stuff for in here, including trade ideas, training sessions, on-demand technical analysis videos, option trade ideas, all of those kind of things that are just included. And so I think they're so valuable. I actually have signed up quite a few people here at the company. So we did also sit down. We recorded a boot camp with Vince. This came out just a couple weeks ago. It's actually probably, we launched in April. I think we did the recording in May, but it's available now. So as soon as you sign up for it, you'll get instant access to that boot camp. So all in all, it's a fairly huge package. You'll get the Vora Victory 2. You'll get Veracity. You'll get the winning momentum strategy, the Trading Winds Pro membership. All in all of that put together, if you just bought them separately, would be $56, $57. We're going to do it as a one-time cost of $997. And what's more is we are going to back that with a 30-day money-back guarantee. So not only are you going to get all those additional products, not only are you going to get the membership for a year, you're welcome to try this out if it's not something that's helpful for you, if it doesn't help you with what you're doing. It's a pretty low-risk opportunity. You can try it out. If you don't like it, you get a refund. So that comes with the bootcamp class. We had some questions on if it works with other software. If you don't have MetaStock, I'll just say this. MetaStock's been rated the #1 software in this price category 31 years in a row. We'll even throw in a free trial of MetaStock Real-Time or MetaStock DC as part of this. So a couple of different ways you can do this. You can go to metastock.com/summit promo. You can give us a call, 800-882-3040. And you can go to metastock.com/sales chat. So, I just looked at the time. All right. Want to say thank you real quick to Stocks and Commodities Magazine for sponsoring the event today. We're going to move straight on to our next presenter. We'll talk a little bit more about MetaStock all day long. So it's all good. Make sure you give that add-on a try. There's a reason people really, really like it. The service, the support, all of the stuff that comes with it is great. So our next guest is Brian Latta and Jake Bernstein. Brian is a new partner of MetaStock, but only because he's developed some really, really cool stuff around Jake's work. And I've had the pleasure of working with him over the last, I think it's been a few years at least. Jake and I have known each other for at least a decade. I remember I lived up in Northern California, and we'd go and do a training group up in San Jose at the time. And it was a lot of fun. And so Jake's a huge friend of MetaStock, somebody that's written, just dozens and dozens of books on the topic of trading. Brian's super smart. He's developed a really cool expansion contraction index that he's going to talk about. Let's go ahead and get everybody started. How you guys doing?
Doing good, Jeff. How are you?
I'm doing great. How are you? Oh, you just said good. Brian, I can see that you're on here too. How are you?
I'm doing very well, thanks, Jeff.
All right, cool. let me go ahead. I think we usually do Brian's screen, right?
Correct.
Okay, here it comes. All right, and I know we're starting you a little bit late. My apologies. I don't really want to get feel rushed. We can catch up a little bit later in the day if we need to, when I talk. So I can see your screen though, and I can hear both of you. So I'm gonna get out of the way.
So before you do that, how much time do we have in total, Jeff?
I try and kind of wrap it up right at the top of the hour if you can.
Okay, we can do that.
Okay, cool.
So I'm going to start off, and I want to thank MetaStock for inviting us. And thank you for being a good friend and providing traders with fabulous trading tools for many years. I want to thank Brian for doing this with me, doing this together. Brian's a super guy, super nice person to do business with. Also a great trading coach, and pardon the voice, we're having the worst allergy season ever here in California. So Brian is going to do most of the talking today. I'll jump in when I can. Just by way of introduction, as you know, there is more and more trading software out there every day. I've been trading for now 50 plus years. It's half a century. And every time something new comes out, you have new people coming into the market who think they can make money. The fact of the matter is that most people who trade, especially day traders, will lose money most of the time. It's a fact. It's not an opinion. So when I get to be my age, which is in the late 70s, I want to do things efficiently because the most valuable thing you can have is time. Time is most essential to continue with trading and with life. So I want to do the most things efficiently, least amount of effort with the greatest return. As many of you may know, I wrote 5 of the best-selling books on day trading for McGraw-Hill. And the thing that's so interesting about it is, even though those books were written in the late 90s and early 2000s, and they are basically out of print, they continue to sell. Why? Because people love to day trade. They love the idea that they make a trade, they get feedback right away, and they don't have to pay anything overnight. The money comes back to them in 3 days in stocks and right away in futures. So day trading has been touted as the place to be and the thing to do. Take it from me, the guy who wrote the books on day trading is very difficult because generally speaking, most people will lose money or not make very much money. And the only way to make money in day trading is to trade a small position for a large move, which most people can't do, or to trade a large position for a small move, which most people can't do because they don't have the money and they don't have the emotional makeup to hold positions for the big move. So what Brian and I worked on together is, how can we keep it simple? How can we keep it red light, green light? How can we use an indicator that people will not have to pay too much attention to during the day? Something that can be used for day trading if you want to, but mostly for position trading short term, and of course for intermediate term trading using weekly charts. With the great programming skills and coding skills of MetaStock, they've been able to take the work that Brian did with the ideas that I provided and turn them into the expansion contraction indicator, which is a fabulous, fabulous tool. In fact, so much so that I'm abandoning a lot of tools that I used to use in favor of expansion contraction, which, as I said, is very simple and most of all, not subject to interpretation, by which I mean 100 people looking at the same chart with the same information about trading will reach the same conclusion all the time. That's very important to me because I don't like interpretation. It's a waste of time. So without further ado, and again, thank you for everything in MetaStock here. You guys are great. I'm going to turn it over to Brian and let him do the intro, and I'll jump in from time to time.
Thank you for that, Jake. As you can see, I do have Jake's background up quite a bit more extensive as he's been in this market quite a bit longer than I have. I will at least pop up my own introduction. I will have to say the most fascinating part that I've had about learning how to trade was developing systems. That was actually about 2012. I decided I really needed to do computerized program trading systems. And my first batch of doing that did well to about 2014, and I ran into an out of sample result. which put me back to the drawing board a little bit and actually got me on Jake's radar. In 2014, I became a Jake's trading client and bought some of his proprietary indicator code at that time and learned about the coding. Along with all of that encoding systems, of which I've done 5 systems separately. As you can see, I've also been coaching since 2002, as I really like helping people learn how to get this, as it is a lot harder than it looks. As you can see, there's the information about expansioncontraction.com. It is available here in MetaStock, and they've done a great job with it here, but we've also programmed it for free in other major chart services. I'm going to post up the rules on here just so you can see that we do have strong buy and sell type setups. By that, I'm just going to label out top one. I was going to read through this pretty quickly. I don't want to spend a whole lot of time on the rules, but we have entry. It's on the charts from MetaStock. We have the stop pricing, same thing on the expert advisor and on MetaStock charts.
Brian, would it be possible to show a chart first so they get a visual and then come back to this?
Sure. So I popped up a chart as I was going to get here and show some of the long-term strength and information. But as you can see on here, we will have buy setups. It's programmed with a B when both short-term expansion contraction turns bullish and the cloud in the background, long-term expansion contraction turns bullish. So we had a breakout here with a buy trigger. There'll be profit targets on here, which I will show also on earlier charts. So again, on the rules, I did want to post those. They are in the recording, although I did post those pretty quick. Anybody wanting the rules, just let Jake or I know. We'll post the emails to connect with us at the end. And it's, I'm going to just say free, because I don't think Jake and I are in a position where we need to spend a lot of time basically extracting more from you. If you've got questions, email. We're more than glad within 24 to 48 hours to answer your questions and help out the best we can within reason. So the indicator at the bottom, as I said, is expansion contraction. There are 2 lines on here. The teal upper band is Jake's 10-period moving average of the high, and the lower orange band is the 8-period simple moving average of the low. So we have Jake's moving average channel that moves up and down and up and down over time. And the basic concept for expansion contraction at the bottom was to measure just how quickly price either drops through the channel and extends lower, or way over to the left, how quickly price rises up through the channel on that instance. And then that helps us with the momentum, excuse me, and the setups and some profit targets. And that does on this chart in here help us at least identify when to get in, where to get out at a gain or a loss in advance. And that will also be in the expert advisor. You shall also see on here there are some small lighter colored B's along with the darker, more bold B on here. We've got stop and reverse buy setups, the JBXC buy setup. And then the continuation trades. On this, the continuation trade says we've been in an uptrend. Price made a correction. We were weak up during that time when the bars were color-coded light green, and we were short-term bearish in here. We'll get continuation trades, so we'll have an initial entry, an add-on trade, potential add-on trade, and all of these are potential add-on trades. The rules are basically don't add unless you're break even, but we do want to have a stop and reverse, take every trade, and add-on trades with specific rules on there. So as I'd mentioned before, we've got long-term trend, which is the cone or the cloud, green shaded large area in the background with some horizontal lines moving across. And although those are standard deviation calculations, the simple explanation is give us what the range is long-term. If the green or red cloud in the background is less than its line here, which is 1 standard deviation, it's just normal or weak. up or down. If it's above that solid gray line on here, and by it I mean the green cloud in the background, it's strong up on that. So we do have long-term trend strength and short-term swings. As you can see, when price does make a long-term move up, expansion, contraction, long-term, short-term are both bullish. Right here towards the end of November, the red line does expand above the green line below, and that got us a weak up movement. Again, there's a subtle shading here between the bars, but again, when we are weak down, that's short-term bearish. On that one, we would consider that the trend is still up and it's weak. We're making some kind of correction back towards the lower band. The moving average, simple moving average of the 8 is Jake's swing trade, and we have also some alternative buys in there. In the rules earlier, I did post Jake's swing trades and my preferred swing trades in there. So we want to get in, we want to add on, we want to build a position over time. Go ahead, Jake.
Oh, thank you, Brian. So, you know, in my old age, I've learned in the last 25 years that for me, simple is best. There are a number of ways to use indicators. The good news about trading programs is they contain many indicators. The bad news is that most of those indicators don't come with a manual that explains how to use them or what they mean. Fortunately, with the expert advisor, we're able to do that here on MetaStock. But my application of the expansion contraction is very easy. For me, it's a question of red to green. So when we've been in the red, I know that I should be short. Where would I want to be short from? The top of the channel, which is the 10-period simple moving average of the high. When it turns from red to green, I reverse my position and take the long side of the trade. Now, if you want to be more detailed with it, you can work with the inner lines, which Brian has described. Those two inner lines, the red and the green lines within the cone, signal shorter term changes in the trend within the existing uptrend or within the existing downtrend. The beauty for me is that I can do this in any time frame that I want. So if I come in on a Wednesday, for example, and say, today I will day trade, no problem. I will take this indicator, expansion, contraction, and use it in the intraday time frame, 5 minute, 10 minutes, 15 minutes, whatever you want. But remember what I said. The chances are, no offense intended, that most people who trade intraday lose money. There's some very solid academic statistics to support the fact that between 70 and 90% of day traders lose money, not necessarily because they're using bad methods, but because they don't have the money or the psychology. So fortunately, when you have an objective and clear tool with delineated rules, just as Brian described earlier, it's not a question of making a judgment because it's been made for you and it's right there in black and white on your seat on the screen with the expert advisor. Now I'll shut up for a while, Brian. It's back to you.
Oh, no problem, Jake. Please jump in at any time on this. So again, like we're just marking here, we have long-term trends. Outmark that with the green trend line, expansion, contractions, green cloud or cone in the background, green the entire time until it reverses on here. And as you can see, we may have some weak setups in here as this price is inside Jake's moving average channel. And also a bit with the Williams accumulation, still saying that market's bullish. We have a weak setup in terms of the location of pricing and the close of the bar. We'd like to see strong selling on the sell setup to mark that one. So literally on here, we do have a secondary setup, strong selling, breaking below the range. Short term, long term do go bearish. It gives us an opportunity to get into the market and have a profit objective, which is 2 times the moving average channel width, which is part of Jake's moving average channel strategy, which, like I said, we have no problem including the rules on here for you. And also then you're going to see some diamonds on this one exceeds the average range of price extreme on a close or on an intraday low basis. In this case, I should say, that would get a profit target on here and at least make sure if price drops, it's a price extreme to at least take some profit, as well as the original first or second target rules on there. And of course, we'll have some secondary add-on trades if they were stronger and pricing outside of the range. ultimately we get the stop and reverse and market goes higher. So I'm just going to pop through some of these explanations of the indicator pretty quickly, because some of you may be on here that already recognize it or use it and want more detail, or some may not understand what it is yet. But range expansion and range contraction, that was all really based on Jake's moving average channel, where it contracted in this point. Very narrow, the 10 period of the high and the 8 period of the low contracted very close. It's suggesting that price would come back to a support. Contraction on that was a combination that Jake had explained. And also when the channel got wider, was expanding. As the channel expanded, it was a sign of volatility and the market may have a potential to continue higher in this case. So Jake's comments on expanding moving average channel and contracting moving average channel got me to work on coding that graphically so that we could have a potential for a stop and reverse program and add-on trades off that. Now, the support and resistance levels on here, when the cloud or the cone of the background starts to contract, that's just going to pop up a resistance level on here from the contracting trend on that. So the support and resistance levels on the cloud or the cone are during periods of contraction. So when it expands and then starts to contract, we'll have some resistance on here. And the expert advisor does really well also at identifying support and resistance price levels in the EA itself. So I did want to pop over and get the commentary window up for the expert advisor on that one. And the marker is on the very last bar here. So when you're reading what this is going through on here, whether the trend is up or down, strong or weak, long-term, short-term swings in long-term trends are basically what expansion contraction does best. And the periods from when we go to trending up or down to a stop and reverse on average have been some 24 to 30 periods on a daily chart. That's nice because that's really going for a month or two on that. And of course, on weekly charts, same type of duration. Yes, there are going to be shorter duration trends, but we're just talking about on average. And even in experience, I have seen over 100-day swings on a daily chart, and we'll show some more examples. But the continuation sell was a downtrending market and a sell setup, downtrending marked by the red cloud or cone of expansion contraction. And you have a comment, Jake?
No.
Okay. So the continuation sell, I did mark the stop loss pricing, and that is based on the expert advisor. We'll do some practical examples and see it exactly. But basically, I just wanted to mark out the JBXC buy is the buy trigger here. Long-term, short-term, go bullish. Short-term expanded up here strongly. It's basically a 2 standard deviation move or strong up outside of normal. And that would trigger a buy at the market, evidenced by the blue arrow. Stop loss, same thing, programmed out in the EA for you in advance. Profit targets, as I said, are the diamonds. As price exceeds, that's actually a 3 ATR value on the Keltner channel with a 20 SMA settings on there. So when price hits a price extreme, it does make sense to take some profit, not exit on that. So continuation buys. In the uptrend, price pulls back, continues higher, short-term, long-term, go bullish again. And that's going to trigger another buy setup, a continuation buy in this case on that pattern. And I just marked out the arrows and the targets as that one hit up. And here's a sell example with a red S above the bars on that, where both short-term expansion and contraction turn bearish. And as you can see, the entry price marked out by the blue arrow, stop loss, profit target 1, profit target 2 getting hit here as it hits an extreme, which would put this at break even. And then eventually we get the stop and reverse and a buy here. So
Brian,
on this one, sure, go ahead, Jake.
Yeah, those notations that you referred to were put in there by the expert advisor, correct?
On the chart, not. Over here in the expert advisor, yes. Over here, I did just mark these so that you can see what the arrows were marking.
Got it.
So the take profits and the JBXC buy labels and the continuation buy aren't part of the expert advisor, but you will see the BS on the chart. As I do like to joke about having BS on my chart, buy setups and sell setups with B's and S's at a minimum, just make it 100% clear and objective. So we want clearly defined and objective rules to get in and out at a gain or a loss in advance. And that's what we've done on here. So on our last presentation here, this is the cues on a daily chart in the bottom right. So we did mark out some previous trades on here. And so I'm going to go through these pretty quick because we did this in the last webinar where the trades, as I'm showing, based on a $100,000 account with 2% risk, have some winners, have a loser in here on that, and have some other winners. We're just taking what's next on those trades. The reason I wanted to get through these pretty quick as we go through this at the end of, actually the beginning of May was when we last did that.
And none of those trades that you just showed required interpretation. They were all strictly
Zero
objective.
interpretation, exactly. The buy setup was on the chart, and that's why I wanted to get here to the analysis of expansion contraction indicators expert advisor. You'll see the long-term signals. Again, there's the triangle. I'll just go just above it on the far right of the chart at the beginning of April. Pop this one up so we can see exactly what happened and that it was here in the expert advisor showing you where resistance is and support, major, minor, whether or not we were overbought or oversold, whether or not there was any divergence. The EA that MetaStock has put together with us has just done a fantastic job at identifying more than one type of setup. So we have the stop and reverse on buy and or sell setups. We have the continuation trades in trends, as well as divergence setups on there to help identify trends. So in order to just kind of continue ahead a little bit on here to see the buy setup, this first trade was actually one of Jake's swing trades, and a defined uptrend. Price came back to the 8-period moving average of the low the previous day. In this case, it gapped a bit below on the open. I just still showed the blue marker at the 8 SMA of the low on that. So gap lower on the next day, managed to pop up and hit the 10-period simple moving average of the high, which is the profit target for Jake's swing trade. Hits a profit target, goes to break even. A small gain, and again, we're just following through after the last setups as a part of, say, take all the setups, in this case, system, which is a little bit unique in itself. Did program out a sell setup here. It does close inside the moving average channel. In the instance of these trades, we'd like to see it close strongly above on the buy or sell setups. And so I do have a marker here for this one as a weak setup. We have Williams accumulation distribution and its 57 moving average are still saying bullish. And I've dropped down to the bottom here to kind of label out when both the red or green cloud long term as well as the red or green line short term are inside the small gray dashed lines, which is basically one standard deviation short term on that one. We're just not trending. That basically price just squeezes in here to less than a half a standard deviation long term or not normally trending, and also less than a standard deviation short term, which is also short term consolidating. Go ahead, Jim.
Yeah, thank you. Sorry for interrupting.
No problem.
Just as important as what we did do, just as important as the purely objective decision-making process is what we didn't do. We didn't talk about the bigger picture trend. We didn't talk about the 50 and the 200-day moving averages. We didn't talk about the fundamental condition of the market. We didn't talk about seasonality. We stuck strictly to the indicators exactly by the rules, and that's the most important thing. So for me, being a simple trader, which is what I've come to after all these years of trading, the simpler the better for me. My trade here is for the middle of the chart where the cone turns from red to green for 2 consecutive green bars where the B is. That's my buy signal. And from that point forward, if I want to buy the bottom of the channel, the red line, that's my support buy if I want to. But the bottom line, no puns intended, is I keep it incredibly simple. Now, certainly I find that as people make things more complicated, they tend to work less because they have too many decisions to make. So for me, it's the simplicity that's best of all. And back to you, Brian.
Absolutely right, Jake. After 20 plus years of learning how to trade, as well as coaching and programming, you've got to keep it simple. You've got to keep it specific. In this particular case, black and or white. We need rules to get in, rules to get out of loss, rules for taking profit in advance, back tested preferably. I know we're going to hear some questions likely on like results. So from the daily charts, back testing on liquid trending stocks, say Apple and Amazon and NVIDIA, Microsoft, for example, on the tech or side on that. The results have been in the 57 win rate up to 65% win rate on the setups on the daily charts, and similar win to loss ratios on the weekly charts, as ideally you could trade this long-term, weekly, or daily. And it is tradable intraday. Short term, you could go to a 1 minute chart. There are no settings to change. It's still a stop and reverse. It's still an add to a winning trade or add-on trades. And so there are no optimizations on this. It just is what it is for each time frame. So I did pop here because the sell basically didn't trade lower and fill on a sell stop limit order 0.5% below the setup day low in that instance, following the rules. Next day did trigger a buy, and as you can see, 2 days later, reversed, hit the stop loss level. So I'm going to post wins and losses. This is not perfect, and it doesn't have all winning trades. So in those instances, we just want to post reality. And we'll have to say, based on all the things I've ever done in life, this is reality, and I really love being able to help people with reality, since data and system tests are what they are. Yes, they are not infallible. System tests are the basic or basis, say, of us having some proof of the past to help us with our confidence in the future, to just take the trade, follow the rules, and take whatever you get. So I'm just going to pop on here. We did have a setup on here at the upper band. Again, one of Jake's swing trades to take profit at the lower band. That trade made some money. A little bit on this because it just dipped and popped. We do have a buy setup on expansion contraction on the 6th of April that's popped up. So I'll just show the targets and add on. And where we're sitting right now, both trades still have open positions, floating a 9.7% gain on one and 3.56 at least on the other. So I am going to post up here where I'm showing the floating. Yes, it's 0.89 is all it is on a 2% risk in the bank. But the third position, which continues to go till there's a reversal, since we're a stop and reverse type system, is floating a 3.8% gain on the stock. And then also the second position here, or the sixth trade, that floating 16 plus points over 12 more days, is showing that it would be floating another 1.34. So I did just want to go from where we were on the previous May event and just walk it forward. Take every trade, and it's whatever you get. Follow the rules on that. So on this, I've also on the cues on the top left, bottom right, I've dropped it down to a weekly chart. And once again, we've had a bear market that did turn bull. Expansion contraction went from the red cloud or cone in the background, short-term, long-term bullish, a programmed buy setup, and it did pop on the stop loss and the entry price and the take profit that would show up in the expert advisor. And basically what's happened here is still floating 42.31% gain on the stock position, and this is 65 weeks. So we can get some long ones. So we did pop back up with the EA showing with the triangle marker here. It is analyzing the 3rd of February back on here. It's set up back here in 3rd of February. Again, bottom left, this is a weekly chart. And as you can see on here, I just pulled the long one. This is 73 periods. Since a stop and reverse buy, we've had no sell on that, and do like the fact that the expert advisor runs through here and will give you all of the supporting information on how to trade that one here. So still on the weekly chart of the Qs, I did want to post out that February trade and show the results here. And then there is a swing trade in here. It came back to the 20 SMA, which is one of my swing trade examples, just to show that with the entry, the stop loss pricing, and the take profit. That's all actually in the expert advisor for you to run through the calculations on. And again, 20.76% still floating 33 weeks. And this is back at the beginning of May. On here, we did a session back on the beginning of May, and I just wanted to walk that one forward here. The marker for this EA, once again, is back on the 3rd to show what that would have done. And we're still floating 73 periods. It's gone from 65 weeks to 73 weeks now, floating a large gain on the first trade. And secondary, they're still floating a 40-week gain on the second trade.
Now let me add
Some comments, Jake?
Now let me add something here. Do note that this is an unusually good trade. The methodology is very forgiving, by which I mean it will not jack you back and forth, long and short, long and short, long and short. But what we're seeing here is extraordinarily good performance because of the fact that the trend has been in existence for such a long time. So in practice, it won't be this beautiful. It will still be very attractive, very forgiving, by which I mean it gives you opportunities to get in, even after you've missed the start of a move, specifically opportunities to buy at support, as shown in the middle of the chart where we have the buy with the red arrow. So again, it doesn't matter what time frame you use. The most important thing is to catch the big moves, which this will do repeatedly. The real issue is, do you have the discipline to use it? And the way to get the discipline is to look at the history, pick out a single market or 10 specific stocks that you want, and follow those through for a long period of time. So you'll see that the big money is made in the big move. Unfortunately, most people don't want to do that. They want to run a scan every day and say, these are the new signals. So they may take a trade that won't work. Then they'll forget about it in that particular stock. Then 2 years later, they'll come back and look at that stock and say, isn't that interesting? It started to work right after I took a loss. Why does that always happen to me? Well, it doesn't happen to you if you're consistent. So pick your 10 stocks that are within your price range, within your tolerance in terms of volatility, and trade those consistently. That's the best way to do it as far as I'm concerned. And back to you, Brian.
Yeah, thanks, Jake, for that. And I'd agree completely. You know, you have the setup, as you mentioned, which is a long-term, short-term expansion, contraction, buy trigger, and which is the setup. Of course, the trigger to get in, everything, Williams accumulation bullish, expansion, contraction bullish, the EA pops up, the buy trigger. And what we need to do is follow the rules. So if you have a setup that triggers a trade, if you have all the rules predetermined, then all you need to do is take the trade, follow the rules, manage whatever you get. And I tell you, ideally, if you've got the discipline to stay with some of these, since it is somewhat red light, green light, if you follow the rules, you should catch some big trades on here. So did want to at least run through some of the expert advisor benefits. As we said, it does follow Jake's setup trigger follow through method. We've got clear buy or sell setups on that. And the rules that we mentioned in the earlier slides. If I posted or went through those pretty quick and somebody wants to see those, just let me know. I'll be more than glad to send those. But as I said, rules of when to get in, rules of when to get out of loss, rules for when to take a profit. I like to add in here rules of when to add a position, because we're going to get long-term trends. We need to be aggressive, and those, I can say conservative with risk, but aggressive with strategy. If you can add to a strong trend over time, rather than getting a single position in there, as we had seen on here, single position and you're still in, that's it. Or you've got multiple positions in here and adding to the winning trade. There was even after break even a third trade here I didn't quite post, but I do want to be really adamant that if you can build positions in the markets that you're trading, you'll have say a better return all on the same risk from that one. And of course, just looking at the bottom one, MetaStock has done a really good job at allowing us to get in not only through the expert advisor of what to do and when to do it. They also have the power console that runs through here, and you can scan for Jake's bearish divergence or bullish divergence on expansion contraction, the buy or sell setups, bearish trend or bullish trend, and even breakouts. So at least with the Power Console and the availability of doing system tests here in MetaStock on here, again, just popped up the example here that they posted. And as you can see, it's fairly stable. It's got some markets that it's won quite a bit larger, say, than the worst losses. And you can see the delineation here of bullish to bearish. So just on the S&P 500 run over time, it did have a tendency to have more wins, fewer losses, bigger winners, smaller losers. And those are some of the characteristics that we want to see out of these systems. So I know I went through that pretty quick. But again, if you have questions, we've got some time to answer some questions. I'm sure Jake and or I would be more than glad to help if they pop up in the question box, or if Jeff, if you've got some comments you want to jump in here on also on the expert advisor, that's up to you.
Are we able
Tons
to
of questions.
are we able to go to any live charts?
Yeah, we can pull up live charts.
Let's do that for a few minutes.
Okay, absolutely. So, I'm actually totally prepared to do that. I can actually kind of take over right now, Brian, if you want.
Great.
Okay, let me do that. Let me make me the presenter. Okay, I'll show my screen here. Yeah, one of the questions we had was from Mustafa. He actually wanted to look at the TASI, which is the Saudi Arabian index, which is why I've got it loaded here. So, any thoughts on this one, Brian and Jake, in terms of this is the TASI main index?
Go ahead, Brian.
Yeah, well, my comment would be looking at March 14th, 15th, 16th in there. We have a clear sell setup, the last sell setup, and we've been bearish ever since. So again, the cloud or cone in the background's gone red, short-term, long-term bearish on that one. And so that means we've been bearish in here ever since. And we've had some opportunities to take the add-on sells or sell at the blue simple moving average 10 period of the high in a defined downtrend. We're a seller at resistance or on the add-on trade. So this is still bearish. Technically, it's had a sell set up on the last bar, which that should be today. I believe you're live. And we're targeting the lower line on it. We're not that set up, but we would have hit a setup at the blue line. The 10 SMA of the high is Jake's swing trade. And looking for the 8 SMA of the low for tomorrow or the next day.
What I would point out about this chart is very simple. There are two big trades on this chart. The buy trade on the left, the sell trade on the right, with a little few whipsaws in between. So we make the big money on the up, the big money on the down, and with some of those little whipsaws in the middle of the chart, we give some of it back, which is the absolute way that markets work. It's never going to be perfect, but if you're getting the big moves, you've got a good methodology.
The question Mustafa really had quite a bit about is, do you recommend this on a daily? Will it work intraday? And I'll stop right there. There's follow-ups to that question too.
If you're a
So
day,
in other words, can I put this on a 60-minute chart, or is daily what we would recommend?
depending on trading volume, I would prefer the 15. That's 15-minute chart. If you're a trader, you're using the daily chart. If you're an investor, you use the weekly chart.
Cool. Okay.
Yeah.
Right.
Yeah,
High volume is pretty critical, if that makes sense. That's why I was saying very liquid, strong trending, high volume. I know I scanned for 5 million shares, average 20-day volume for the markets. This I've not traded, so I'm not familiar with it day to day over decades. So I don't know if I'd make a recommendation, but if you did put it down intraday, the expansion contraction setups are identical as they are at the end of the day. There'll be buy and or sell setups that are stop and reverse, and there'll be add-on trades.
We need to know how many shares are being traded intraday before we can make a definitive statement about what time frame.
Okay.
If you wanted to put a 15-minute chart, that might help answer his question.
We can definitely push this into a 15, and I can put volume on here too.
That's cool.
Looking at a 15, and I'll just grab volume. Now this will give us volume, obviously, for every 15-minute interval.
Why don't we expand to take a look at the last few days? There we go. So again, you can see how stable the indicator is. Once it turned bullish on the left, it stayed bullish for a long time and did catch most of this move. Judging by some of the small range for these bars, I would say the trading volume is not that big. Can we look at it in terms of shares?
Okay, Mustafa says this is very clear. He appreciates your answering him. When we start to talk about long-term and short-term, can you give us an idea of how many bars you mean when you say long-term? Because that can mean different things to different people.
Yeah, for me, long-term is measured on the weekly charts, at least 15 to 20 weeks.
Okay.
Short-term is the daily chart, at least 10 to 15 days. And then, of course, there's intraday, which is a whole other subject.
Neil wants to know who he needs to email to get the rules Brian mentioned.
That was on the last screen, though, but it's Brian at thebookontrading.com. And I can put that, if I'm okay at chatting and adding in there, I'll just put that in there. Is that okay?
That's fine. I actually added it, but you're welcome to add it as well.
Okay.
Greg will add it on YouTube because anything that has, it looks like an email address or a website, you have to be logged in as an admin to do. So we'll go ahead and get it on YouTube though. Let's see. Brad wants to know, another great question. When you see a B or an S, do you wait till the close of the bar to take action? Or can it repaint is I think what he's asking. So if you get a B on a chart, are you going to wait until the end of that bar?
Yeah, close only.
Okay.
Yeah.
In other words, a market on close on a strong setup. Get into the end of the day, end of the 15-minute.
Yeah, you need to wait for the bar to close.
Cool. Greg wants to know, why would JBXC indicate buy-sell recommendations if in the lower chart it's not showing a trending condition? Let me try and restate that a little bit because I think when I read it, it got a little bit confusing to me. If we're not showing a long-term trend, is there a reason we might see a buy signal anyway?
Well, that's the setup condition. We can have a buy or a sell setup and we're not trending. That's for the individual to say, I'm going to wait for a strong trending component, or if you're aggressive, take the trade. We do have, aggressive, conservative type choices.
Why don't we
the mindset to take the trade is I'm using options, and then I have some flexibility.
Why don't we take a look at a chart of a stock that everybody loves to hate and everybody hates to love, which would be NVIDIA. So let's look at NVIDIA.
All right. I'm going to go ahead. Let me do
Yeah.
that.
Put that on a daily chart.
Daily chart, yeah.
Okay. This is going to come up as a 15-minute, but as soon as it loads, I can change it to daily. And we are looking at daily. I'm going to zoom in a little bit so we can kind of see what's been happening a little bit more recently. So
the question always is, did it catch the big move? The answer is yes. As long as your methodology is catching the big moves, that's what it's all about. So right now, if you were not in this stock, you'd be trying to buy it at the bottom of the channel, which is a specific number, which is an 8-period moving average of the low. But of course, if you're not in this stock right now, you'd have to ask yourself the question, why did you wait so long? But that's a whole other story.
Well, this also shows the potential to buy on a dip, which is basically Jake's moving average channel buy, or if price came back to the 20 simple moving average, I look at that as a swing buy in a defined uptrend. We have a green cloud here. We're a buyer at support if you're not already in or on a continuation trade.
And before we run out of time, no one's asked the Bitcoin question. So let's look at the Bitcoin proxy MicroStrategy, MSTR.
MSTR, you got it. And I need to just adjust the zoom so it's not loading, showing so much data when we load in.
So let's take a look at the chart. And what does the chart show?
Well, currently, we've just had a weak sell setup. Again, price is inside the moving average channel and looking down an expansion contraction. It is very narrow. So again, an individual that was aggressive is taking the trade. An individual that's conservative might have waited for further downside. We did see that today. So currently on the daily chart, I would have this as bearish, likely to continue to trade a little lower, may test support, which right now is sitting down there at the lower band.
Jeff, can we look at Bitcoin itself?
Yeah, for sure.
Bitcoin, US dollar.
just want it to be, so you say it is what it is at the right edge of the chart, and we're trading reality at the right edge of the chart with expansion, contraction.
You can see that Bitcoin turned bearish right by the first red bar, and it's stayed that way to where we are right now. So again, are we able to catch the big moves? The answer is yes. The methodology does catch the big moves. But again, the weakest link in the chain is the trader, who's going to have to believe what they see and see what they believe.
And that will show that there's a take profit on the signal for the short position that hit today. And
Right, you see the time and
that's take profit.
Yeah. And now in this particular case, you have very specific rules when you're kind of in a winning trade about when, like how much profit you should take. If I remember right, you're talking about a third, right?
That's right.
Okay. Cool. My memory's better than it was last week. All right.
Definitely improving. I'm glad you've been taking those supplements, Jeff.
Yeah. All right. Anything else you'd like to look at?
We'll just take it from the viewers if there's anything they want to look.
All right. Yeah. We might have a time for a symbol or two more if you want to type them
Again,
in.
I'd like to suggest that because the Japanese yen is at a major point, at least as a setup condition.
There we go.
So whether it's FXY or the USD JPY or futures, right? The yen does trend well.
You want to zoom in on that one?
Sure. Yes, sir.
Okay.
I just love these little scroll bars that they gave me in 19 or 18. Actually, these were in here.
I come back to the same basic question. Did it catch the big moves? The answer is yes. But catching the big move means you've got to be there. If you're not there, you won't catch the big move. Unfortunately, so many traders are so spooked by their own inadequacy that as soon as they make a trade and it's showing a few $100s in profit, they get out of everything because they're afraid it's going to turn into a loss. That's the psychological component. So as you can see today, we showed you methodology, psychology, technology, and all of that combined is what trading is all about. It's not just the technology. The technology itself is beautiful, but the implication, the implementation of that technology is where the weakest link in the chain happens. And many times when I was learning how to trade, the best trades that I had were the ones that I looked at the least amount of time. The ones that I forgot about, as they say, buy it and forget it, has been a very big salvation for me when I first started trading, because I realized the importance of not micromanaging trades. I'm done with what I have to say. I'll turn it back to you guys.
And Jake, if I might make a comment on that, I know before you've said the individual trader cannot live or die on every tick of a trade. However, I think that's the default mindset for most people. It was for me, and I really needed to follow the rules and trade reality at the right edge of the chart rather than what I thought was going to happen.
Exactly. And that's really what, as beautiful as MetaStock is, I don't want to sit in front of the screen and look at those pretty pictures all day. This is going to cause me to make decisions that are not valid. So as you can see, catching the big trend in Micron right here, exactly, and giving opportunities at the bottom of the channel to add to the positions or to take on new positions. I said I was done, and I'm going to shut up now. Turn it back to you guys.
All right.
You're just trying
Greg
to
wanted
get
to
back
look
on
at
time.
So I pulled it up. Anyway. Okay. Let's see. Couple more comments. We've got Tom Petty. He says, in the industry, Jake and Brian are the best. So I agree. Let's see.
Make sure that Sunny tells you about her new book.
Okay, will do. All right. Let's do this real quick. Hey, Sunny, good to see you. All right. All right. Very cool, guys. I think that's...
One more thing, Jeff. One more thing.
Yeah.
Can we change this Micron chart to a monthly?
Sure. There you go.
Let's spread it out.
Yep. Tell me when.
When is right now? Again,
Okay.
really big moves. Very solid. Very solid. And the reason we don't show the indicator at the bottom is it requires 100. It requires 500 data points. So we won't show it on the monthly, but it will show on the weekly. Thank you, Jeff. Appreciate
All right.
it.
Thank you. Thank you again, Brian. Thank you, Jake. Great having you. Appreciate everything. And I'm going to talk a little bit about how to get this.
Thanks, Brian. Thanks, Jeff.
All right, let me go and do this. Again, also, I do know that we had a few people that had some charts that they'd like to see that we didn't just get to, and my apologies for that. If you'd like to get charts, or if you have questions, or you want us to send you an image, or anything along those lines, we're happy to do so. All you need to do is actually just get in touch with us, and we'll pull you any chart you want. You can do that here, metastock.com/sales-check. So my thank you for Brian for making such a cool little indicator for MetaStock. We did have some questions. This is available as an indicator for free. It's part of MetaStock already. You can just install it. And or you can just apply the template that's called JBXC. If you want to do the scanning and have the expert advisor, the symbols, the commentary, all that kind of stuff, that's available as part of the add-on. But the indicator, if you just want to play with it, see how it looks, it's available. It's when you want to do all the things that are really, really cool, like scan for setups, see the expert advice and the commentary and the charts and all that stuff. That's when you want to definitely pick up the add-on. Let me talk a little bit about the add-on. So that's actually from our bootcamp class. I need to take those out of there. So in the bootcamp class, I actually, Jake and Brian did a section, and then I did a section that covered exactly this list. So there you go. That's available instantly as soon as you buy it. And I don't normally intend to show that, but it's still in there from last time. Anyway, the expansion contraction indicator, I call it the Swiss Army knife of indicators. It shows you long-term trend strength, short-term trend strength, expansion, contraction, overbought, oversold, divergences, short-term breakouts. So many like stuff that you can kind of glean off of that. And much like Brian was talking about, he'll send you the rules. That's exactly kind of what we did initially when we actually put together the actual thing. Is I took a look at this huge list and I said, okay, well, let's program this. So when you actually apply the expert advisor and look at the commentary, you'll have exactly what the short term is doing, exactly what the long term is doing, exactly whether the range is expanding or contracting, what the support and resistance levels actually are on the chart based on the methodologies, overbought, oversold conditions. Really like, and you can kind of see it right here, really kind of like this dashboard view where it kind of gives you a good idea of what's going on right here, right at the top, as soon as you're looking at it. So you'll notice with this one, it had a strong long-term buy, gives you some information about that, gives you stop losses, all that kind of stuff is kind of baked into the pie, if you would. So of course it does scan. Here's a list of the scans that are available. You can look for bullish divergence, bearish divergence, buy signals, long-term trend changes, sell signals, short-term breakouts, anything that you want here on the list. So that's available. And Brian did show the system testing and kind of how this works. This is basically a system test I did of the whole S&P 500 and kind of how everything came out. So there you go. A great system. We did actually do a boot camp, as I said. In the boot camp, Jake, Brian, and I sat down. They talked a lot about kind of how to implement the signals and do that kind of stuff. And I actually kind of did a getting started with MetaStock. Here's how the scans work. Here's how to set up a list of just the stocks that are in your region. Here's how to run the scan against that list. Here's kind of how the expert works. Here's how to navigate it, all that kind of stuff. So you don't have to watch my part. If you've been using MetaStock for a while, you probably don't need to. But if you're new to MetaStock, what I try and do is like if the reason that you bought MetaStock is because of JBXC Complete, I want to make sure that you know how to kind of really get in there and do that, the stuff that you need to do with it. And so that's why I'll sit down and actually include some stuff. So the JBXC is $5.99 as a purchase. As part of the introductory offer, as part of the summit we're doing today, it's $4.99. We'll give you instant access to that recorded training that we put together, a 30-day money-back guarantee. If you don't have MetaStock, you want to try out MetaStock because you've seen kind of some of the cool stuff that it can do, or the fact that it's been rated 31 times in a row the best software in its price category. I'll include a trial of MetaStock for you. So you can do that. You can do that by going to metastock.com/summit promo. You can give us a call. I would be happy to talk to you, answer any questions that we might have missed. I'm going to look And any questions that I've missed, I'll type answers to here in just a second. But you can also go to metastock.com/sales-chat. So $4.99, 30-day money-back guarantee, get you access to everything that we talked about, all of the scanning, a trial to MetaStock, everything you need. So summit promo. You can call us 800-882-3040. You can go to metastock.com/sales-chat if you have questions. You want to talk to us. We'd love to talk to you. All right. Now I'm going to practice some enunciation while we talk about our sponsor today, Stocks and Commodities Magazine. I love Stocks and Commodities Magazine. I love getting their articles and their newsletters. Their magazine, I should say. It's not really a newsletter. Their magazine in the mail every month. They're sponsors of the event. They've been sponsors ever since we started doing these events. It's been like 13 years now. As a member, like if you subscribe, I'd recommend you do it. You can actually get all of their articles. They have more than 17,000 of them. They've got about 1.3 million, and they've been publishing articles on trading stocks with technical indicators since 1982. So I'd recommend you get a subscription if you want to do a trial and you're watching us on YouTube, or if you just want to get a trial and you didn't sign up when you initially registered, come register for the event today. You can go to metastock.com/traders-summit. You'll just fill out a little registration. All of the speakers, except for me, all of the speakers today have like a little course or an ebook. You can get a free Stocks and Commodities magazine. So go ahead and do it. metastock.com/traders-summit. Totally free. So there you go. And of course, we're MetaStock. Let me go ahead and kind of get our next presenter. We're having Sunny Harris in here today. Sunny, I remember I met Sunny at a trade show, and I think it was one of the very first ones that I went to in MetaStock. It was back when they were huge. I think we were in Vegas, if I remember right. But there's a couple of things that I realized when I talked to her. One, she was super nice. She had a little dog. I remember very, very vividly kind of just talking to her for a few minutes. She's wicked smart. She's read over 600 books on trading. She's written quite a few of them as well. And for the first time ever, and I'm overdue at this, we're actually kind of bringing her in. We programmed her studies and into MetaStock and have them available as scans. So without further ado, let's go ahead and get you started. Sunny, how are you doing?
Good, thank you.
Do you remember that initial meeting?
I do.
Okay, cool. That was a long time ago.
I thought you were the nicest salesperson I could come across.
Well, good. Okay, I can see you and I can hear you, and I'm going to get out of the way. It's your turn.
Okay, fantastic. Today we're going to talk about the new release, SunnyBands on MetaStock. And I got the date and time wrong, but it's still the same presentation. My passion is in helping beginners. It's so hard to learn to trade successfully. And I've been doing it for a long time, so I like to share my knowledge with other people. It's also for intermediate traders and traders who have not yet become wildly successful. That's our goal. People who have not traded much and want to learn, or for folks who want to improve their trading results. I love to teach and I love to mentor and consult. It's just what I do. So give me a call. This is my personal cell phone number. Don't call me during the presentation, but any other time, I'd be happy to talk to you. If you get my voicemail, then leave a message in your number and I'll call you back personally. Now, disclaimers. There is risk of loss in trading stocks, futures, options, cash currencies, and other leveraged transactions. You can and will lose money. That's what this says. Hypothetical performance has limitations, and no representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Short form past performance is not a predictor of future results. All investing includes risk of loss, and individual investments may vary. The examples provided in this presentation may not be representative of typical results. So when you invest, you can and will lose some money. You could lose all of your money. I've consulted with people who've done that. And so never risk more than you can afford to lose. Don't borrow on your credit card to trade with. And I'm going to put this presentation on my website, moneymentor.com, at the bottom of every slide. So I'm going to put this presentation on there and you can click on it and get the slide. Today I'm going to tell you exactly how I trade every day with my very own indicators, now available for MetaStock. SunnyBands, dynamic moving average histogram, and slope. And I don't hold anything back like some vendors do. I tell you exactly what I do. So let's go through the introduction. I am a professional trader. I've been for 43 years. I trade futures, stocks, and crypto. I don't trade options, though. I've never figured out how to make money at options, so I don't trade it. I'm going to tell you a little bit about myself and show you how I trade. I've been trading since 1981, and I've seen some crashes. 1987, 2000 was a good one. 2007 to 2008 during the real estate problem, as well as the 38% COVID crash. And the next one, there will be another one someday. There always is. So I trade the S&P 500 futures contract on 1 and 5 minute charts every day. I've heard it said it's the most difficult market to trade, but I've been doing it for so long, it's second nature now. So I've been doing it for 43 years, over 43 years now. I do have long-term stock holdings, and they're long-term to me because a week or more is long-term when you trade 5 minute charts. And I do have cryptocurrencies that I trade back and forth. Why isn't it moving? There we go. So today I'm going to show you how I trade SunnyBands, my dynamic moving averages in fast markets. And if we have time at the end, I'll show you my compounding spreadsheet called Ultimate F. It's the way to sensibly leverage up on the number of contracts you're trading based on your equity. I do offer a free Sunny Side of the Street technical newsletter. You can get one issue if you just text SSS, Sunny Side of the Street, to my phone, and I'll set you up for a free issue. And I explain what my indicators are telling me on 12 different markets and with predictions for the next day. If you can't find it for some reason, email is sunny@moneymentor.com, or you can click above when I post these. And become a member at moneymentor.com. Membership is free and it gets you to the members only page. I also have a free podcast featuring legends in trading, and there's the link to that. I've had 48 people now, including Larry Williams, Jake Bernstein, Steve Nissen, Linda Raschke, Alexander Elder, Cynthia Case, Sherman McClellan, Carolyn Baroden, Greg Morris, John Bollinger, and many more. It's a fun listen, getting to know them as people and how they got into the trading industry. And here's the beginning of my Sunny Side of the Street that I send out every Sunday night. And if you look at the chart that's cut off at the bottom, that's the vantage point prediction for tomorrow. So I was rated #1 trader twice with 365 and 178% profit. And I was using SunnyBands and my dynamic moving average. And there you can see it right at the top. I also have a daily live trading room that you have to subscribe to get it every day. But we meet at 9 a.m. Pacific every trading day for 1 hour. And that 191% up is old. We've got a little more data and it's up 210% now. And we started trading in the live trading room at the beginning of the year. And there's the equity chart so far. I grew up poor in Appalachia. I just went back to Appalachia last week. I was there for 8 days. went to North Carolina. I have 3 degrees in math, telecommunications degree after I retired, and business and programming courses at Stanford, Wharton, and UCLA. I've been programming for 55 years, trading for 43. I was a systems programmer for Lockheed, my first job out of college. I was also one of the founders of ISCO, the world's leader in computer graphics software, and I retired when I was 30. I gave my millions to money managers, and they lost 75,000 in 3 weeks. And I said I can do that poorly on my own, and took the money back and started learning. I taught myself to trade, reading. I've read 747 books on trading now. And I didn't enter a single trade for the first year of watching. I wanted to get the rhythm of the market down, know what I was doing, and then enter a trade. And I published a monthly magazine for 8 years called Trader's Catalog and Resource Guide. I have 5 best-selling trading books. Actually, I have 7 now. And then one with my friend Linda Blair. And then I just last year in August finished the definitive guide to TradeStation's easy language and OEL programming. It's 1,300 pages of 50 material. I've written articles for all the major magazines. Here are the covers of my books, so you can see. I also wrote one with Murray Ruggiero, who's now deceased, using easy language 9.x. I forget to count that one. And there's the magazine, and here's the new books, 2 volumes. Let's just race through this. I've got top 10 consultants, top 10 courses and seminars, memberships in all the important organizations, and these are the quips and quotes. If you go to my Money Mentor website, up at the top there's a menu item called quips. If you click on that, you can read what everybody said over the years, their emails. And here's one who said, I just wanted to say I love them, your bands. I've torn apart Bollinger Bands, Keltner, etc., and nothing comes close to what you've created. I've talked to CMTs who've said, oh yeah, they're just bullies, and I almost spit out my coffee. I've watched your videos where you're walking a new customer through their use, and I got it all, understood. And turns are right there. Bullies are too general, and Keltner, which Rasky says she likes, are only a hair better than bullies. Yours blows both of them away. And of course, you already know that. Marius. I like that one. I have a Facebook page. I post predictions now and then on there. Just search for Sunny Harris. And I told you about Sunday Side of the Street on Sunday nights. I have customers lots and lots of places, so don't be afraid to call in the middle of the night. The next slide is probably the most important slide in the whole presentation. Let's see if you can do this for yourself. It's important to set goals, but it's also important to make them realistic. So how do you make a 6-figure income trading? That's 120 grand a year. Now, that's a very lofty goal, and if you set that goal for yourself, how are you going to achieve it? So I like to break it down into steps. That's actually $10,000 a month. 120 divided by 12 is 10,000 a month, which if you count 20 trading days a month, then 10,000 divided by 20 is $500 a day. Now it's looking more possible, but I can hear you saying, I can't make $500 a day. So let's look at this. 5 trades at $100 each. That's all it is. So that breaks it down into something we can understand. And on the S&P, which is what I trade, there's usually between $1,000 and $3,500 potential in the daily chart. And you can see I draw Fibonacci lines on there. So I want to see where the retracements are and watch those in my trading. Here it is on a 15-minute chart. And you can see there are more trading opportunities. If you look carefully, this has more trading opportunities than a daily chart does. And on a 5-minute chart, there it is. Now, on a Dow Jones on a 1-minute chart, let's look at that. What's going to happen after the end of this box right here? When it, on the left-hand side of the box, what's coming next? Are we going to go up or down? And that's what you're always looking at, trading the hard right edge of the chart. And that's what it actually did. So we all look at the hard right edge of the chart. That's all we can do because we don't have future data. We don't know where the market's going. And what we ask is what is true all the time. So whenever you're looking at an indicator on a chart, look at the crossovers or the peaks or whatever it is that particular indicator shows and ask what is true of the market. What did the market price action do at that juncture on the indicator? Every new bar, ask what is true. It's easier to see in hindsight because that chart doesn't really tell you much. In fact, it just kind of looks scary. Is it going down further or is it at a bottom? Is it going to turn around? What's high and what's low are the questions. You always know to buy low, sell high, but what's low? So there's the Fibonacci lines again. And then I draw attractors. So by that I mean there's a horizontal line that goes across this chart. Oops, sorry about that. And you can see, can anybody see my cursor? Can you see the cursor? No.
Yes, we can see your cursor.
Okay, right over here, you see how the price goes up and then turns, goes up and then turns, and then uses it as support. So I call those attractors. It's a confluence of price action. So I draw those on my charts. Trend lines, I also call attractors. You can see this trend that I've drawn here, and you can see clearly when price breaks it. And I add SunnyBands, the dynamic moving average histogram, and slope. So that's what SunnyBands looks like on the same chart of the SPY. And you can see from this that there are certain patterns. If you ask again, what is true, as long as the outer bands are the two green ones on the top and bottom. The teal ones inside there are the inner bands. So I've got upper inner band, lower inner band. In the middle, I have a purple and a gold line. That's my dynamic moving average. And as long as gold is on top, all through here, all through here, all through here, until this level, I would stay long. Because it's gold's on top and slope is rising. How do I know that? Because I can see the angle of the chart. Now let's look at the histogram for a second. This is the gold and red and purple and green histogram at the lower frame of the chart. It goes gold when it goes above the zero line right here, and it goes gold as long as we're rising. Then when we get divergence in price and the difference between the DMAs, you can see it turns red and goes down. Back over here, you look and see that when this purple became green was the ideal entry point on that trade. So that's what I look at the histogram for. Now I can see something. I've added attractors. They're not just support and resistance. Trend lines are also attractors, and so are moving averages. It's basically reversion to the mean, where the mean can mean several different things. Fibonacci retracements are also attractors. Elliott waves are also attractors. So let's go a little farther. I have an indicator called potential hourly wage, PHW, and you can use the zigzag indicator on MetaStock to achieve much the same thing. You just don't get the values printed out for you. So the question is, can I make more by trading than by working an hourly wage? It's a good question. If your trading account's negative, you've got a minus hourly wage. So when your trading account gets positive, You want to break it down like we broke it down earlier from the 12,000 to 120,000 to 12,000. So you want to have that be a high positive number. The dots are the ideal turning points, but we can't be perfect, of course. So I take 60% of the ideal as a goal. So what you're going to do is you're going to set this is two types. You can see the zigzag lines are just two types. So you need to set the percent retracement to a bigger number. So if you record this bottom price and this top price and log that in as the values of that as a positive number, and then you can calculate the short that goes from there down to here. Put those numbers in, calculate the profit. Here it goes up, put those in, calculate the profit. So you create a spreadsheet of all these values and the ending profit or loss. Mine, we'll do this on MetaStock one of these days soon. Mine prints out the ideal amount of profit, which is if you caught every trade perfectly, how much money did you make in that spreadsheet? And then the PHW, which is 60%, because I think we can get into a trade 20% late, get out of the trade 20% late, and still have 60% profit. Now, that goes for trends, of course. My dynamic moving average keeps you out of non-trending periods. So here we can see it again. Let's look at this. What if you decided to buy and hold the Dow Jones at the beginning of 2020 and you sold yesterday? That'd be $34,246. Pretty good for buy and hold. PHW is 60% of the ideal, so on the same chart, it's $327,941 if you catch all the trades. Or you catch 60% of all the trades, and that's quite a difference. It's 10 times as much money. I have a live trading room that meets daily if you subscribe, and on Wednesdays I allow guests to come in. So if you want to text me TAWS, T-A-W-S, trade along with Sunny, then I'll be happy to send you the link so you can get into it. I show you exactly how I trade. It's every morning by subscription, and I trade live for 1 hour. That's what I was doing just before this presentation. Like everybody, sometimes I win and sometimes I lose. So this is a 99-second video that I've condensed to show you what it's like. And so I've condensed and there are transitions, but you'll be able to see it. That's with the flat DMA with gold on top. I don't really expect it to go much lower than the DMA. If it goes down and closes under the DMA, then I'm short. 1 minute NASDAQ's just going straight up. Look, there's it. It's trying. Let's see what this one's doing. Come on. Order fill. Okay. That's what I'm watching right now to see if that's going to go above this interband. And if it does, it seems to me like it's going to move on further up. Order fill. There we go. I'm going to stop it at this point, as you can see. And most of the people who are in the trading room are trading also. Some of them are just there and learning, some of them trade. This is NVIDIA. This is not yesterday's chart, but you can see that the SunnyBands work on that too. We've got the same, as long as it's above the gold line and moving up, then I stay long. When it passes the DMA, I go short. So let's look at buying some more buy and hold versus trading. Here's what NVIDIA would have done. $923 for one share of buy and hold, or $4,400 trading. It's kind of hard to trade NVIDIA. I invest in NVIDIA, but I don't trade it. I don't like the movements intraday. One share, and let's look at Tesla. So there's Tesla, same SunnyBands daily chart. And this one, buy and hold, was $237. Trading it was $2,100 per share. Here's the SPY again. You can see how that chart is within the SunnyBands once again. Daily chart, buy and hold, was $418. Trading was $4,800 per share, per contract. So PHW amount, which is 60% of the ideal, would be $29.23 times 5 shares, 5 contracts. That's what I trade on my live trading rooms, 5 contracts. But it was 20 years. So let's look at a faster chart. This is the S&P 500 on a 15-minute chart. And the returns were $75 for buy and hold, $1,500 trading per share. 60% of the ideal is $910. And that was just 9 months. So that times 5. That's still not what we want. I love the yearly charts in MetaStock. I swear by them, and you can see what we're really looking at that way. Trader's chart on the SPY, or in a fast market on the 15-minute, and here's a trader's view of the daily. You can see the signals. Short, long, short, and another long. So that's how a trader trades this stuff instead of the buy and hold or hold on to the long-term trades. That's how I would look at that chart. My indicators work on any symbol and any time frame. I get asked that a lot. But how do you know that in 1982 you're supposed to buy Apple at 12 cents a share and hold it for 40 years? Well, I look at my SunnyBands, the dynamic moving average histogram, and my PHW indicators to see what the hourly wage is. SunnyBands is built around my dynamic moving average, which is the purple and gold lines in the center of bands. I designed this to allow me to investigate excursions from the DNA, both favorable and adverse, and the bands are average 2 ranges away from the dynamic moving average. They're not like Bollinger Bands. In Bollinger Band, John uses standard deviations away from the simple moving average. The standard deviations tell the market where it should go, statistically. And the simple moving average is the one with the most whipsaw. My dynamic moving average is smooth and dances seamlessly with the market. I use average 2 ranges, which asks the market where it has been and is going, not where it should go. So let's look at this on a 15-minute chart. This is still the SPY, I believe. Yep. So we've got simple moving averages on the SPY. And the way people usually trade these are on the crossover. So we go short here, look how late that is. Then we go long here, look how late that is. And then short again, long again, and short again. That's what I call whipsaw. And that's why I designed my dynamic moving average, was to get away from this whipsaw because it's a killer. So here again on Apple, simple moving averages. Crossover, 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 crossover. You can see what crossover. They're late and they produce lots and lots of whipsaw and therefore losses. Here it is on Apple daily chart. You see it's not as bad on a daily chart, but still, I mean, look at this. That's where it tells you to go long. So here are the trades. You can see the crossovers, 3 trades there just in a few days. Here. So these are all the crossovers. Late signals and whipsaws. Whipsaw is when a price or indicator is moving back and forth with no trend. That's what I mean by that. Losing money on both sides of price swings. So let's re-examine the crossover signals. In my experience, whipsaw eats up all the profit that you made from the trends. Or at least that's what used to happen to me. The crossovers are late, and it's a very lagging indicator. So many, many years ago, I set out to cure whipsaw. I wanted the links of the moving average to change with the market automatically. How the heck do you do that? In the beginning, I used tables to look up numbers and find thresholds that way, but that wasn't ideal. So I developed mathematics to create this so that links of the moving average automatically calculate themselves with every tick of the market. I worked 18 hours a day for 18 months to come up with this. And I have banker's boxes full of notes. So I created the dynamic moving average, my DMA, that calculates its own links. So in a standard moving average, you'll have, say, 9 and 18 for the fast average and the slow average. Mine changes itself with every tick of the market. I like to say it dances with the market. Here you can see mine and the simple moving average on. It's very congested, but you can see that mine's somehow different from the simple moving average. And let's look at it a little closer. That's the DMA. Crossovers up here, and we still have room left. Crossovers here, and we still have room left. So when they get very, very close together and turn kind of flattish, I don't take that trade until it moves above the dynamic moving average and proves itself. But this is my dynamic moving average. It's unique because of two things. It's unlike anybody else's moving average. Other people have tried, but they haven't come close. My DMA calculates its own links dynamically within the mathematics of the program. And because of average two ranges, it tells me the market moves about as much as it usually moves, so I can measure how much it usually moves. These are the SunnyBands rules. When the market's going up on green or blue candles and gets above the upper outer band, UOB, and turns red and dips below the upper outer band, I go short. When the market's going down on red candles and gets below the lower outer band and turns blue and pops over the band, I go long. Now that's the first set of rules, and those are very simple, but there are some conditions you also have to have met. And they are, oh, let's go to this first. So if we were looking at that, the same amount of time an investor made $168 a share, the trader would have made $299 a share. And the day trader made $610 per share. If you'd started with 100 shares, investor made 16 grand, trader made almost 30 grand, and the day trader made 61 grand. That's why I'm a trader, not an investor. I'm an investor in stocks to an extent. I'm a swing trader in stocks. So I think we're still looking at Apple, aren't we? So if the starting value of 47 cents in 1981, which is when I started trading, and the current price at that time of this slide was 156, the investor would have made 399%. Trader made 635% profit, and the day trader made 1,200% profit. That's why I'm both. So you ask, is this possible? And the answer is yes and no. You can't catch all the moves. It's not going to happen. How many holes in one have you made playing golf? So my research told me that 60% of every move is possible, not probable, possible, and that's what's reflected in the PHW. While the investor must sit through long periods of scary negative markets and returns, and believe me, it can be really scary. Trader can go short, investor just goes long. So I have a little 4-page summary on my website called SunnyBands Rules. And these are for educational purposes only, as is this entire talk. And level 1, this is where we have 3 levels, and we have to have all things working. So I go long when red candles moving downward and touch the lower outer band, and in turn, I use blue instead of green. because SunnyBands have a lot of green in them, and that kind of interferes. And when they move back inside the lower outer band, if price confirms. Now, what do I mean by that? That means if you're going to go long, you want the next bar to go up. If it goes down, that cancels the signal. So here we have blue bars going up. They touch the DMA, which is flat, which tells me we're going to enter a period of congestion, and we do. And then here's where you would go. Well, here's where you go long back here. You sit through all this congestion, and then you hold it until the red bar comes inside the upper band again. I enter short when blue candles have been moving upward and touch the upper outer band. So you see blue candles going up, touch the band, red comes inside and penetrates the the upper inner band there. I got it right. Upper inner band. And they turn red and move back inside. Then if price confirms again, you want price to move in your direction. Here's level 2. And I went over this a little bit just then. If the DMA midline is flat, that's like between the two, the purple and the gold lines. So if the angle is visually sideways, and I use +5 to -5 degrees, then I don't expect price to move very far beyond the midline. That's the congestion that we get every time the DMA is flat. It often acts as a barrier to further movement. So you can see it bumps up against it, bumps up against it several times. 1, 2, 3, 4, 5 times. And if you count this one where it bounced and went down to it, that's 6 times. And level 3 rules are if gold is on top and we have a nicely positive slope, then I stay long until the DMA, the gold line, is penetrated. So you can see here, long, holding our breath. One of my trading room buddies says, sitting on hands, SOH. So here it goes up, 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 and now we have a bar below that went through the upper inner band and one that touches the DMA. I'm out of there. And likewise, if purple's on top and we have a strongly negative slope, then I stay short until the purple DMA is penetrated. So you see, we've got down, 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 purple's on top this whole time. And here we get penetrated and we're out. How's my time doing? I'm getting close. So with that foundation, we can now look at fast moving markets as traders. So we're going to look at the S&P, gold, and crude. Here it is on a SPY on a 15-minute chart. I don't have slope in this presentation. Jeff, you're going to have to teach him about slope. This is a 5-minute chart of the S&P. And that's what I trade. I trade 5-minute charts so you can see how it moves differently from the daily chart. This is gold, trading on a daily chart, trading on a 15-minute chart, and then I didn't put the 5-minute in. Well, I need to work on my presentation. Crude oil futures, this is the CL contract. And you can see right there is when expiration Friday was, it switched over to the next contract because it was so thinly traded prior to that. Here's crude on a 15-minute chart. I wouldn't trade that on a 15-minute chart. It's way too sparse. There's a lot of gaps and just prices at close only. We don't have much movement that I'm willing to bet my money on. Stocks and Commodities magazine in the back 5 or so pages has a futures liquidity table. And you can see that the S&P is right here on top. S&P futures contracts are the most liquid in the world. And you can see we've got greater thans telling us it goes out beyond the piece of paper. Next, 10-year T-notes, 5-year T-notes, ultra T-bond, ultra 10-year note, 30-year bonds. So the US is all the way down here. NASDAQ 100 is all the way down here. You can see that it's got liquidity, but not nearly as much as the ES. So this is a spreadsheet view of my PHW. So you can see we've got the E-mini, crude, and gold. Buy and hold, BH is buy and hold, and that's that amount. And then it's got an ideal column, and the yellow is PHW total. So you can see that the PHW for this contract is calculated to be almost $33,000, whereas crude, $1,400, and gold, $24,000. So gold's a close second, but crude, I wouldn't trade that. And of course, I trade the one with the most profit. Always remember, there's only one reason to trade, to make money. We're not in it for the excitement, for the stress, with plenty of that, the challenge. There's a hobby. It has to be your avocation. It has to be with me, everything I think about, dream about, and think about all day long is the markets. I'm devoted to it, and I absolutely love it. I've had people ask me, if she trades, why does she sell indicators or do consulting or still trade after 43 years? One person told me, you need to retire. I've been asked that many times, and why I do it is because I like to give back to the industry that's been so kind to me. And I enjoy it every day. I enjoy what I do, and I still like making money. Nothing wrong with that. Now, if you have a profitable series of trades, it's possible with strategic compounding to greatly magnify the profits. Ralph Vince, my compounding spreadsheet is called Ultimate F. Ralph Vince's books have something he calls optimal F in them. And there's some pretty heavy mathematics to calculate it. And mine doesn't have the enormous risk of drawdown that optimal F has. So here's my performance. On Trade Along with Sunny, my daily live trading room, I trade 5 contracts of the S&P. We're together for 1 hour from 9 a.m. Pacific time. I trade with double the margin. And here are the results. Oh, this is really old. It's 24 weeks now, and we're up 210%. And that's not what the chart looks like anymore. It's way up here. I'm sorry, I'll have to correct my presentation a little more here. But it's on Money Mentor Live, so you can see today's results. Here's the spreadsheet I keep. And here's the equity curve. So you can see this equity curve. This is, since I didn't have enough trades yet in my list, I've only got 23 weeks, so I duplicated the trades by pasting them onto the bottom of the Excel spreadsheet. So here we go from 0, and we don't count the margin. So we go from 0, just above 60,000, 62 or so. That's $400 a day, not compounded, trading 5555 every time. And then with Ultimate F compounding, the blue line is the non-compounded, and the red line is the compounded equity. So we went from $400 a day to $2,000 a day with judicious compounding. Now, some people tell me that spreadsheet's really expensive, and yes, it is, because you will make a whole lot of money potential with it, and that's why I charge for it. That's what degrees in math will do. So Ralph told me that there was an error or errors in his equations, and I found them. So he was grateful and said I could call mine Ultimate F. So it's not plagiarism. Here's what the spreadsheet looks like. And you can see here, starting with 1 contract on this example, then it compounds to 2. And later on in the spreadsheet, it compounds to 3 and then 4. My website again is moneymentor.com. There's what it looks like. I have products. We have slope and the dynamic moving average histogram and SunnyBands for MetaStock. And I use these in my own trading, and I programmed my indicators myself. I make them available to you, and I show you exactly how I use them. I don't hold anything back. We'll meet with 2 Zoom calls. First one for installation and education, and then the second Zoom call for looking at the stuff in the live markets. Now I do this for free. So contact Jeff Gibby or text me free, and we'll get you over to Jeff Gibby so he can talk to you about the bargains we have going out. This is a unique opportunity. I'm giving free entry to Wednesday's Trading Along with Sunny. The daily subscription is $2.95 a month. And on Wednesdays, I'll let you in with a guest pass. Text TAWS to me at 760-908-3070. And this is only good till the 30th. Or you can give me a call. Nobody else makes their number available like I do, but if you go to moneymentor.com, the number's right on the top of the webpage. Again, free membership and Money Mentor gets you to the members only page. And oh, here's a chart of it. 23 weeks. There's the chart up through today. You can see it recovered from the drawdown, and we've just been going up. We're up to $27,000 now. And we started down here on January the 2nd. MetaStock SunnyBands bundle is SunnyBands, dynamic moving average histogram, and the slope indicator. So you can click there when I post these slides, or click on MetaStock. I'm sure Jeff will give you a link too. I offer education, consulting, programming, mentoring, a complete bookstore where only trading books are linked into it, no novels. I have a distance learning course, Solving the Puzzle, and these are the indicators that I use in my own trading every day. Sunny Side of the Street, you can have a free issue of that if you'll get in contact. And I have a daily live trading room you can subscribe to. Are there any questions?
Yes, there are. And one of them is, how can I find my mouse or my microphone? Steve wants to know what do you use for stop losses and profit targets? I thought that was a good question.
Good question. I use the opposite bands. So if I go short at the top band and it starts down, then the top band becomes the stop. So I'm reading the indicator for everything.
What time frames do you recommend? I know you trade intraday very, very actively.
I do.
What time frame does this work on a daily?
It works on everything.
Okay.
Daily, weekly, monthly, yearly, it still works. So if you don't want to trade very much, trade the first hour of the day kind of thing, you can do that. The reason I trade all day is because often the first hour of the day does not have a good move in it, or it has a really wild move in it. So
what about international markets over the years? We get a lot of people from London, NSE that are looking for Indian data, Australians looking for Australian data. Have you had a lot of people over the years that have used it in international markets?
Not a lot, but yes, I've had some. And there's no problem with it. It's the same thing.
All right, very, very cool. Let's see. We have kind of put all the information, the promotions, and that's all the questions that we have right now. So I am going to spend a couple of minutes kind of showing kind of the implementation.
Fantastic.
Thank you for joining us, Sunny. Thanks for all of your work. I know it's always a lot of work when you're kind of putting something like this together for MetaStock, and I know I've been downright harassing you with trying to get everything kind of pulled together. You've been great. Absolutely a joy to work with.
Thank you. You are too, Jeff. Thank you.
All right, very cool. All right, thank you very much, Sunny. Appreciate it.
Mhm.
Go ahead and do this. I'm going to go ahead and also kind of just take control of the screen real quick. Okay, I'll go ahead and show my screen. And so I don't forget, I'll turn on my camera as well. So anyway, as we have, actually, we've been working a while to kind of get this perfect and to get it available and to kind of put it into the program. And very, very happy with kind of the way that everything looks out. You've got kind of the buy and sell signals that are generated on the chart. These are done automatically. You've got kind of all the indications. I'm going to kind of go through everything that's included in this and kind of what it includes and all of that kind of stuff. So we'll start with the SunnyBands, which are the heart of the dynamic. We'll start with the dynamic moving averages, which are kind of the heart of the SunnyBands. They're unique to Sunny. They're used to average true range. They're calculated dynamically. So basically, there's a longer term and a shorter term one. And they're used to determine, just like any other moving average, you're going to use them to determine bullishness and bearishness. So in other words, like if your shorter term DMA, your gold DMA is above your purple, that's going to indicate a bullishness. If it's down below the purple, it's going to indicate a bearishness. And that shows up on your chart. But I like the fact that these are kind of Sunny's indicators and they're dynamic. They're automatic. They don't, Sunny likes to talk about how she doesn't ask the indicators to tell us what it's supposed to do, but they're designed to kind of dance along with the market and kind of give you signals. So, of course, you've got kind of the DMA purple, the DMA gold. You've also got the upper and the inner outer bands and the lower. I actually said those already. Okay. I do like kind of in the manual as we're kind of reading through things, and the manual is provided. It talks about how they're designed to hug price and how they kind of work better than kind of some of those other channel methods that might be available. They're looking to look at the market and tell you what the market is doing. Let the market tell you what it's doing instead of what it should be doing. They'll provide typical turning points. They'll give you profit targets. You can look for a target towards the inner upper band or the lower band or the midpoint, depending on where you're at. And they're also designed to kind of help you identify extraordinary price movements. So this right here is the DMA histogram. It shows the difference between DMA gold and purple, very, very much like a moving average convergence divergence would. You use it in the same way. You use it to measure trend and momentum. So if you have big, huge troughs, and big, huge peaks, big, huge troughs and big, huge peaks, you're going to have a lot of momentum. Whereas if they're smaller, you're going to have more of a sideways. If momentum's increasing, you're going to have either a green or a yellow. If it's decreasing, you're going to have red or purple, depending on if you're in an uptrend or a downtrend. So it's color-coded to kind of show those momentums, and positive values equal bullishness, negative values equals bearishness. Very, very common sense way to kind of look at the market. I like the fact that these all circle around Sunny's DMAs and the way that they work and the way that they're adaptive and automatic. So slope is a measurement. Vince talked a little bit earlier about how he uses slope to measure the slope. We do have a slope calculation here that's designed to measure the slope of price activity. And this is actually included as part of the MetaStock add-on. It's brand new. And here you'll see kind of how it works. We don't actually show this. You can add it to a chart if you want to. But really kind of what we do is on the chart, we interpret it for you. So if you're in an area of congestion that you might want to stay away from, it's going to say congestion. If you've got a bearish phase, it's going to say bearish. If it's in a bullish phase, it's going to say bullish on there for you. And what it's looking at and what it's measuring is the slope of the DMAs. So all that's available. You get the DMA histogram, the dynamic moving averages, the slope, and the SunnyBands. And of course, we implemented it into MetaStock. So that means that you're going to be able to have all the templates. There's a 1 minute and a 5 minute that you can use, a daily and a weekly, a dark and a light. And that just kind of sets up all of your charts for you. In terms of scanning, I've already talked about how I love to run scans. In fact, I want to look at my scans after I'm done here. But the scans that you can run with SunnyBands, are you looking for a flat DMA? Are you looking for trade setups? Are you looking for entry signals? Those are the 3 explorations that are available as part of this. So looking over here to see if I have questions that come in. And of course, we have the expert advisor. That expert advisor is going to paint the buy and sell signals on the chart. You can see this sell signal came in right here. This buy signal came in right here. And then it's going to give you the highlights. You'll see right here, you either have red bars or green bars or gray bars. The gray means it's congested. And that also kind of links back to that trend ribbon that talks about the slope. So we did put together, of course, commentary. I love commentary. I love the fact, we're going to talk a lot about commentary in my session that's coming up next, but I love how this can kind of help spell things out for you. If you're new, you can kind of come in here. It's going to give you the levels for everything. It's going to break down if the DMA is bullish. Oops, I clicked on it. Whether the slope is bullish, what the gold and purple, and whether the histogram, whether that momentum's increasing or decreasing. If there's a buy signal, it's going to kind of, this was a midline price. It's going to tell you about it. It's going to tell you other things to look for. Does your long-term chart show bullish or excursion? Is your DMA bullish? Underneath that, it's going to go through all of Sunny's trading rules. So very, very helpful. It's kind of like having Sunny like over your shoulder, helping you understand what's going on. But you know what's better than kind of like having Sunny over your shoulder? Having Sunny over your shoulder. So as part of this, she actually will sit down with you and she will do like 2 calls. These are done by Zoom. And basically what she'll do is she'll sit down with you one-on-one in a personal environment and talk to you in 2 sessions, 2 individual sessions. The first session she's going to do an introduction to SunnyBands, what they are, how to use them, how to implement them in your charting. I told her I was going to practice my enunciation. I'm still working on it. In the second call, you're going to get the application session during live markets. They'll sit down, she'll sit down, and she'll actually run through everything with you. She'll tell you what everything means. And kind of, so 2 live sessions. You also have unlimited access to, if you have any questions about it, you've got our phone number, you've got our phone number, you're welcome to reach out to us. She did kind of, when we were kind of setting this up, she's like, well, I have the best customer service. And I'm like, well, I don't mean to disagree with you, but maybe it's on par with the customer service that we offer here at MetaStock. But she does a great job. And that was just me being a little bit cheeky. Between the 2 of us, if you have any questions, whether it's around scanning or methodologies or anything, reach out to either one of us and we can kind of help you. With the methodologies, you're going to want to reach out to Sunny. If you have questions on MetaStock, though, like how do I use the expert advisor, how do I use the scan, we're very, very well equipped and well trained to help you with that. So if you bought all of these other indicators on the other platforms that she supports, you pay about $5,713 for them. And that does not include the slope indicator. The slope indicator is just something that she recently designed and developed. It's her newest indicator. You're going to get the whole package. You're going to get it at a discount of $3,997. So that includes the expert advisor. It includes the scans. It includes her sessions and her time and her support. And you can do that in a couple of different places. You can go to metastock.com/SunnyBands. You can give us a call at 800-882-3040, or you can go do that at metastock.com/saleschat. We do give you a 7-day trial on this. You can set this up for 7 days. You can go through both of those classes with Sunny. If it's something that's not helpful for you, like all of the products we sell, we're going to give you a money back guarantee on it. So metastock.com/SunnyBands, 800-882-3040, or metastock.com/saleschat. All right. Thanks, my stuff. I appreciate that. He says, for those of you that can't see the comment in YouTube and stuff, it says, good job, Jeff. Thank you. I appreciate that. All right. Very cool. There you go. And as always, like we were saying earlier, I'm just grabbing my coffee. As always, if you have any questions about MetaStock or you want to see some charts, maybe you want to see this on a video or anything like that, just let us know. You can get in touch with us. You can give us a call at here, 800-882-3040. If you're here in the US or up in Canada, if you have questions and you want to reach out to us by phone or by chat, sales chat. Or you can also come here, metastock.com/summit promo. That'll allow you to get any of the offers today. So in any case, do want to say thank you to Stocks and Commodities Magazine for sponsoring all of the events that we've done. Really appreciate the work that they've done over the years. They've been making articles available since 1982. I remember getting my first issues of Stocks and Commodities like 27 or something years ago when I started here, and I'm really, really happy that they're sponsoring the event. If I won't bother putting this in to GoToWebinar because you're already registered. If you're watching this on YouTube though, and you haven't registered for the event, Sunny Harris has a free, her free sentiment newsletter that you can get archives for. All Vince has a course that's available. Vince Vora, all of the speakers pretty much provided a special promotion for registering for the day. If you want to grab any of those or all of them, metastock.com/traders-summit. So there you go. All right. And of course, we're MetaStock. We're going to talk a little bit about MetaStock today. Today, I'm going to do a little bit of a funner class. So we're going to talk a little bit about Ichimoku Ichimoku, kind of how it works. We're going to talk about Goichi Hasada, and it's a little bit of a funner class. I do want to kind of stress, though, that because I'm going to talk kind of about something else, we won't talk as much about scanning markets. I'll show you a scan. We've talked about scanning today, but I think it's one of the most impressive tools that we offer. Testing trading ideas is something that's very, very helpful for MetaStock. The forecaster is patented. It's something that you can only get with MetaStock. Very, very cool tool to help you understand probabilities and price action. And of course, the real-time alerts, the commentary, the signals, all that stuff that we've already showed today is available as our software. Our software, MetaStock, has been rated #1 in its price category for 31 years in a row. And you can get a trial at it. You can go to metastock.com/summit promo. In the chat, it'll allow you to get a trial. And also go to this page and watch a little bit more of an info page on it. So with that being said, I'm going to go ahead and get started. So actually, this is mislabeled, but this is one of the new hidden gems in MetaStock. So let me go ahead and read this legal disclaimer. We'll talk a little bit about kind of what we'll get into a little bit of a lesson. So today's demonstration is designed to instruct you in using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. And lastly, MetaStock does not endorse the purchase of a security, nor is it paid for the promotion of a security. No information contained in this presentation should be construed as investment advice or the solicitation to buy a security. So with all that being out of it said, I'm going to take a serious. And I'll let you, the coffee's more to kind of just keep my voice going, keep everything lubricated there, and to keep me awake. All right. So just to kind of give you a little bit of an introduction to me, I've been working at MetaStock, like I said earlier, like 26 years, I think is correct. It's been a great job to work for. Absolutely love it here. Our average employee tenure is like 13 years, I think. And so I'm kind of like on the longer side. I'm no longer a rookie, at least. But it's just been a fun company to work for. When I started in inside sales. That means if you had questions about MetaStock or kind of how it could be helpful for you, that kind of stuff, if you called in, there's a good chance, maybe 20% back then, that you talk to me about it. Okay, I did that for quite a decade, actually, exactly a decade. And at the end of that, I kind of started to work with some of the market mentors out there. I went into our business development team, and we set up some partnerships with some people that I've made super good friends with, like Sunny Harris, Vince Vora, Steve Bigelow. I've had a lot of fun actually working in business development. I've learned a lot as well. So it's been fun. Right now, I kind of do a lot of our online scheduling for these types of events. I work on a lot of the add-ons that we've done. I answer questions. I do whatever it takes. And I've been doing that for a while. So if you have questions as we go today, make sure to ask them. I'll do my best to answer them for you. And we'll just go from there. So with all that being said, the last thing I want to talk about first, is for 31 years in a row, MetaStock has been rated #1 in its price category. And I love how effective it is at kind of going through the markets, helping me identify buys and sells. I scan twice a day. I scan in the morning, I scan at night. It allows me as a busy professional, as a busy working professional, to spend just a little bit of time trading and looking at stocks. And I wouldn't be able to trade nearly as effectively with that. And so I'm kind of lucky they let me do it at work. I call it research, but I love trading. It's something that I've been doing for a while. And but for 31 years in a row, it's been rated the best software in its price category. And I think it's because of the tools that we offer, the scanning tools, the expert advice, the commentary, the system testing, you know. We're lucky too. A lot of our customers have been with us for decades. And there's a lot of stuff in MetaStock. I believe MetaStock's a program that you won't grow out of. There's just so many things in it. It will grow with you as a trader. And so with that being said, I have a question for you guys. So here, as you can tell, this is a multiple choice question. What do you think is the best profession for trading? So I've got multiple choice answers. A, is it a teacher? B, is it a psychologist? C, is it an artist? D, is it an airline pilot? Or E, is it an engineer? And you're going to go ahead and answer that. Go ahead and put in the comments A, B, C, D, or E. What do you think it is? So I think a couple of these answers are interesting. But while you're typing, go ahead and have a little bit of a lubrication for my throat. It's allergy season. One says E, engineer. Okay. D, Peter Murphy says airline pilot. Okay. Let's see. I think a couple of these are interesting because earlier we had Jake Bernstein in here. And I've had, being the fact that we live close to Jake, we went to dinner a few times. And we spent a lot of time with Jake, just kind of going up to these. We would do regular sessions at the Trading Options for Profits group up in Northern California. It was in San Jose where they would do that. They've merged with the Silicon Valley Options group. If you're in that area, highly recommend you look them up. They do a good job. But anyway, the reason I kind of brought that up is he's a psychologist or a psychiatrist, one of those two. And I think that also Dr. Alexander Elder is a psychologist, started in psychology and then moved over to trading early on. So I think that's interesting. I think being a psychologist might be helpful for that. The actual answer that we're looking for is airline pilot. And so number D. Thanks, Peter, for that answer. Anyway, one quote I always kind of start with is I always say, you could publish my rules in the newspaper and nobody would follow them. The key to trading is consistency and discipline. And I think discipline is super important in the markets. Today and I think that's one of the reasons MetaStock can be so helpful. And I think that's one of the reasons, like the sessions that we do here at the event can be so helpful, is to kind of help you understand different ideas. The biggest thing that I kind of have learned over the years in terms of trading is discipline. You know, respect your stop losses, know why you're getting into a trade, know why you're getting out of a trade, and all that kind of stuff. And I think MetaStock does a really, really good job of kind of pulling that together for you. So looking over here for questions, not getting any. Today I'm going to kind of do a little bit, we're going to have some fun today. So in particular, over the years, and we might have, depending on time, we might show you a few of these, the different methodologies. But over the years, we've put together quite a few different methodologies that are built into MetaStock that are just built around helping you understand different trading rules, different methodologies, that kind of stuff. The one I'm going to talk about today is one that I find really interesting. It's brand new to MetaStock 19, although it's something that we started to include with 19. And it was a methodology that was created by a gentleman by the name of Goichi Hasada. Now, there's two really kind of main goals that I have for today in terms of my lesson and what I want to be able to provide to you. One is I hope to teach you something. So I want to talk a little bit about the Ichimoku method and kind of talk about how you can use it, how it generates buy and sell signals, how you can use it for a bunch of different stuff. My second goal is to get you interested in MetaStock enough to try it. Okay. We offer some extended trials where you can buy a month and get a second and third month for free. And if you're interested enough in MetaStock to try it, that'd be awesome, because because it's been rated #1 for 31 years. So those are the 2 rules that I have. One of the things that isn't part of my goals is to, I'd also like to hopefully pronounce everything okay, especially when we start talking about Hasada, Ichimoku, the Tenkan-san, the indicators that are included in MetaStock. I've had a little bit of practice pronouncing. I'm not great at it, but hopefully we don't do too bad of a job. So Goichi Hasada created the Ichimoku indicator. He created it in the 1930s, and he developed it over the course of many years, and he released it to the public in the 1960s. And they've been part of the public domain ever since. Okay, Ichimoku Sanshin roughly translates to what a man in the mountain sees. So there's quite a few number, and then the Ichimoku method. Did I have the rough translation for that? One chart equilibrium at a glance. I don't have my notes here, so I can't cheat. Is kind of what that means, roughly translated. So there's quite a few uses for the Ichimoku indicator, and I've kind of itemized them here. You can use them. There's a couple of different ways that you can use them to identify where buy and sell indications are on a chart. There's 2 different ways you can look at it to determine bullishness or bearishness, and we'll talk about that too. Using the cloud, you can use the Kumo, which means cloud in Japanese, to look at future price direction, find support and resistance now and into the future, show the current and the expected future trend, the stability of the trend, and anticipate potential reversals and identify stops. So there's quite a mouthful, right? There's quite a number of different things. There's a number of different indicators that actually apply when you put in the Ichimoku templates. And so let's go through them. Let's talk a little bit about what the indicators are, what they're looking at, and how you can kind of use them. As we go through, every time I look in this particular direction, I'm going to look to see if you have questions. We haven't had a lot of questions yet. If you do have them, ask. I'll do my best to answer them. Okay? All right, cool. All right, let's talk about the indicators. You've got the Tenkan-san, the Kijun-san, the Senku-span A, which is part of the Kumo, the Senku-span B, which is also part of the Kumo. The difference between Senku-span A and B are the Kumo. You've also got the Chiku-span in the close. So I'm going to go ahead and jump into MetaStock real quick. And what I'm going to do is I'm going to actually go ahead and open up a chart that has been pretty good to me lately this year. So I'm going to go ahead and open up NVIDIA. And what I'm going to do is I'm actually just going to show you these indicators and kind of walk you through it. So what I'm going to do here, are we on a monthly? I don't want to be on a monthly. Let's go ahead and go down to daily. You can use this on any time frame that you want. And what I'm going to do is just zoom in a little bit. Okay. And then what I'm going to do is I'm going to apply the template. This is a template that we started to include for free with 19. There's some reasons that I wanted to include it for free. It was developed by Robert Dedman, and it's actually really, really cool. Like a lot of the studies, I actually purchased it from Robert Dedman, and we included it in 19 as part of the install. So I'm going to go ahead and apply it. If you have MetaStock, you want to know how to get to it, just right-click on a chart, go to Apply Template, and what I'm going to do is I'm going to go down to the Ichimoku Advanced. I'm actually just going to do Ichimoku. With the advanced one, there's a couple more indicators so I'm not going to cover today. He did a YouTube on them a few years ago when we released him the talk about them. But for now, I'm just going to do this Ichimoku indicator. So let's go ahead and apply that to the chart. And I will go ahead and click on no. Let's not save the changes. Let's just go to the next chart, the chart with the Ichimoku indicators. Did I crash? Oh, no. Okay. MetaStock only crashes when you're doing a demo. Yeah, but in this case, we did it. For a second, I thought we might have. So I want to kind of just talk about what the indicators are. We'll go back into the chart and kind of back and forth between the slides so that I kind of give you the right information about what we're talking about in terms of how they're calculated and how they're used. But right now, what I want to do is just kind of talk a little bit about kind of the indicators. So right here, you've got a purple and a red line. The purple one is called the Senku-span A. The red line is called the Senku-span B. Wait, I'm sorry. Is that right? No, this is the Tenkan-san. All right, maybe I should just do this in the demo. You have the purple one, which is the Tenkan-san, and you've got the red, which is the Kijisen. Okay, over here you've got the Senku span A and the Senku span B. Those are both part of the Kumo, which means cloud. If I ever say Kuma cloud, I'm just saying cloud twice. I'm trying to avoid that. So the area between your Senku span A and your Senku span B is going to be the Kumo. Okay, and right here, this is what is called the Chiku span. And we'll go through all of these indicators and how they're read and how to kind of interpret them. So let me jump back into the slide real quick. We'll just talk about the Tenkan-sen A and the Kijisen. Okay, so with the Tenkan-sen A, that's going to be, again, this purple line that's on the top. If I wanted to calculate it, I'd take the highest height, I'd go back 9 days. I'd find the highest value in that 9-day period, or 9-bar period if you're looking intraday. I'd take the lowest low in that 9-day period. I'd add them together and divide it by 2, and that would give me basically the short-term median price for 9 days. Okay, that's all we're looking at. We're looking at the price between the absolute high and the absolute middle over a 9-day period. Okay, the Kijisen is the same thing, except for it's 26 days. So I go back 26 days, I take the highest high, I take the lowest low, I add them together, I divide them by 2. Okay, so you're looking at a longer term middle price and a shorter term middle price. And you can read those in a lot of the same ways that you would read like a moving average indicator, right? Like, so for example, if price is going up, generally your Tenkan-sen is going to be above your Kijisen. If price is going down, generally your Tenkan-sen is going to be below your Kijisen. And just like if you're looking at a shorter term moving average, a longer term moving average, if your Tenkan-sen is above your Kijisen, if your purple is above your red, you're going to be in a bullish phase. Okay, and that's just one of the readings that you can look at. One of the also classic buy signals from the Tenkan-sen Kijisen is the Tenkan-sen Kijisen cross. If your Tenkan-sen comes up above your Kijisen, which happens right here, that would be a buy signal. Okay, that would be one of the 2 buy signals that you can look for on a chart. So let's kind of pull that back into NVIDIA. We'll just talk about these 2 for now. And then as long as you don't have any questions, then we'll talk about the Senku span A and the Senku span B. Okay, I'm going to jump in here. Okay, and we'll just talk a little bit, ignore the cloud, ignore the other indicator. We're just talking about the Tenkan-sen A and the Tenkan-sen B. Or, sorry, the Tenkan-sen and the Kijisen. Okay, you'll notice right here a cross happened, right? You had your Tenkan-sen that came up above your Kijisen. And maybe I'll zoom in just a little bit more so we can all see exactly what I'm talking about. Right here, that cross happened, okay? And you get a buy signal. That's a classic buy signal. And if I kind of hover over it, it's going to be, well, actually, this is a close above the Kumo. This one was actually the cross, okay? You had a long cross, okay? So that's one of the signals, okay? If also your Tenkan-sen is above your Kijisen, as it is throughout this area, that's going to be bullish. If, for the Tenkan-sen Kijisen, if you're trading down below, you see right here, you had a signal where the TK cross happened, but to the short side. You'll notice when that happens, you go into a little bit of a bearish phase. And as long as your Tenkan-sen is below your Kijisen, as it is through this period of consolidation that you have, that's going to give you a bearish reading for those 2 indicators. So let me go back into the PowerPoint. Here's some interpretations for just the Tenkan-sen and the Kijisen. If the Tenkan-sen is above the Kijisen, it's bullish. If the Tenkan-sen is below the Kijisen, it's bearish. The crosses indicates an opportunity buy or sell. Okay. That's how those are used. Yes, Maverick, I'll look at CVNA in just a second. All right, cool. All right, cool. Let's go ahead and go into here. And let's talk a little bit about the Kumo. Okay, so the Kumo, if we're looking at the Kumo, it's a combination of the Senku span A, which is this blue indicator on the top right here, and the Senku span B. Okay, now this happens to be the indicator on bottom here, but they can change places. Okay, the Senku span A is taken if you take both the Kijisen, which is this one, or I'm sorry, the Tenkan-sen, which is this one, and the Kijisen, add them together and divide it by 2. That'll give you the value, but you want to plot that 26 days into the future. So you can see right here, this value here, the very future part of the cloud is the combination of these 2 divided by 2. Okay. The Senkou span B right here is on bottom. It comes back up on top for a minute. It's the highest high for 52 days and the lowest low for 52 days. You add those together and you divide them by 2, and that would give you the Senkou span B. Okay. So on top right here, the blue line is the Senkou span A. The bottom line is the Senkou span B. Okay. If your Senkou span A is above your Senkou span B, that's bullish. Okay. If it's down below your Senkou span B, when that happens, it's actually called a Kumo twist or a cloud twist. You'll notice that the cloud turns from a red to a green or a green to a red when that happens. That's also an indication of bullishness or bearishness. If you have that Kumo twist coming up, that's a bearish sign for the stock. If you just had a Kumo twist in the past, it's a bullish sign. So it can be bullish and bearish for the stock. Okay, so there's a whole bunch of uses for the Kumo. Okay, you can use it for trend bias if price is above the Kumo, as it is right here. You'll see right here. I'm going to scroll back out a little bit so we can talk a lot about how this works and interacts with the crowd. But if your price is above the Kumo, you'll notice that there's a whole bullish rip, and that's because price being above the Kumo is bullish. Okay, if you're down below the Kumo, that's bearish. That doesn't happen on NVIDIA, at least right now. If we go back in time, it would. But you're bullish as long as you're above the cloud. You're bearish if you're below the cloud. We also treat the cloud as support and resistance. So we expect, for example, when it came down into this area, we expect this area to act as support, which it did in NVIDIA. And you can kind of see it coming straight up here. It did bounce off of the cloud. Okay. The additional buy signal, the second buy signal, is a cross up above the cloud. So right here where it came back into the cloud, it traded up above the cloud. That's where it closes above the cloud. That's a primary buy signal. Okay. Here, and you had a whole bunch of them where it kind of just tested this, it tested it, it held as the support area. And all of these crosses, except for this one, all these signals on the chart were actually close above the Kumos. Okay. If it closes down below the Kumo, then that's a sell signal. And you'll see that on a chart as well. Here it came down below the Kumo, it generated a sell signal. Okay. So that's how you kind of read that. Did I miss anything when it comes to the Kumo or the cloud? Let me look at my slides here. Trend bias, relationship to the price. Is our price above the Kumo, or is the Kumo above the price? Is it bullish or bearish? That's how we tell. Kumo, we expect to act like support and resistance. It also gives us one of the bullish or bearish readings that you use with the Kumo is where is it headed currently and where does it head into the future. So let's go back into NVIDIA and kind of talk about that. Right now, if we're looking at the cloud, it's headed up. Okay, it's headed. If we're looking at it right here, it's headed up. But if we look at it in the future as well, from this point on, it's also headed up. That is a bullish signal in both of those instances. Okay, and then the other thing that we talk about is the relationship between the Senkou span A and the Senkou span B. Where this cross down below here, you see right where the cloud changed from a green to a red. That was because Senkou span went underneath A, went underneath B, and that's actually called a Kumo twist, and that's bearish. Okay, I find it interesting that this happened, and then we had the pullback. But in any case, so that's how you read the cloud. Okay, let's go ahead and kind of talk a little bit about the Chikou span. The Chikou span is really designed to kind of help you understand whether the trend is stable. Okay, if we wanted to tell you how to calculate the Chikou span, all you're going to do is going to take that closing price and you're going to plot it backwards 26 days. Okay, that's it. That's all it does. And that's all it is. It just looks at that price and what it was 26 days ago. Now, the way that we look at that is we look at the relationship to the Kumo, the cloud. If your Chikou span is above your cloud, that lends stability to the price trend. It says you're up in a good price trend. And you look at it in relationship to the price. So if it's above price, that adds stability to the trend. It adds kind of a confirmation that that's the direction that's going. Cody, thank you. I appreciate that. Cool. All right. Made my day, Cody. Who said, excellent webinar, Jeff. Okay. So let's talk a little bit about this. We'll look at a couple of different charts. I'll explain why I wanted it in MetaStock. So for the Ichimoku, you can use it a number of different ways. Oh my goodness. I saw that I'm going way fast. I'll show you a couple of other things in MetaStock because I thought I'd be like 45 minutes into the hour right now, not 30. I'm going through this pretty quickly. The reason I really like this though is because it shows buy and sell indications. There's so much you can do with it. It's a very popular indicator, but there's kind of a lot of things you need to understand. There's a lot of things that you need to keep in mind, like what's the Senku span A and B and the Kumo and all of the different indicators. But there are a lot of uses for this, and people really do like it. I've seen people go to classes where they pay $5,000 just to learn about the Ichimoku. So here's the uses again. And I kind of want to talk a little bit about how this can kind of help you pull together what's going on in the chart. So let me kind of jump over here. I'm going to go ahead and go to the expert advisor here. I'm going to go to view expert commentary. And what we're going to do is just talk a little bit about how this kind of helps you summate things. If you're not familiar with MetaStock, that's fine. That's my job. Right now, we've got the expert advisor for the Ichimoku attached to the chart. So it's kind of spelling out everything that goes on with the chart. And it's doing it at the current day. So June 24th, we're looking at the current day on NVIDIA. So if I kind of wanted to remember what was going on, I've got my indicator values here. If I look at the TK cross, it's bullish. It had a neutral TK cross 33 periods ago. If I'm looking at the relationship between price and Kumo, it's also bullish. Okay. If I'm looking at the Kumo direction currently, it's bullish. It's going up. If I'm looking at it into the future, it's also going up. Okay. If I look at the Chico span and its relationship to price and Kumo, those are also bullish and they're listed as bullish. And we had a Kumo twist that just happened. It was a bullish Kumo twist. So if I'm looking to kind of sum up what Ichimoku is actually telling me, well, obviously NVIDIA's been in a crazy trend this year and everything's reading bullish. Okay. Now, when we talked to Robert and he come in and talk about Ichimoku, he's the one that programmed all this stuff into MetaStock. And he said, I don't really like to wait until everything is bullish. By then, I feel like I might have missed most of the move. When I'm running the scans that I run, I look for maybe like a 5 out of 8 or a 4 out of 8 or a 6 out of 8. But however, if you're looking at all of the conditions here, it's bullish. Okay. Support and resistance can be important if you want to use stops or targets or that kind of stuff. Right here, the support for the Cajun support is 116.28. Our next period support is 88, and our Senku span B, our support level there would be 86. Now, one of the things that I really like is the way that he breaks this down for you. So with obviously kind of us keeping track of all of the indicators, it's helpful to kind of have a bit of a breakdown. And I remember initially when I started with MetaStock 27 years ago or something, one of the things I really liked was the commentary. That I remember very, very specifically opening up MetaStock and throwing on like the candlestick expert advisor, which I'll probably have time to show you. And it would show and identify like all of the patterns that were on the chart. And I'd be like, oh, a bullish engulfing is when this happened. And I knew nothing about what it was, but it was really, really helpful for me to kind of figure out what those signals are doing, right? And I felt like that this was something that did a really, really good job at that too. That's why I wanted to actually kind of include this with MetaStock for everyone. So in 19, it's just included. It's just an indicator you can use. Now, the reason I liked it so much is it kind of does sum this all up in kind of that dashboard view. But if I'm new to Ichimoku and I kind of want to go into more detail about what's happening, I can just scroll down. Right here, it's going to talk about the TK signal. So right here, the black part is going to talk about the TK signal, kind of what's going on, what we're looking for. As if you remember, it's because the Tenkan-sen crosses above the Cajun-sen signal. So that's what it is. But I'm not going to be there to remind you that. Here's where it's going to tell you exactly what that is. The black part is just a generic description. This is what this is. This is what we're looking for. The blue part is what's happening on the chart. So I can kind of read the black paragraph, understand what's going on, and then I can read the blue paragraph and I can kind of understand what happened on the chart. And it goes through all of those bullish, bearish criteria. So what happens about close above or below the Kumo? Here's a bit of a breakdown on that. And here's kind of what's happening on the chart. What about the current Kumo direction? What does that mean? Here's a little description for that in general and what's going on in the chart, the Chiku span relationship to Kumo, and what's going on in the chart, et cetera, et cetera. I think I'm beating the horse a little bit. So let's take a look. I don't typically. Let's take a look at CVNA, and we'll just kind of get some assessments in terms of what Chiku span is telling us, or Ichimoku is telling us with CVNA. So I'm going to go ahead and do that. Let's go ahead and kind of just click here. Oh, I just moved the commentary. So I'm going to go ahead and go CVNA. We'll type that in as a symbol. Carvana. Oh, this is an intro. I was looking at Carvana the other day. So let's take a look at it. Probably because Maverick brought it up. Anyway, so if we're kind of looking to make some assessments about Carvana, obviously it's been a little bit choppier than NVIDIA, but it is in a bullish phase. Now, if I wanted to kind of take a look at what's going on right now in the chart, I believe we're looking at 624. We are. If I wanted to say, okay, well, the TK cross, right now we're bearish because our Tinkinson went down below our Kijisen, so that's bearish. Our price Kumo relationship is bullish because we're above the cloud right now. Our current Kumo direction is headed up, so that's bullish. Our future Kumo direction is headed up, so that's bullish. Looks like it kind of gets a little bit flat if I'm looking at it. Our Chiku span relationship to the Kumo is bullish. The Chiku span relationship to price is actually bearish. So it kind of gives us, and then our period since the twist happened is this much. So if I'm kind of looking at CarMax, we definitely have more bullish than bearish. I wouldn't be buying right now, but a good opportunity will signal another opportunity when the Tikka-san comes back up and crosses above the Kijisen. If that happens, at that point, that would go bullish. And that might be a good time to buy. If I'm looking at, and I'm not recommending that you buy anything because legal, but if you did decide you wanted to buy it, a good place to put a stop loss might be below the cloud because that's where you're expecting support and resistance to be. So if we're looking at kind of where this closed above the cloud, it closed above the cloud right here. And that's kind of how you read it. So of course, this has scanning. Again, I scan twice a day, every day, unless I miss the market close because my job made me busy or something. But let me show you exactly the scans that are in there, kind of the process you can go through to run an exploration and how the scans work. I thought Robert did a really, really good job in kind of creating this. So I'm going to come over here to the Explorer tab. We call it the Explorer. It's our scanner. I had a question once that was like, why did you call it the Explorer? And I thought, that's a really good question. I don't know who named it. It was always named the Explorer when I started here, but my totally uneducated guess is whoever named it really liked Indiana Jones. So in any case, I have no basis in fact to back that up. But let me go ahead, and what we're going to do is I'm going to come in here to I'm just going to type, we're going to scan for the Ichimoku signals. Okay, go ahead and select this one, and we'll do a real quick scan list. Now, you can scan anything you want. If you want to use this, one of the things that's been an advantage for us over the years that I'm grateful for is the relationship we have with Reuters. Actually, it's London Stock Exchange Group now. But it was Reuters when I started, and then it became Thomson Reuters, and they sold all of that stuff to Blackstone, and then London Stock Exchange Group brought it. But it still has all the Reuters information, the news, all the stuff that they've built. One of the strongest, let's say, news platforms. Like if you go and you subscribe as an institutional trader to get news and data, you're going to either go with Bloomberg or you're going to go with London Stock Exchange Group and their platform. And so literally, like when you sign up for news with MetaStock, you're getting hedge fund institutional strength data. And because they have so much data, you can implement this just about anywhere in the world. And so if you're watching this from India, hello, or Australia or London, we have a lot of customers in those areas, Hong Kong, Singapore, you name it. You can apply this just to about any market that you want. In fact, it's kind of crazy. Like the amount of instruments that we offer, if you just look at this number, 326,046 issues. So regardless of what market that you might be interested, you're going to be able to get the data for it. And because it's provided from who it's provided, It's usually really, really super clean data, very reliable and available. So I'm gonna go ahead and do this. We're gonna come down here and instead of it scanning a whole bunch of markets, I'm just gonna kind of limit it a little bit. I'll do the S&P 500. This is very similar to the scan I run every day, the NASDAQ 100 and the Dow 30. Okay. Of course, if you're here in the US, I'm gonna go ahead and start that, but if you're in the US and you wanna scan all of the OSH flows, you can. There's a whole list for that. If you wanna do all the ETFs, you can. There's a whole list for that. If you want to just do the NASDAQ or all of the stocks, you can do that too. The reason I like to limit it to like about 500 is for a couple of reasons. One, I'm very, very busy when I'm doing scanning for myself. But two, I can run the scan. We can let it run. And you can see that it's kind of chunking through it pretty fast. But if I was to throw 6,000 at it, it would definitely go through. How fast it would go through that depends on your internet speed. If you're broadcasting like your screen at the same time and your audio and your face, that will all slow it down. So those are the reasons that I like to do it with just about 500 issues, because now we're almost to the point where we're done. Okay. I also want to point out this rejection rate right here. You've got 88% rejected. So for me, the advantage here is I only want to focus on the ones that have an opportunity. A good friend of mine, he's not speaking today, but a good friend of mine, Steve, no, Price Headley. Hey, Price Headley always used to talk about like ignoring stocks that don't have an opportunity, and even stocks that had kind of like a somewhat adequate opportunity to focus on really the stocks that have a big opportunity. And so for me, I don't necessarily want to look at 500 stocks. I don't necessarily even want to look at the 55 that are returned on here. I want to be able to focus it in on those stocks that have really the best opportunity. So if I'm using this with an Ichimoku method, I'm going to go ahead and make this a little bit more full screen. This will either have one of 5 numbers here in the signal column. It'll have a 1, which is an initial entry. That's a cross above the cloud. A 2, which would be having the cloud bullish and then having a TK re-entry signal. Or a -1, which is the bearish version of that, or a -2, or a 0. Actually, they won't have a 0 because those are filtered out. We're looking for stocks that have an opportunity. So if I'm looking for a specific trade type, like a 1, like a cross above the cloud, I could look for signal 1s here. If I'm looking for just the re-entries, I could look at the 2. Now, I want to kind of point out those criteria that we talked about before. You've got the TK cross, the cross of the closed relationship to the Kumo, the current Kumo, the future Kumo. All of these are kind of basically put together and they're scored up for you. So right here, if we have a TK cross and it's bullish, it gives you a 1. If it's a cross above the close versus the Kumo, it gives you 1. That's bullish too. The sum total is it gives you a score right here. So remember when I said just a second ago that Robert likes to identify when they're kind of like 6 or 7 or 6, 5, 4, that kind of area. Right here, I can actually score them by those criteria. And if it gives me a 6, I know that 6 of those criteria are going to be bullish. Moody's, Monolithic, Coca-Cola, HP. If I just want to find all of the 6s, they're right here at the top of the list for me. Okay. If I scroll down a little bit, maybe I want to identify the 4s. Here you've got Ingersoll Rand. IR is a symbol for that. It came up with a 4. So I can kind of come in here. It allows me to kind of focus in kind of on just those stocks that have an opportunity. I love scanning with MetaStock. I literally would not be able to trade nearly as effectively as I do without scanning. So Peter says, can you show the best things to look for if you did a search for a bullish or bearish stock for, say, a 2 or 3 week trade? Okay, so I don't know that when you start saying words best, Peter, I don't know that I necessarily want to say, well, this is the best one. But what I might point you in a direction to is there's some scans that are in MetaStock called the performance scans. And they'll show you stocks that are moving up most in a day or a week. And so you can kind of see what's moving, at least. So there you go. There's also a couple, let's look at the time. I might show this to you. So in any case, I think that kind of gives you an idea of kind of a good workflow around the Ichimoku mastery. And let me kind of wrap it up a little bit, and then I'll show you another thing that maybe will fit that question a little bit. MetaStock Greg wants me to stop putting my thing down. Somebody took my suspension tray off of here. I don't know who that was, but I blame them. You're welcome, Cody. Oh, okay. Robert is, I keep referencing Robert. Robert wants to, Cody's like, who's Robert? That's a great question. One I didn't answer. Robert Denman actually created this as an add-on to MetaStock. He made all of the performance systems and the performance systems plus in MetaStock. He did another couple of add-ons that he made for MetaStock over the years. One of our most popular add-ons was called Performance Systems Plus, and we actually bought that from him too, and it's actually now in MetaStock as well. So there you go. There you go. Oh, and then at MetaStock answered that question too. So there you go. All right. Yeah, let me show you one other thing. Okay, I was seeing how much time we have. One of the things I like to talk about with MetaStock is just kind of it's a very, very seasoned product. Over the years, this is just like one of 300 different methods that you can apply to a chart and kind of see on a chart and that kind of stuff. And so I'm going to go back to the question about like, well, how can I see stocks that are moving? Because I think that might be fun to show. And I have a little bit of extra time before we go into pricing, and it won't be hard. So I'm going to come back into the scanner, and I'm going to talk about some of the explorations that I like. So I'm going to go ahead and we'll go ahead and click on this one. And just if I wanted to find stocks that are moving, there's a number of them in here called performance. And I'm going to go ahead, and there's a daily and a monthly version. If I run this exploration, it's not going to filter anything out. What it's going to do is either on a daily basis or weekly basis, provide me a number of how much that has moved up in terms of points or percent over the course of the last 1 day, 5 day, 10 day, 30 days, 60 days. So if I want to find stocks that have moved up for 5 days, that are outperforming their peers over 5 days, this would be the scan to run. The monthly one, also same thing, except for it looks at 1, 3, 6, 12, and 24. So one of the things that was actually, it wasn't Steve Bigelow's quote, but it was in his book, says we want to buy stocks when they're moving. So if I want to be able to identify, it was a quote in his book, it wasn't a quote from him. But if I want to identify stocks that are moving, those are really, really good stocks to actually use. So another one that I like is called Dynamic Trading Tools. And this is one that I do show. Actually, it starts with DT. This might be another one for you to look at as well. This is also built into MetaStock. This one is a scan that you can run. It's going to go and look for breakouts of either longer term or shorter term support and resistance. It's going to give you a number. It'll do long-term, short-term resistance, long-term trendline breakouts, short-term trendline breakouts, that kind of stuff. So all that kind of stuff is built into MetaStock. So I think that kind of gets us to a point where I can kind of go on a little bit here. So with Ichimoku, the reason I actually wanted to purchase this strip is because it is so good. Like there's so many people that have kind of gone through and they go through classes and they kind of show you how to teach you how to use Ichimoku. But with this, what we're actually doing is we're actually not only showing you how to do it, what it means on the chart, you're also putting together an explanation. So after I learn it, it's very, very useful still. Okay. And I think it does a really, really good job of that. So I might have a picture. We did start including this with our brand new version of MetaStock, the MetaStock 19. It's just one of the expert advisor systems that you can use, and it's totally included. I'll also add this while we're talking about it. MetaStock 19 is awesome. If you have MetaStock 18 or 17 or 16, we have a What's New video that's like over an hour and a half long. This talks about stuff that we added. This is just one of the features. We added the ability and the support for multiple screens. We added a whole tabbed interface. We added new line studies. We added this new system. We added a gap identification system. We added, I'm just trying to remember, I'm not going to remember everything, but kind of the highlights. We went and retweaked a lot of the drawing tools. We added Elliott wave stuff, Elliott wave drawing tools. We added measurement tools. One of the things that I've really, really liked, because like we've purchased ourselves back from Reuters about 12, 13 years ago now. One of the things that I've really liked is how much we've been able to really invest in moving the software forward. So with this one, we built a brand new container. If like I can come in here, We have tab interfaces. You can float the commentary around. You can have it in dark mode. You can have it in light mode. All of the icons look brand new because they are. All of the interfaces look brand new because they are. Everything kind of got a touch up. We added a lot of trying tools. It's a huge update. If you have MetaStock 18 and you haven't upgraded, or even an older version of MetaStock, I'd recommend you grab the upgrade. So this is just one of the things that is in there, though. So I do want to remind you, 31 years in a row, MetaStock's been rated the best software in this price category by the readers of Stocks and Commodities magazine. We're doing a special offer. And I want to say thank you, too, to everybody that's voted for that year over year. It's a Reader's Choice Award. So it's not the editors basing their decision. It's actually the readers. For those of you that have been using MetaStock for decades, thank you. For those of you that are new to MetaStock, thank you. If you haven't tried MetaStock yet, we have 2 versions that are available. We have a real-time version. This real-time version includes all of the news, all of the information, all of that kind of stuff that you get if you're an institutional trader. It also includes MetaStock, the ability to test and scan and get the expert advisor, the commentaries, pretty much everything we've been working with today. And the price for that is $265 for all of that data. The news package that they spent $1 billion designing, 3,000 different reporters at 300 different news bureaus, some of the best data on earth. And that's all just included. So $265 would be the price with MetaStock. And we also have an end-of-day version. The end-of-day version is $69 here in the US. If you're overseas, it's only $59. Okay, that doesn't include all the news, but it'll include everything we've talked about today, the scanning, that functionality for you. So with your subscription, you get unlimited access to our support team. They do such a great job. A lot of times, every time you contact our support, you'll get a survey. Well, I'm not sure if everybody that contacts, but we survey all the people that contact our support team. I'm not sure if it's everybody or just like a sample size. I'm not sure. But one of the things that they shoot for and they hit very, very often is 100% for their metrics. And they get it not every week, but almost every week they get 100%, which is great. So those guys are over there. They're not in an office somewhere. They're part of the company. They're part of the team. They're not like outsourced. You can call them anytime you want to. They'll give you free unlimited support by phone, by chat, by email. You can even send them a letter if you want to. And all that stuff is available. One of the things that we're also going to do is we throw in what we call a white glove service installation appointment. So as soon as you sign up for your MetaStock trial, somebody's going to kind of get in touch with you. They're going to set up an appointment, and they'll spend time. They put together a 2-hour block where they'll show you how to run scans, how to run the system tester, how to run those tools in MetaStock, because it is a toolbox. We started doing that a couple years ago because we find that if we can kind of get you using MetaStock, and it helps you, if you find better trades with it, you're going to keep it. It's kind of a no-brainer, right? So those are kind of what we do. So let's just do a little bit of math. If you subscribe for MetaStock right now, you'll pay $69 per month. If you do the DC version, or $269, you'll get 3 months for that. So that 3 months, if you pay for a month, you'll get the second and the third month for free. That's about $23 per month. And that'll basically run you until September 24th. So 3 months. We'll be into the fall by then, which is kind of crazy to think about. This year's running pretty fast. But during that time period, for $69, you'll be able to use the program, set it through the paces. And if you don't like it, if it's something that is not helpful for you, just cancel your subscription. You're at $69. That's all, right? And during that time, we're going to do our best to kind of provide training to you, provide one-on-one hand-holding, provide support. We want this to work out well for you because we don't just want $69. We want you to be one of those customers that, like me, wouldn't trade without MetaStock. So to take advantage of the 3-for-1, you can give us a call, 800-882-3040. You go to metastock.com/sales chat, or you can go to metastock.com/summit promo. Thank you, Cody. All right, cool. All right. I think that's all of the questions. I think we hit them all. We're a little bit early. That's okay. Well, it looks like Oscar is here. We'll give him a little bit of extra time if he's ready. If not, I'll tell a story or a joke. Before we get to him, though, I do want to say thank you again to Stocks and Commodities Magazine. They've been sponsoring the events that we do since, 13 years ago, when we started doing our online events. If you're watching us on YouTube and you haven't registered for today's event, you should. metastock.com/traders-summit. There's a free article. They'll send you an actual magazine, either a digital version or a physical version. They've got 17,000 articles that are available. They've got 1.3 million subscribers. They've been publishing about technical analysis since 1982. And the subscription rate, if you want to do a subscription, is like $90, I think, per year. I think that's what it is. Anyway, it's a great magazine. I've been getting it every year, every month since I started. And I just love getting it every month. Of course, we're MetaStock, metastock.com/traders-summit. Let me go ahead and kind of type that in the chat. 3, 4, 1. Okay, very good. Cool. All right. Oscar, are you ready or shall I tell some jokes? All right. I see you, but I don't hear you just yet. I don't hear you. Okay, I think
Testing.
there you go.
Okay.
Perfect. Let's make you the presenter. How are you doing, Oscar?
Good. How are you doing?
Good. Let me talk a little bit about you. Oscar Carboni has a website. It's called livewithoscar.com. I mean, livewithoscar.com, but it is like you're living with him. You can go to his website. He talks about the market. He has some great YouTube content. You can join his channel. He does classes that are great. You can come in to Vegas. They're called OmniCamp. He's going to talk a little bit about them. If he doesn't talk about them, I'm going to make him talk about them. The food is excellent. The training is education. The training is great. Very, very educational. Very select group of omniacs, as Oscar likes to call them, that are available to kind of do that for you. And Oscar's a great guy. Actually, Greg likes to call Oscar a force of nature. But he does such a great job. He's going to be very, very entertaining for the next little bit. Oscar, I think that's where I'm going to let you take over.
Yes. So, Jeff, thank you very much. And what I would like to say is good morning, good afternoon, good evening. I'm Omniacs from across the globe. For traders who do not know me, I will give you a brief, very brief presentation on who I am. I don't play salesman, you know what I mean? So I don't expect a big sales pitch at any means from me. But what I will do is show you where you can find me. If you want to hang out with me after the presentation I'm about to show you, if you think it's smart, which I promise you it will be, you may want to come hang out with me. If you want to do that, you can literally just go to livewithoscar.com, where you would find me in a live trading room that I run literally 24 hours a day. It's live right now. I'm waving to you. If, in fact, I wasn't speaking to my audience, the camera facing me would also be in that chat room, and there would be 2 cameras in there. So you can find me at all times. The easiest way to get there is just go to livewithoscar.com. If you're not a member, you will hit register. And here's the beauty of this. No credit cards, no nonsense. You will literally just come up with the username, email address, and get your verification code. Now, the important thing about that is I promise it's going to go to your spam account. Look in your spam folder. You will receive an email from Oscar, from Live with Oscar. Click that, and you can immediately end up here. You click Oscar's chat room, and boom, you would be in here with me live. Now, what I do is I spend my life in this trading room, going through trades, showing charts. We get into trades every day, or if the market sets up, and we're out by the end of each day. I send out those signals via Discord. They go out on an email. I speak the signals. We send them out in a flash update. you couldn't miss the signal if you tried, unless you stuck your head in the sand. So we do that. And then we've got this. Because some of you may not know me, I'm going to show you a very, very brief video, just to show you a little bit about the acrobatic stunts that can be done using technical analysis, using the chart. And from there, we will get into today's presentation. Today's presentation is very interesting. I've had many Omniacs write to me knowing I'm about to do this webinar on Monday, and many of them have written to me from around the world and said, Oscar, please do us a favor. We have a question collectively we'd like for you to answer. Will we continue higher in NASDAQ and E-mini S&P, or will we finally fail? And my job today will be to teach that to you, show you where we're going, why we're going, how we're going to get there, and help you gauge where this market will go in the future. I will keep it simple. I promise you there will be zero complication here. When I offer trading recommendations where we actually buy and sell, that's slightly more complicated than what I'm about to show you. But my job today is to keep it simple and answer the question for my Omniacs around the world, where is this going to go next, Oscar? Should we be short or long? So before we get there, a little bit of power of using technical analysis. This video is going to depict a couple of quick calls that I made. Crude oil was trading $103 a barrel. I got invited on TV, told them it was going to drop to $40 a barrel, and they grabbed the vaudeville hook and hooked me out of there.
Hi, I'm Oscar Carboni. I've been one of Wall Street's leading analysts and traders since 1982. For over 38 years, I've been incredibly accurate with my market calls and market projections.
The sudden drop in oil prices isn't a huge surprise to some. One guest predicted it right here on Money 2 years ago.
At the rate we're moving, we should have crude oil back down under $40 a barrel by mid-2015.
I don't know about that.
She threw me off the set at that point. They literally vaudeville hooked me and threw me off the set and called me a nut. And then, of course, crude hit my spot, and this happens next.
Look who's right now. Joining me now, Oscar Carboni, president of Omni Trading Academy. You saw it. You said it was going under 40 by mid-2015. We're pretty darn close. When do you think we go under 40 here?
If you guys recall,
watch this, the power of technical analysis. This is 7/12 of 07. And you are going to hear me give the exact high of the market S&P before the crash begins on 7/12, in fact, the whole year of 2007. In almost every video I offered, the S&P would make new highs, get to a specific price, and then stop, which was the crash of 2008. Watch what I say here.
well, for months on end, I've been saying the 1577 level has been my target since this year began.
1576 was the exact high before the crash began. Watch what I do next.
I think we can see as low as 668 in the S&P traders. 668. We can go that low.
The low of the crash of 2008-9 was 666. I gave the top and the bottom before it ever happened. How can anybody do that? It's almost impossible, right? What I do just about every night is I do a YouTube video. And in that YouTube video, I will tell you exactly what's going to happen the next day.
Like
of course, you got to get through this nonsense.
Like hundreds of millions of dollars. It's
in my nightly video.
Good morning, good afternoon, and of course.
Just about every night I do a video like this. I talk for a while. Then I show you exactly why I expect the market to do what it's going to do. And then you will find me live in my trading room, taking my traders around the world through everything I said last night, in and out until we're out of the trades. So that's where I spend my life. And that's where you can find me if you would like to. But now let's go look at something much, much cooler than that. So I mentioned that there was a question posed to me. Oscar, where is this going? Is it going to continue, or is NASDAQ finally failing? You know what? That's not the actual question that you need to ask. The bigger question is this. The real question is, how is the landscape shaping up? What would make the market continue higher? You've got inflation, right? Everyone's scared about that. Oh my God, inflation going through the roof. You got the, the geopolitical, we've got the presidential race. No, none of that is going to affect where the chart is telling us where it's going to go, because it's all built into the chart already. The chart will tell us exactly where it's going to go. So the bigger question is, how is the landscape shaping out? So we are going to call this webinar today, we're going to give it a name. The name is going to be the rubber band effect. Remember that as we go through this webinar, the rubber band effect. What you're looking at right now is the NASDAQ daily bar chart. Looks fantastic, right? It's been going up like gangbusters. What a great market. I love it. Wall Street loves it. Nothing goes straight up. Remember that, OmniX traders from around the world. Nothing goes straight up, right? As you can see, you get your pullback, rally, pullback, rally, pullback. So you can't expect anything to go straight up, but you have to know what direction you should be heading in for the next few months. This presentation today should explain and show you where we're going to go and why we should get there. The big question, what does the landscape look like? Let's go find out. So NASDAQ and E-mini S&P cannot go alone. Those two have been going up with the transportation average last week going down. That cannot happen. I've been on Wall Street since 1982. I bleed this stuff. I breathe these charts. I promise you that NASDAQ and S&P cannot go up by themselves without the rest of the bigger indices moving up with it. You got to have transportation average moving with it. You've got to have Dow moving with it. You cannot have two going up and the others going down. They don't have to go up at the same time, but they got to stay together. What have we had lately? E-mini S&P going up, NASDAQ going up, its sisters going down. The rubber band effect, it's stretching. So you've got E-mini S&P looking fantastic. You've got NASDAQ looking fantastic. Dow Jones Industrial Average, well, transportation average, that's no good compared to the other two. The transportation average is very important to NASDAQ and S&P. They cannot go up without it. Now, if you look, there's an arrow pointing down, there's red channels pointing down, and you've got transportation average pointing down. When NASDAQ and S&P are pointing up, that cannot continue. The big question is, who will win this tug of war? Let's go find out. Which market will win? Will the transportation average finally kill the S&P and NASDAQ, like we seen back in the dot-com bubble? Or will NASDAQ and S&P take the transportation average and the rest of the markets up with it? Let's go find out. So you've seen the S&P, the NASDAQ, and the transportation average. Absolutely against it. Let's go find out what the landscape looks like. Traders, what would make a market continue to go higher? Well, markets are made up of companies that make products, right? If the raw materials for your products are getting cheaper, your stock will go higher because your costs are coming down while you're still selling for the higher price that you used to sell for when your costs were higher. It's simple math. Look at this. This is the Bloomberg Commodity Index, which is the measurement of commodity inflation, deflation, depending upon which way it's going. At the height of our supply chain issues, when prices went skyrocketing on products, we were at 140.55 in what we would call our inflation index. It has plummeted, poof, smash, goodbye, down, all the way down 95.19. Then we had a little bit of a rally inside this green channel, right? But really what happened was all you did was run up a teeny bit and put in what I call a head and shoulders, another channel moving down, and we are once again abating very quickly in our raw materials. And if companies on the stock market are paying less for raw materials, I don't care if they got to pay $3 more for labor because it went up to $20 from $17. If their costs of raw materials are getting cheaper, they're making money hand over fist on their products that they're charging high prices for. So let's continue. So we can see that prices for commodity products, which are the raw materials that you need to make a product that you're going to sell somewhere, have gotten cheaper dramatically since COVID. Why the hell are the prices of the things on the shelves still as high as they were during COVID? Let's go investigate. Okay, what are some of the supplies? Lumber, random length lumber. Look at how cheap this is now compared to where it was. Industrial supplies are getting cheaper. Okay, lumber's getting cheaper, but that's just lumber, Oscar. How's that going to help everything else? Well, it is one of the big commodities that are being used to create product, and it's getting cheaper. What else is getting cheaper out there? Dr. Copper. Beautiful Head and Shoulders top, left shoulder, head, right shoulder has been just spiraling since the middle of this year, or since the third month of this year. It's just been spiraling down, looks even more bearish. So metals are dropping. Copper is used in everything from the cell phone you're probably looking at right now to the computer to your car. It's used in everything, and prices are dropping. Prices are abating. Raw material costs are dropping. There's a theme here, kids. Watch. Let's go to more metals. Gold. The price of gold has been dropping. Nothing goes straight down, but the price of metals are abating. That helps push the stock market higher. Watch. Palladium. What is palladium used in? Trucks, cars, you name it. Palladium's used in the auto industry. Look at how much palladium has dropped. Now, hold on a moment. If I was selling you a truck when I had to charge you a ridiculous price for that truck when palladium was this expensive, and now I'm still charging you the same price for that truck when palladium is this cheap, am I not making extra money? Is that not going to push my stock up? Absolutely it will. Let's keep looking. So, let's see what we're looking at. We need a 5, and that would be wheat. Look at the wheat chart. Wheat, so now we'll go to some foodstuffs. You know, companies that are selling products on the shelves that are in supermarkets. Now, this whole presentation could never fix services like insurance. I don't know how to get the inflation out of that stuff, right? We're not getting inflation out of insurance, and we're not going to get inflation out of what people want to be paid per hour by cheaper commodities. But what we will get is a cheaper product that the company could sell for an elevated price. And that's what's been going on. So now we'll look at something like wheat. And if you ask me, wheat has got the same issue. Down, down, down in price. It's helping every company that needs wheat to sell a product in the supermarket. What else is going down? Let's see, we just did a 5. We'll need a 6. Soybeans. This is not inflationary when soybeans are dropping. When soybeans start on the left top portion of your chart and drop all the way to the right, that's not inflationary, right? That means soybeans are getting cheaper. Soybeans, soybean meal, that is in tires, it's in stuff, it's in foods, it's in products, it's in products all over this planet. Look into it, soybean, soy meal. That's not inflationary. If the price of the raw materials is getting cheaper, you better believe our stock market's going to keep going up with these high prices. They're still charging since the COVID days. Let's see what else we got out there. What we just do? Soybeans, right? So we are on chart A6. Let's go to A7. Corn. Now, corn is in ethanol. Corn is used to feed animals, which means if you are a store that buys anything that turns into food, your prices are getting cheaper because the corn is getting cheaper. The feed for the animals are getting cheaper. The animals themselves are getting cheaper. Your prices are, your costs are dropping. But your prices at sale point are not. Charge up the stock market. It will just continue. This is actually deflationary, not inflationary. And it looks like corn wants to drop even further. And corn's been coming down forever. All right, what else is out there? Even oats is spiraling down. Who cares about oats except for the horses pulling the carts? Even oats is spiraling lower. So beer companies get to make their beer at a cheaper price and still sell it at those COVID, can't get supply issues, can't get my supplies due to COVID supply issue problems, prices on the shelves. We're being robbed here, kids. Everything's getting cheaper. Their prices are not. Makes the stock go through the roof. If you own a 401k on the back end, you're making money on this anyway. Don't sweat it. All right, so what else do we have? Something like sugar. Look at the spiral in sugar. do you see the theme yet? Shelf prices still remain the same. You guys go shopping, your wives and husbands and everyone else, you yourself complain about the high prices on the shelves, right? Well, raw materials are much cheaper than they used to be. These cats have just kept their prices up, which is what's driving the stock market. Look at the raw materials. If you make a product, it has gotten cheaper for you. So what are we on? 8. Let's go to another one. What else is out there? Cotton. Aren't you wearing cotton right now? Look at the way cotton has just fallen apart. More industrial supplies are cheapening. The raw materials are experiencing deflation. Well, imagine you and I being partners in a store, and we build this bottle, and it used to cost us a penny to build the bottle. COVID happened. It cost us 15 cents to build this bottle, and now we're back to paying a penny to build the bottle. But guess what? During that 15-cent rise, we started charging $1 for that bottle, and we never dropped our prices. But the price of our raw material dropped. Guess how much more money we're making? Guess what happens to our stockholders? They see an increase in our shares. You see where this is going, right, kids? Let's keep moving. So we just did 9. Let's go to 10. One of the very few not cooperating, crude oil. Now, crude's been going up, and I promise you that's not going to help this situation at all. However, crude's almost isolated on its own, about the only thing left not trying to propel the stock market, which means it's going up anyway. So not crude, the stock market. Now, crude can't go to 100 and expect the stock market to keep going up. But, you know, the way all the other indicators are pointing right now, crude can stay here and we can still go up. I would love crude under 77 to make us really skyrocket. It's not where it is now. Crude's actually been going up. Green arrow. Well, the other commodities have had red arrows, right? Green arrow and crude, it's one of the rare ones not helping buoy the stock market. So what else is out there? Back to this. So I just explained to you and then showed you chart after chart how commodities are dropping. The price of raw materials are dropping. The costs for factories to make products have dropped dramatically. Meanwhile, they're selling them for high-level prices. So you've seen the commodities, right? This is an indicator of that happening. Well, let's go look at some more stuff. What else is doing that? What are we on? 11? Let's go to 12. Yes. What would help propel the stock market on top of everything else I just showed you? Interest rates dropping. Now, if you don't know this, traders, the Fed does not have to lower interest rates for interest rates to drop. Banks are in competition with each other. It is a free floating index. When banks see the stocks go up, when banks see bonds go up on futures, they know inherently interest rates are dropping and they get to lower their price because the bank right next door is going to lower theirs. So whether or not Jerome Powell raises or lower rates or the Fed says a word, the 30-year bond market dictates whether or not rates are going up or down. So you've had the 30-year bond market going up for quite some time. What do I mean by that? It was down here in the 12 handle, 112. It's gone all the way up to 120. It's an enormous spike in bonds. And if you ask me, you're looking at a bull flag right here, which we'll make a little thicker for you if we can, real fast. I think we're looking at a bull flag right here. And I think bonds will continue to go higher. And that is another reason to think that the stock market will remain propelled. Because if you've got a bull flag and you've got every other indication that bonds want to go higher, and they do actually go higher, what you'll find is stock market will appreciate. It will lower that. When bonds go up, interest rates go down. There's your possible bull flag. Now, picture this thing right here, a teeter-totter or a seesaw out in the park. You guys are out in the park right now. If you get on the seesaw, if there's a heavy person on one side, the other side goes up. Well, if bonds go up, interest rates go down. They're on the other side of the seesaw. That is an inherent relationship. The Fed does nothing, and that will still happen. So you've got interest rates dropping, which will help propel the stock market higher. What else is out there? We are on 12, right? So there's got to be a 13 chart here somewhere. There we go. Some proof in the pudding. So I just showed you a whole bunch of charts where commodities are going down, meaning the stock companies that are using those commodities to build a product are doing much better than they were when that raw material was expensive. Let's go to foodstuffs. I showed you how much foodstuffs have dropped. All the raw materials for food has dropped. Look at something like Chipotle. Cheap grains, cheap food supplies will continue to propel stocks like this one. How on earth is Chipotle over $3,000 if the price of inflation is so high they can't afford to make the food? It's nonsense. They're charging the same prices they were charging during COVID, with the price of raw materials being nothing compared to those days. And look at stock. In fact, one of the webinars that I did live for this very crowd for MetaStock, we were down here, the price of 1402, and I made a 3,000 call. And I said the geometry I taught you in that webinar a couple of months ago tells me CMG goes up to over 3,000. Look what happened. There's our profit target, 3,000. It was hit. Are you telling me that's happening because Chipotle is paying more for raw materials and losing money? Right? They're killing it. All right, so that's food stuff, Oscar. What about the other stuff? Well, let's go find out. On chart 14 is another one. Okay, so how come Dell Computers and almost all other companies that make a product that sell it are doing this? The chart's going up because supplies are cheaper while the high prices of tight supply chain during the COVID supply issues are still being charged on the shelves. This drives and will continue to drive stock prices higher. That is what's going to happen here, kids. That's where we're going for this very reason. And you can see it before your own eyes. This is not reasoning. I didn't read the newspapers and surmise this. I am a pure analyst. I just use charts to tell me what's going to happen, income market analysis. And what I am showing you is absolute proof that they will propel this thing higher over time. Nothing goes straight up. But they are going to propel this stock market higher. If this continues, the stock market will absolutely go higher. So what else is out there to look at? What are we on? Chart 14. There's a few more to go. Now, let's take you to the rubber band effect. This is what this video was about. I've been watching this happen for the last 3-4 weeks. Couldn't wait to do this video for you. So, this is the green bars represent the NASDAQ, the NQ future, NQ, actually U24. Let's change that. That has rolled, so that's a U. All right. And the blue chart represents the Dow Jones Transportation Average. Now, here's where this whole thing is going to sum up for you. The transportation average and the NASDAQ tend to run together, right? If you look, you've got the blue and the green basically together, a little bit apart, but they stay together. In fact, I'm going to use this as a measurement tool. The furthest apart these two have ever been were about here. Let's make that red so it's really noticeable. The furthest apart the transportation average and the NASDAQ have ever been is about here, in between these two lines. Generally, it's even closer than that. They stay with each other. And they stay with each other, and they stay with each other, and they stay with each other, and then look what starts to happen. Look at how this rubber band that used to show us the top and the bottom, look at it stretch. Baboof, baboof. Look at what happened. Now, what you're looking at is the rubber band had gotten so big, it went from here to here. This is the rubber band just 3 days ago. That's how far out it finally stretched. Okay? Now that rubber band has come in to this. This is all it is right now. This was the rubber band. Look at how it's getting better. So what's happening is instead of the transportation average dragging NASDAQ down, it's heading back up. The NASDAQ's heading towards it. It's going to give it nothing but power to push the NASDAQ higher. This is exactly what we wanted to see. And here's an interesting tidbit. Look at what's happening today. You have transportation average up 176, NASDAQ down 157. It's exactly what we would like to see. It's exactly what this webinar was built for over the weekend. It's what will tell us what happens. This happening right now, this rubber band going from this big to only this big, and eventually will get smaller again, like it used to be, will propel the markets higher. So that would be this. That should help continue to allow NASDAQ to be a raging bull. Nothing goes straight up. Right now, it's in a phase where it's catching up with or pulling the rubber band in. It's stretched so far, it's now pulling back. It's in that phase. That doesn't mean it's not going to continue going up. It will go up. Everything I just showed you tells us basically it has to go back up. So doesn't mean tomorrow. This is for the next few weeks out. I'm showing you this webinar is for the next few weeks out. So what else do we have? If that was looking good, that should make this look good. Everything I just showed you should continue to propel after we have this little catch up of the rubber band pulling back in. Everything I've just showed you should show us that we will move higher this year. Add to the fact that if you look at the Super Traders Almanac, or if you've been alive as long as I have watching markets, you recognize that almost never do we have a down year in the markets during the presidential election year. Add that to the stew. What else is out there? What are we on? 16. So what you have right now, S&P going up, NASDAQ going up, and well, overall, right? Maybe not today, but overall. And look, the Dow Industrials have gained some legs, started here, bounced again, gained more legs here, 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 and now it's looking to gain way more legs. In fact, it's had a nice strong up day. You could add another bar in today. It's up here. So what's happening is it's not a raging bull like NASDAQ and S&P, but it's starting to catch up, and that's just what we wanted to see. Now, that's a green bar, not a red bar. It doesn't represent a down day. This has been an up day all day today, by the way. So today's bar, which is not added in yet, I've done analysis up until Friday's close, so we will populate today's bar with a green fake bar just to show you what's going on out there right now. That will populate itself at the end of the day on the close. So you've got Dow Jones catching up. What else is doing that? We are on 17. The Dow Jones Transportation Average is catching up. This is the one that we needed to go. Why do I say that? Look right here. It's been going up like gangbusters. Up, 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 while you've got the NASDAQ tipping its hat just a little bit to come down and take away that way too far stretch of the rubber band. So it's happening right now. And when these guys get a little closer, they could explode again, once again, together. All right. So I hope I'm answering that question for you cats out there around the world that asked me. So what are we on? 18. Let's see what else is out there. Back to the rubber band effect. Now that you've seen all of that, you do see what's happening here, right? When these two get a little closer, we're set for more rally. That's what this stage is setting for, more rally. The rubber band has finally abated. It's getting back to normal. It's still overstretched, but it's getting back to normal, meaning we're going to continue higher. Let's see what else we have for you. So now that you've looked at all of that, let's go to the weeklies. And does anything on this chart look bearish to you at all whatsoever? Anything here would make you say to yourself, I think it's going to go down. I don't see anything like that. Do you? Now, this is a weekly chart, not a daily. So every one of these bars represents a full 5 days worth of trading. This is a solid, steady, nothing goes straight up, but continuing to rally type of market. Looks fantastic. So it could pull back maybe, but looks great. And let's see what the S&P looks like, because that's got to be here as well, right? Yep, the S&P weekly. Another one. I don't see anything about this market that wouldn't want me to tell you it is a raging bull. So as long as the rubber band continues to contract, NASDAQ and ES will be free to continue to run. What else do we have out there? Now, I showed you, you know what? We talked about raw materials getting cheaper, meaning the price of stocks are going up because they're still charging those high prices on the shelves in supermarkets for those products that are now cheaper to create. There's this talk, oh, Oscar, they made the wage go up to $20. So if you were paying $17.50 for people and now you're paying $20, that doesn't even get close to how much money you've saved on raw materials. You know what I'm saying? That is total BS when they tell you, oh, the price of labor went up $3. We can't afford. You know, the crude industry used to make a lot of money when crude was $42. And then one day it went up to $80, $90 for the first time in its life. And you know what the crude industry said with that by the end of that year? We can't make any money unless it's at $80. Oh, really? Oh, really? So in other words, last year, you made a ton of money at $42. Are you telling me the costs went up so skyrocketing high that you can't make money now under $80? So it's the same thing that the foodstuff companies do. They could make a lot of money with less priced products right now, but they're making money hand over fist, and it's driving the stocks much higher. So that's a lot of what's going on out there, kids. That is a very simple explanation of what's happening. Now we're going to add something to it. You've got the raw materials getting cheaper. Business in this country is going nuts. You've got metals dropping, interest rates dropping, and what else is going on out there? Don't forget this. A couple of months back, I did something, and I told you we are not going to go down for a long time. Do you know why? Because welcome to the AI revolution. Does anyone remember the webinar? I showed you about 15 alternative charts, alternative markets to NVIDIA because it was an $800, $1,000 stock, and we couldn't afford that. So we were looking for alternatives. Granted, it did a 10-to-1 split. Now it's $127. But look at the chart. This isn't going to stop. Now, let me explain something. I lived through all of these. When I started, I drew point and figure charts with pencil on graph paper. Computers didn't exist on the trading floors. There were mainframe IBM computers in air-conditioned rooms, nothing on your desktop when I started in this business. When computers finally hit the scene and became public, the stock market went from almost 6 to 7, about 6.5 years, almost straight up. Nothing goes straight up, little pullbacks, almost straight up for 6 years before finally all that power of new computers was finally in the market and we had a pullback. Does anybody remember when the internet came out in March of 94? We went almost exclusively straight up until 2000, 2001 with the dot-com bubble. Almost 7 straight years. The AI revolution, which I explained to everybody in the beginning of this year in a long live webinar, AI is only in year 2, kids. This is just a baby. This push is going to push our markets 5 more years. It is enormous. It's equally as big as when the internet itself came out. It will just go on for a few more years. So if you want to add that, plus if you think it's just NVIDIA, and nothing goes straight up, of course, it's not just NVIDIA. It's all those stocks I showed you in that AI webinar I did for you a few months back. I pulled a random one out of my list of 15 and look at how high it's gone since I showed it to you guys, which was down here. It's gone up dramatically. It's just another AI alternative if you can't afford the high-flying AI stocks. But that is what's going on out there, kids. That is what's happening. You've got AI pushing us higher. You've got the cost of raw materials going lower, pushing us higher. You've got the high price of goods on the shelf that haven't been lowered, pushing us higher. And guess what will happen if they lower their prices? Let's say they go into a price war and Ronzoni starts fighting with, I don't know, whatever the hell other companies out there. And they start doing a price war. Well, they'll still make a lot of money. You know why? They'll end up selling even more product in the beginning than they were at the high prices, and their stock will still go up. This is honeymoon time, kids. We just need one thing to change. Now, that is about the only thing that I've noticed that is actually giving us some trouble, and we'll go back to it in just a moment. This is a problem. It is the only problem left that I can find technically, however, so we can still move higher. If you can get crude to do this, the stock market will simply explode. the last thing Powell needs to do is lower rates. We all have short-term memories. If you guys look back at videos exactly to the day, January 1st, 2 years ago, I started to do videos about this. We're in this big booming bull market. It's over. We were literally at the high of the booming bull market the day I started those videos. It's over. Why, Oscar? Because they're going to start raising rates. Because we've got a runaway train. The stock market is this runaway train. It will not stop. It's going so fast right now that the wheels, you can see friction red coming off the wheels, and it's going so fast. So the Fed came in 2 years ago and put the brakes on by raising interest rates. It slowed the market down. Now we're back at all-time new highs. What do you think is going to happen if they lower rates? You know what I mean? It's just going to go through the roof. The Fed can't lower rates at this point, even though maybe it could help. We don't need the help. Look at what I just showed you. So could it get a little cheaper for you to buy a house? Yes, but guess what? Anybody who wasn't born in 2000 and became of age in 2020 to 24 would recognize that the United States has ran on 5 to 8% interest rates its entire life, forever. 240, 230 out of 250 years, we've always had rates there. Then COVID hit, rates went down to almost zero. Now rates are higher, but the people that were born in 2000, you know, in 2024, they're looking at this going, what are these high rates? We can't live like this. Well, you know what? Yes, you can. This country thrived dramatically its whole existence with rates up here. So you don't really need to lower rates to keep this thing moving. Lowering rates will blast it off, but you don't need to lower rates to keep this thing moving. Is there anything else that we should have in this list? So I think of all the stuff I wanted to actually present to you to give you my case why this thing will continue to go higher, I have just shown you those charts. I've presented my case to you. That is what's coming next. You've got the AI revolution pushing this whole thing. You've got the raw materials dropping, helping dramatically. They're still charging more higher prices on the shelves that they had to charge when their raw materials were more expensive, but now they're cheaper. This all amounts to higher. Add to that my year-end calls are higher than we are now. This is going higher, kids. Nothing goes straight up. That is my thesis for today. That is what I wanted to present to you. I am finished with my presentation today. Jeff, don't know what you want to do at the time, but that is what I wanted to show. Now, if you guys if you thought that was cool, if you want to learn more, just come down to livewithoscar.com, as I mentioned, and come to my free trading room. In fact, it's probably this window. Come to my free trading room, hang out with me. No credit cards would be required to get you in there, and I can help you in 1,000 ways. Just come join me at livewithoscar.com. And if you're really serious about trading and you want to come out to my 4-day seminar, that will start in 23 days. It's right around the 25th of July. You would get into Vegas on a Thursday night. You're going to work with me all day Friday into the evening, all day Saturday, all day Sunday, all day Monday. By Sunday night, you are going to be calling Monday's trades for me in real time. You will get them right. If you don't get them right, I'll kidnap you and keep you till Tuesday because no one leaves Vegas without getting it right. If you want to join my camp, I will also send you home with a brand new laptop pre-programmed by me. So everything we study for 4 days together is in that laptop. And then when you go home, we have continued education from OmniCamp because I've got a second trading room, which most of you guys don't even know about. That's called the Alumni Trading Room. And we want to go in there to answer questions or speak about the inner workings of the Omni that I would have taught you out here in Vegas. We go into this room where nobody gathers but us. We keep it quiet. We go in there and we continue to educate you. So it's continued education for as long as you would like to do this. And if you want to fill out an application and have me call you back on the telephone, just simply go to omnibootcamp.com, click anywhere where it says inquire, and you can automatically start very quickly, a couple of pieces of information, and you can set a time where we will speak on the telephone together. Jeff, with that, I yield back my time to you unless there are some questions I can help you with.
We have some questions, and you can help me with them.
All right.
If that's okay.
Of course.
All right. Let's see. William was hoping you could give an outlook on NVIDIA.
Okay.
NVDA.
I think we just covered that, right? Wasn't NVIDIA here?
Oh, okay.
Yeah, I think we just looked at it, but I'll pull it back up to show it to you. So on our NVIDIA chart, I was using this to express that the AI push is going on for at least 4 to 5 more years. At least it will go on for. Because I lived through the computer age, which went for 6 or 7 years. I lived through them when they brought out the internet. In fact, you can look this up on the Wayback Machine. I had the 3rd website on the internet for trading markets, for trading the stock market in 1994. Been on the internet ever since. So I remember what happened with that. And this chart basically showing you that what happened in the 70s and 80s, well, mostly 80s with computers, what happened in 1994 with the internet is happening now with AI. And this is one of the best charts to show that to you on. So yes, that should continue higher. And there's no reason why you wouldn't want to believe in a chart that looks like this, that has the best technology that's ever been invented in the last 50 years and has a pretty decent channel, or at least trend line, telling it that it's probably running into support over the next couple of days. So I would be a buyer of dips in that market for sure.
Cool. Let's see. Did you look at Bitcoin? Silver wanted to say, if you thought Bitcoin is crashing.
Well, here's the thing about Bitcoin. We started to show this a few days back when we were here, and none of these bars existed yet. We were just starting to challenge the average. And what I said to my traders was, let's take a look at this average. It goes back endlessly working on the market. Endlessly it works. No matter where you look at it, it actually worked really well. So what I explained a few days back is that if we get under that average, it will literally be the first time you did not hold the average. And if that's the case, we get to the bottom of the flag. Now that information was given out when we were here. Look at the bottom of the flag. We're almost there already. So analysis speaks to you. It will tell you what's going to happen next. If you've got good eyes and you don't inject your own brain into your thoughts into what you see, if you call what you see, these charts are just unbelievable. They will always tell you what's going to happen next.
All right. Casey says you're fantastic. I agree.
I can help you. If this has helped you in any way, then I am doing my job. What this presentation was for mostly was to set you up for maybe the whole rest of this year. Nothing goes straight up, but you see what I showed you, right? You got some more upside this year coming.
Carlos wants to know, and I'm going to look for this, but he wants to know in order for me to find it, he says, can you give me a copy of the webinar where you gave alternative AI stocks? I remember that webinar. I was there. Do you remember when it was? I think it was February.
Yes. In fact, what I'll do for you is I will go through here, and I probably can't do it at this moment, of course, but it's going to be one of these listed in here in my chain of endless videos that come out every night. So somewhere in this list, when it shows itself, isn't that interesting? That's YouTube, kids, not me. My stuff my stuff works well. All right. So it's going to be one of these, but absolutely I will be able to find it.
Yeah. Let's see. Cody says, do you have any opinions about the US dollar?
So actually, yes. US dollar is part of my presentation. I just skipped over it because I don't want to bore you guys with it. Let me show it to you anyway.
It's never boring when you're doing it, Oscar.
All right. So the US dollar, which I promise is in this list, but there's so many. Come on, you're killing me. Does anyone else see it? I know it's in my list. All right, let's do it the old-fashioned way. I had a bunch of notes on it I wanted to show you, but whatever. We'll just do it this way. So the dollar index, and that's not going to get us there. DXY is dollar index on yours, right? Yeah, sure is.
I think it's dot. Oh, yeah, you found it.
You're right. Sorry, we need the dot on this one. Sorry about that, kids. Every symbol is different when it comes to commodities. It depends on what market you're working on. So let's label this for you very quickly. dot DXY. All right, so this is what we're looking at. And here's what I've been telling people all along, because some people are actually worried. Let me just pull that label back in first. Some people are actually worried that the dollar moving up is a problem. But I have to say it's actually not. And here's why. Two reasons. Of course, we'll just draw a line because it looks beautiful on the chart. It shows that we're moving higher, right? Which is what we want to see. So first off, it just depicts that we are moving towards the upside. And when dollars are moving up, guess what? Whether you realize it or not, you are not feeling inflation in the United States as much as just about every other country. Because you see how your dollar's going up? It's also going up with prices. So when the dollar goes up like this, we're about the only country in the world during inflation that actually gets a little bit of a padding on our inflation. And the dollar goes up more so in this case because we've got higher interest rates than the rest of the world. And we've got great stocks moving up. And if you are not, by the way, if you are not in the United States, you've got to buy US dollars in order to buy US stocks and bonds. So the reason why this should not scare you is that exact reason. You need to buy US dollars to buy our stocks and bonds. So this going up is actually good as long as it doesn't go up too far. It's a fantastic thing for Americans, for basically maybe for the world. I don't know. Let's just fix that little typo. So, but there is another thing. Let's say you're a company in Europe. Now, you might have noticed I didn't bring the Russell into this picture at all. You know why? Because the Russell is more closely tied to Europe than our other four major indices. And you know what? That doesn't tell us the picture of the United States. That tells us the doom and gloom going on in Europe. So I didn't even bother to put the Russell into this because Europe is having a difficult time. Here's what I mean by that. This would be your currency if you were not in the US dollar right now. This is the euro. All right, so let's label that real fast. Crazy symbol, but that's it. All right, so imagine going to the supermarket with this high inflationary prices that they don't need to charge anymore, and your dollar is in this direction. That's not good. The rest of this world is feeling this way more than Americans with US dollars. Not that I don't feel for you guys. I absolutely do. We're not creating this inflation. Well, you know, we kind of are. We're keeping the price of crude high. That's a whole nother story. If we could get the price of crude down, which was my thesis, the end of my thesis is all you need is crude to come down for a total blast off of the stock market. If you could get crude to come down, inflation comes down immediately. But not in every country, because if your currency has been going down, inflation doesn't abate as quickly for you as it does when your currency is going up. But you are blessed if you've got US dollars at this time. And if you are a US factory, boy, are you having a good time right now. European factories, that's why the Russell's going down, and that's why the Euro's going down. They're having a much tougher time. Anything else I can help you with? Any other questions out there, sir?
Cody was hoping to look at live cattle.
Say it again.
Live cattle?
So can you actually get a live cattle chart anymore? I don't even know what the symbol is. It's hard to find.
Well, let's see.
Let's see, July, August, Q4. Yeah, there you go.
There you go. It might be. It might require futures exchanges. We'll find out.
There's your live cattle right there. So live cattle has been, if you look at this, it was really expensive for a while. It's been on nothing but a roller coaster. You see how it's just been a roller coaster. Really no rhyme or reason that I have for this live cattle. I don't really trade it like I used to. I used to trade lean hogs, live hogs. Well, lean before they became lean. They were live hogs. I used to trade pork bellies. I used to trade everything you could think of. But I have to say, in the last 10 years, I don't think I've traded the meat market in 10 years. So, and it's not in vogue anymore. The street doesn't trade it. So here's what I'll tell you about this. If you're not an end user, you don't belong in anything like this. You do not belong in something like live cattle or anything like that. If you're not an end user, stay away from markets like this. It's just not the place for us who are trying to speculate to be. It's always been my opinion of the meat markets. And you know what? I might as well throw it out there at you. I was literally a 19-year-old kid down on the trading floor, and I had a mentor, Dominic Orsiello, and I'm standing behind him. He's in the pit screaming and yelling, and I'm a kid holding the tickets. And he can see I'm looking at the pork bellies board. So I run over and I grab the phone and I buy 5 pork bellies. And it goes straight up. Boom, 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 boom. It goes up where I'm up like $3,000. And I grab the phone and I scream, sell out 5 at the market. And I hang up and I watch and I get my fill back 2 minutes later, limit down. I lost $10,000. And Dominic Orsiello looks right down at me and he goes, hey, kid, don't ever trade anything that screws. You know why? The only thing that's going to get screwed in the end will be you. He was talking about live hogs, live cattle, anything of that nature. He told me that 43 years ago. I think he's still right. So cool. Be careful in those live markets.
William wants to know if you have a favorite Mag 7 stock to buy.
No, not really. I am more in tune to want to buy the index than any single stock. In fact, I'm going to give you a quick dissertation on that. There are people all the time that ask me if I want to buy a single stock. And you know what I tell them? This is what you should be buying over any single stock. Let me show you. If you're going to buy anything at all, buy the S&P. Do you know why? It's 500 of the best companies in the world. And here's what you don't have to do if you think the market's going up and you buy long S&P. You don't have to convince yourself that the company's not going to lose a government contract on a Sunday night and you're going to find out Monday that the single stock company that you bought is tanking. You got to believe that there's no cooking of the books. No one's going to find out that there's some shenanigans going on. You got to believe that the CEO is not going to stop his car on the Verrazano Bridge at 7:30 in the morning and leap off because his wife was cheating on him, so to speak. You know, there's so many scenarios that can happen when you put your money behind a single company. Now, if you trade the S&P 500 of the best companies in the world, and if it was supposed to go up today, or at least 500 of the best companies in our country, if it was supposed to go up today, you could take 3 CEOs, let them hold hands on the Verrazano Bridge, jump off collectively together, and it'll still go up that day if that's what it was meant to do. So I try to talk people out of single stocks all the time, and I tell them, if you are looking to trade the market, if you think the market's going up, trade the S&P, not a single stock. It's much safer. And guess what? It's 24 hours a day, 23 hours a day. You can always get out. If news comes out at 4 in the morning, you can't get out of a single stock. You can get out of your S&P like that. It's a much safer place to play.
All right, I think we have time for one more. NG.
Okay, natural gas. So if you ask me, natural gas belongs at the price of $1. I've been saying this for 5 years. It will get there eventually. Let's go look for it. I believe on this machine, it's probably NG. We're probably trading August, and it's a 2.4, right? Yes, that is. So natural gas, if we go back far enough, used to be up here, right? Look at how far it's come down so far. And if I can draw a trend line on that, just to illustrate, just to get it in there. So look at how far we've come down. That is a wonderful thing. This just, by the way, this just adds to my whole thesis about stuff getting cheap enough where they could make products a lot cheaper now than they used to. But look at that drop in pricing. And looks to me like natural gas will continue eventually to spiral down to $1. Nothing goes straight down, right? As I say every time I talk about a chart, this didn't go straight down, right? It went like this, it went like that, and then it came and went like this, and then all of a sudden you had, whoa, so nothing goes straight down. But this will continue to work its way, if you ask me. This will continue to work its way. Oh, let's redo that, please. We don't want the scale on the left. We want the scale back on the right where it was. Oh, thank you so much. This will continue to work its way to the bottom of this channel. Now, of course, there's geopolitical, and if somehow we end up with a change in our government, one side loves gas, natural gas and crude, the other side doesn't. So imagine what happens here if we get somebody who loves crude and wants to pump out more crude in the White House. This will be dropping dramatically. So I think I've been saying this for 5 years. It's worth $1. We get it for free when we shale. It literally comes out of the ground for free. The only cost is to store it and move it around. And because we don't shell as much, all right, the price isn't plummeting. But let's see what happens if there's a presidential change and whoever happens to be in wants to pump some crude. I think natural gas would get extremely cheap.
All right, and we did find that YouTube and shared it for the last conversation.
Very good. That's got fantastic information on that, by the way. I think you guys will appreciate it if you watch that.
Will you spoil us with one more?
Sure. Silver. Hi-ho, silver. So not only will I spoil you with silver, but I'll show you that I carry a coin in my pocket since I'm a kid, since I started on the exchange. I started in silver and gold, standing in the pit. I've been carrying a Krugerrand and a silver dollar in my pocket since I'm a kid. And you know what I'll tell you about silver? Stay away. Poison a widowmaker. But let's go look at it. Silver's insanity. I've seen more people lose in silver than almost any other market. It's July, September, right? Let's try September. That'll do it. The widowmaker, there she stands. So what I will normally, right off the bat, what I'll say about silver all the time is this. Just keep this in mind. Silver sort of moves in sympathy with gold. It doesn't really make moves on its own. If gold's going down, silver's not going up. It is not happening. There's a lot of silver out there. Oh, a lot of silver out there. And check this out. In 1982, I started in the business, right? And my mentor, who I mentioned earlier, Dominic Orsiello, I started in the silver pit. He said, kid, I've never seen silver do anything except for stay at the same price it was when I started 40 years ago. He started in the 40s, right? So I started in 1982. And the price of silver basically was right here when I started, right about here. So it came down from the Hunt Brothers and it went down to $3 or $4 and it stayed there for a while. Now, we are in 2024. And you know what I can say? I've been in the business 43 years, and you know where silver is? It's in the same spot. It's in the same spot it's ever been for my entire career. Now, why I'm bringing that up is if you pulled up something like gold, which traded right next to silver in 1982, gold is worth $2,200 and change, right? That's not gold. I don't know what that was. I don't know what that was. It just came up. It wasn't gold market. Let's do that. All right, so it wasn't the August gold. Gold is now worth $2,338. When I started, I'm going to take you there if it'll show us, if it'll go back for it. No, well, it won't go back. When I started, the price of gold was $265. That was the price of gold. So gold was $265. Now gold's $2,300. But silver is in the same place. Gold was $265. It's worth 10 times what it used to be worth. And silver is in the same place. Let me show you another one. Watch this one. When I started in the business, this is copper. Copper. You know how much it was? Let me draw this out for you. That won't work. It was 65 cents. I kid you not, copper was 65 cents when I started. The price of copper right now is $4.43. You know where silver is? In the same place. So when he told me 43 years ago that silver is a dog and it will never go anywhere, he's been right for my entire career. Because copper right now is $4.43, $4.43. It was 65 cents. Gold was $265. It's $2,300. Silver was $23. It's trading somewhere in the 20s right now. So what I can tell you about silver is when it sticks its ugly head up, let's go back to silver. Once again, an old adage from the trading floor. You guys in the trading room know what's coming. When silver sticks its ugly head up, this is what I've been taught my whole life. Take out your lawnmower and chop it off. That's what I've been taught my whole life when it comes to trading silver. So I will give you that same sage advice that's helped me for my entire career. It's a dog.
All right. Last question. How do people find out about your boot camp?
So in order to find out about my boot camp, thank you very much for that. We can literally just go to Omni Boot Camp, which I'm there already, but I'll just show you how simple it is to get there. Just go to omnibootcamp.com and you can just click on anything. Inquire here, start my application, you name it, it just keeps on going. Good testimonials are in there, all kinds of great stuff from people that have come out to see me. So just go to omnibootcamp.com and fill out your application. If you want, watch this video. It's a pretty cool video. It'll explain a lot about what I do and how we do it here. And then, of course, go to livewithoscar.com and you can join me in my trading room, which is where I am always at, where I'm at right now, where I sat through this whole webinar so my Omniacs around the world can still see what's going on. This is free to you. I offer you an olive branch to come on in and see what I can do for you here.
All right. Good job. Thanks, Oscar. So I did put those in the chat for everybody. Live with Oscar and the omnibootcamp.com. All right. That's it. Thank you very much.
I thank you guys. Let me just leave the chart up here before I say goodbye. And
sure.
That transportation average coming together with the NASDAQ, it's a beautiful thing for us kids. Be waiting for it. Thank you so much for tuning in. And I will say this to you, what I try to tell my Omniacs at all times, put a stop in before you get into a trade. And if that stop's getting threatened, don't pick up your keyboard and start hitting buttons. Don't do that. Don't change orders. Say this to yourselves over and over again because I know it'll help. Are you with me? Come on, kids. You know what's coming, right? 1, 2, 3. Stops are
in.
Yeah, dig it. Are you ready? Emotions are out. Yes, thank you so much. That will help you when you're in a bad trade, I promise. Jeff, MetaStock, thank you so much. We love you guys.
Thanks, Oscar. We really appreciate it.
Much appreciated. And I enjoyed myself dramatically.
Let me do this. Okay. We also, let me go ahead and make me the presenter real quick. Let's do this. We did sit down and we actually recorded. We do appreciate all of the work Oscar does. Such a good proponent of MetaStock over the years and has been using it. I remember I talked to him way back when I was in the sales team, but we did sit down and we did a training class with him. As you know, he does a lot of trend lines. He looks at a lot of technical formations, and we basically did a master class with him that talks about how to properly drop a chart, how to put trend lines, how to find support and resistance areas. It was about 3 hours of instruction, and we're going to do a special on it because we're going to do a special on everything. So normally the class that we recorded is $499. If you want to subscribe to it, you can get instant access for $350. You can do that by calling us at 800-882-3040, or you can go to metastock.com/saleskchat, or you can go to metastock.com/summit promo and get it there too. So there you go. All right, very cool. Again, I want to say thank you to Stocks and Commodities for sponsoring the event. Really, really appreciate them. Get a free issue if you haven't. metastock.com/traders-summit. And of course, we're MetaStock. Our last presenter today is Tushar Chande. Tushar actually did a lot of work over the years. He's worked with Stanley Kroll. He's written a couple books, the Beyond Technical Analysis, The New Technical Trader. I remember a couple years ago, Tushar called me and he's like, "Hey, my name's Tushar," and I'm like, "I know who you are." We had talked a little bit about Robert Denman and kind of the development that he did with the performance systems. And a couple of the systems that were in that Performance Systems Plus were actually developed by Tushar Chande with the help of Stanley Kroll. And one of those was combining stochastics with RSI. I can't remember the name of the other one right now because I'm talking about it, so you know how that goes. But the reason I was so familiar with Tushar is those systems would perform really, really well when we were doing back tests over the years. And so Tushar's always stood out to me as somebody that's kind of a technician's technician. He really, really is super intelligent when it comes to kind of designing indicators and systems and methodologies. And that's something that always comes across when he talks to us. So he's going to come in, he's going to talk a little bit about kind of the methodologies that he does, kind of the way that he looks at the market. And he's going to do a great job because he always does. So, hey, Tushar, how are you?
Oh, very well. Thank you, Jeffrey, for a very good, very generous introduction. How's everybody?
We're doing great. I do have a question for you, though.
Go ahead.
How are you aging backwards?
Yes, it's an ancient Indian secret.
I can now, like, I'm losing half of my hair. I got all gray. You look like younger every time I see you. I swear. I swear.
Thank you.
I can see your screen.
Okay, can you see my screen?
Mm-hmm.
Okay.
I can see you too.
All right. Well, thank you everybody for stopping by. I really appreciate you being here. End of a long day on the East Coast. Tough act to follow. I mean, Oscar's like fantastic. I was enjoying watching, as he took us through his charts, and then all day long, lots of really great presentations. So my presentations are really a bit different because, as Jeff said, I'm more from a systems point of view. I used to be a CTA, so I come from the systematic trading world, and so I hope I can convince you that rather than do you want to swing it or do you want to wing it, and I think that I would like to suggest that you use a more systematic approach. So let's talk about that. So today I'll talk about machine learning with the Chande trend meter, which is one of the indicators in the complete toolkit, and stochastic RSI, which is something I invented many moons ago. And let's see how it works. So let's do a little housekeeping. You know, the usual disclaimer, there's risk of loss in trading. I'll show you hypothetical results. So there are many, many limitations for hypothetical performance results. So, you know, always take them with a grain of salt and so forth. And then check this out. I have a Substack. Please sign up. All kinds of interesting things to talk about. I also have a YouTube channel. We talk about topical things and not so topical things. For example, my most recent post was about would NVIDIA get to 200? And in a previous talk, I had established a target around 1350. And of course, we got to 1400, a little bit above. Anyway, so let's get started. And just one last item. If this is a link to the talk I gave about a few weeks ago, starting in 804, the very detailed discussion of the package and systems. All right. So again, thank you, everybody. I know it might get it'll be very different from what Oscar was talking about. So just hang in there and let's see what we discover together. All right. So the goal is profitability, not perfection. And we want to trade well for a long time. So we want to recognize that we're not going to have a perfect trade every single time, but the goal is to be profitable over a long period of time. And if you've been listening earlier in the day, people are suggesting the same idea that kind of have to think long term. Okay, let's look at some what are the problems we're trying to solve. So let's say you're a new trader, you've never traded before. So the first question you have to answer is what to trade. So if you looked at the various charts that we saw from Oscar, you could be trading this or that or that. But I'll sort of assume that you're not trading futures, but mostly stocks or ETFs. And the problem there is that you somehow have to reduce from thousands of options to tens of options. So we don't want to trade or worry about hundreds and thousands of stocks. We want to bring it down to maybe a dozen or a couple of dozen. And then the second thing is how to trade. So here I'm going to recommend a trend following approach, and you'll see why. And I call it top scholar, which is take our profits slowly and cut off losses at once. So whether you listen to Sonny Harris or anyone else today, they all basically refer to the same thing. And if you're a new trader, you need to be, or any trader, you have to answer three questions, right? What are your entry rule or rules or entry conditions? Then what are your exit rule or rules or conditions? And then what's your trade sizing? Like what's your risk control? And rather than making sort of decisions on the fly, I'd like to suggest that you sort of pre-package everything together. So before you start your trade, you know where you're going to get in, where you're going to get out, and what your trade size is going to be. And let me show you why this makes sense. All right. So this is let's just dive into some testing. Don't get worried about exactly what this means, but I'll explain as we go along. So this is a test using default values in MetaStock. I use the Chande trend meter as the entry. So we entered when the CTM was above 90. And then this was a 10-minute time interval. And we'll use all the stocks in the S&P 500. So the next three charts will be all stocks in the S&P 500, but we'll change the time interval. So this is a 10-minute charts on the S&P 500 trend following system. So two things to remember: when a market is profitable, you get a green bar above zero. When a market is unprofitable, you get a red bar below zero. And here, if you look at it, the scales are sort of related. This is about minus 8,000 to plus 12,000. And if you just look casually, you'll see there are more red bars than green bars, or about the same number of red bars and green bars. So that's pretty reasonable. Same test with the CTM as the entry only, and we have a trend following exit. But now we have a 60-minute chart. Subtly, what can you detect, right? You see there are many more green bars than red bars, and you see the amplitude of the green bars has gone up. The peak here is 18,000 versus 12,000. But the downside has remained about the same. So just by increasing our time horizon, we've increased our net profitability. And then finally, I've got the same rules, the same model in exactly the same way, but this time we're going to use daily data. And what do you observe? We have a lot more green bars than red bars. So overall, we're making more money. And if you look at the upper bound here, this 110,000. So the winners, we made a lot of money on them. So there were a few of them, but we made tons of money. And the downside has stayed about the same. So we've kept about the same downside risk, but we've really expanded the amplitude of profits on the upside by simply increasing our time horizon, right? Now here we have a completely mechanical system. The same rules are being applied. There's no discretion. And these are very standard approaches. And what does the system testing tell us? We've not made any earth-shattering assumptions. And this is sort of an overview. So don't get hung up on the numbers. These are nominal numbers. So for the 10-minute, the nominal profit was 176,000 and the loss was minus 220,000. For the 60-minute, the overall net profit of trading all the stocks for a 10-year period was, say, 600,000 versus, say, minus 211,000. But for the daily data, it went from 2.6 million, say 2.7 million, to about minus, say, 500 million or 500,000. So you can see that we've completely changed the expectation of profitability using different time intervals, but the same number of bars or candles, simply by going to daily data. The other thing to note is that we have a huge number of trades. So most of the time when you see a presentation, they'll cherry pick some chart and say, look, this worked great here. I'm showing it to you warts and all because it doesn't work great every single time. But I have a huge number of trades. I have 15,000 trades on the daily data, 6,000, 5,000, tremendously huge number of trades. And then about half or a little more than half are profitable, which kind of makes sense. The average win-loss was around 2, which also is sort of convenient. But this is interesting here. This is, say, the net profit divided by the net loss. It's about, say, 5.7 for the daily data, then it drops, say, to half, to, say, 2.8 for the 60-minute data, and then it's down to 0.8 for the 10-minute data. So what you have to recognize is that if there is, the larger this number, the more likely you are to be profitable, even if you allow for slippage and commissions. So in the test, it's nominal. We're not really allowing for cost of trading, but our profit margins are so high as you go to daily data that you don't have to worry about the cost of trading. You're still going to be profitable. So this is an important lesson for all of you people that want to kind of shrink your time horizon and trade shorter and shorter time frames. You really need to have significantly higher win-loss ratio or a significantly higher number of profitable trades to be significantly profitable, simply because you see that the amplitude is shrinking and the winning amplitude and the losing amplitude are coming closer and closer together. So hopefully that hasn't confused you or turned you off. So I wanted to convince myself and convince you that this approach using my indicators makes sense. So I said, how would I train a computer? So I said, let's use a machine learning approach. So this is a simple classification problem. We're just trying to decide, is it trending or not trending? If it's trending, we can use trend following. If it's not trending, we can use counter trend. And we already know from what I've shown you a little bit that high momentum goes with high returns and low momentum goes with low returns. So let's see whether we can write the rules. So this is what we're trying to do. Initially, we said, we want to shrink the universe. We want to reduce the number of items we want to worry about. So let's say we took about 500 stocks in the S&P, maybe it's 503 now, and we use this as a filter, the Chande trend meter and the stochastic RSI, and we want to reduce it to a small number of stocks. So even if you want to use discretion, and you say, I'm just getting started, I have a small account, just this process will allow you to hone in on stocks that are trending, and it'll increase the chances of being successful. So what is stochastic RSI? This is a very brief overview. The RSI itself is basically upside momentum divided by upside momentum plus downside momentum, where momentum is daily price change. And then the stochastic is sort of a range location oscillator over X days. So at the top of the range, you're at 100. At the bottom of the range, you're at 0. So the stochastic RSI combines those ideas. So it's asking the question, where is the RSI within its X-day range? So the stochastic RSI is at 100 when the RSI is at the top of the range, i.e. market is rising. And at downtrend, the stochastic RSI is 0 because RSI itself is falling. So that's sort of the stochastic RSI. And what's the Chande trend meter? Now, imagine you could plot all kinds of indicators, and down below I have daily data for Costco, and I plotted the very many different indicators that I use in here. They're all on different scales and different, how do you weight them and so on. But the bottom line is that you can take many different indicators with different time frames, different parameter sets, and different underlying smoothing and construction, and convert them all into a single line, right? So you've taken all these lines, and instead of worrying about what they mean, we're going to reduce it to a single line. So that's very, very powerful. So imagine that you look at this chart, there's no doubt that this number, the trend meter, is closer to 100 or is closer to 0, right? It's above 80 or below 20. There's no interpretation required because it's right there for you. So you can use it in your scans, and you can use it to find things that are trending. So for example, here we know that Costco was trending, and you see the value is close to 100. And then we have a little breakout here. So we had some back and forth, but the values are above 80. Now remember, this is only an entry. We just want to use a trend meter for entry, and then we have an exit. So once we've entered the trade, we don't really care what's happening up here. We just want to use a trailing stop. So that's kind of the vision of what the trend meter is. So here what I've done is I've taken NVIDIA, which we all know has been trending like crazy. And then I plotted the trend meter, and I plotted the stochastic RSI, which is a 100-bar stochastic and a 20-bar RSI of the 100-day stochastic or 100-bar stochastic. And they kind of look similar, and they are different. So for example, NVIDIA trending strongly, the trend meter is near 100, so definitely an uptrend. You see we had a little hiccup here just before earnings. The stochastic RSI came all the way down to 0. So the stochastic RSI is moving a lot faster than the trend meter. So for example, in this downtrend here, the stochastic is below 20. The trend meter is still in the neutral zone. So clearly it has got a lot higher level of damping. So there are different ways of looking at the market, market momentum, and the trend meter dampens it more than the stochastic RSI, this particular version of the stochastic RSI. So we can put it to different uses, but bottom line is, if you have a strong uptrend, both will be above 80, then a strong downtrend, both will be below 20. And that's really all we need to know. So in terms of machine learning, there are like a million references. I just put one out here in case anyone wants to go out and look. The main thing here is that this is what's called supervised learning techniques, and linear regression is one of them, or we can use linear regression or logistic regression. So I know we looked at charts which is very casual and sort of hand waving or intuitive. Now we're going to make it more quantitative by you doing linear regression on historical data. So we're going to move from sort of a touchy-feely to more concrete in the next few slides. So whether we use linear regression or logistic regression is the same thing or similar results. We're doing supervised learning. That is, we tell the machine what the data mean. That is, we annotate each case. We say, yes, this is trending or this is not trending. And then after we fit the regression, we want to look for accuracy. That is, how well is the linear regression able to identify strongly trending markets, whether up or down. And the data can be historical returns, generally speaking, and we can also try to look at future returns. But for portfolio purposes, the historical data are sufficient. So let's look at that. So to make life easier, I just looked at 3 stocks: Apple, Costco, and Intel. These are well-known names. And I only looked at 5 years of data. And essentially, the independent variable are multi-period returns. Just, well, what does a return like over multiple periods? It's an open scale. And momentum was, I used the 2 variables, stochastic RSI and the trend meter. But the important thing to remember is that these are on a fixed scale, where this is on an open scale. So what happened? All right, so I know this is a very complicated slide, but I'll walk you through it. This is the summary of linear regression results. First of all, there are a lot of data points, 5 years of data. If you look at the second row here, the numbers are over, say, 75, close to 80 or 90, which means that the linear regression described the data pretty well. It fit the data well. The F statistic was like monstrously high, like 2000, so very, very strong fit, linear fit. And then these bottom 2 lines give us some numbers that are positive and large, much greater than 2. So it tells you that the linear regression fit the data pretty well. That is, when we said the CTM versus returns, we got a very good fit. And I'll show you what that means. And then these are forward returns. That is, we stop here and we look forward what happened over the next 20 days or the next 15 days. And fewer data points because we're looking forward. You see the R-square value has dropped. It was like near 90. Now it's down, say, around 20 or lower. The F statistic is still high. So we got a good explanatory power. But you see that the numbers here are much smaller. So what that means is, as an entry, it works great. But then you can't use it as an exit. You could use something else for an exit because eventually it's going to roll over. And we know that happens with trends. All right. So if you're not confused or you're not forgotten or not fallen off the edge of the table, let's look at a chart. So this is vertical axis here is multi-period return for Apple. And this is the stochastic RSI. We know the value goes from 0 to 100. So for a value of 0, you see there are the number of dots because this is an open scale for return, but a closed scale for the stochastic RSI. There's a pretty good linear relationship between from left to right, but there's a fair amount of scatter in the data. And then at 100, again, we get a number of points at 100, because remember, this is a closed scale versus an open scale. And the R-squared value, again, is pretty high. So if you just look at this chart and say, yeah, there's a straight line from left to right, and it's rising. So when the stochastic value is low, we get like lots of negative returns or strong negative multi-period returns. When stochastic value is at 100, we get strong positive multi-period returns. So it's as simple as that. In the middle, we kind of have some noise. So, okay, we won't worry about it. We'll look at the extreme values. So that's the lesson. That is, we can train a machine to say that it's trending if the stochastic value is, say, below 20 and above 80. So if you look at this area here and the lower left-hand side over here. This is the multi-period return for Apple. So vertical axis is the multi-period return and the horizontal axis of the trend meter. Again, Below 20, you see we have a lot of dots below 0 and nothing here on the up, no dots above 0 when it's below 20. And the reverse is true when it's above 80. We have very few dots here below 0 and lots of positive returns. And then again, because we have an open scale versus a closed scale, you have lots of dots sort of, for 90 or 100, we have lots of dots that are rising, that are well above, going much higher. So essentially, from a trend following point of view, you want to capture these breakouts. You saw we made a lot of money in a few markets. So that's this idea over here. Okay, so hopefully this all is going to make sense because I showed you the test data, then I showed you how the CTM is constructed. I showed you the two together, and I'm showing you linear regression. That is, if you actually look at data and say, okay, well, here's multi-period return. What is the CTM value? You got a lot of negative returns for low CTM value, a lot of positive returns for high CTM value or stochastic RSI values. All right. So in terms of accuracy, what we're trying to do is we're trying to say how often was the regression saying it's high when it's actually high, and how often was it saying that it was low when it was actually low as a function of the total sample size. And the numbers are in the 90+%. So the regression can accurately classify high momentum situations and low momentum situations, or high return situations and low return situations. And I won't bore you, but logistic regression gets roughly the same result, essentially the same results. So you can see there's a completely different approach compared to what Oscar was saying or showing, where we've broken down the chart and said we are going to convert our intuitive sense of what is trending into a number. And then we're going to test the numbers, because once we have a number, we can hit it with some mathematical technique like regression. All right. So if you think of it as a haystack problem, we have a giant haystack full of opportunities. We don't know where they are. It's a needle in a haystack. We want to find those needles. So there's a strong moves when these are high or low. So strong uptrends or strong downtrends. And now we can start building a trading system, meaning we want an entry rule, an exit rule, and a money management rule. And systems can be trend following or counter trend. And I'll show you results for both. So how do we do that? Okay, so suppose the indicators, either the trend meter, which is in the package, the stochastic RSI, which is very easy to build, is already there. If it's more than 80 and you're trend following, you're going to buy. You remember we had all those dots going higher for 80 or greater. And if it's below 20, we're going to be short. So you see we had all those dots below 20 that were trending lower. And if it's counter trend, if it's above 80, we're going to sell. And if it's below 20, we're going to buy. So you can be trend following or counter trend. And I'll put it on a chart to make it more easier to understand. So this is NVIDIA again, trend meter, well above 90, right? So this is a trend following strategy. You could went above 90 here, we're going to buy in this area and you have a trend following exit. And then stochastic RSI, same thing, but it's more sensitive. So again, NVIDIA trending higher, this is close to 100, little hiccup, we got a little sell off, weakness, right? Okay. So now put them one above the other, and you see that I've shown you this chart. It's intuitive that when you have strong returns, you have high values. When you have negative returns, you have low values. So that's what we're going to exploit. So again, a reminder, when you have high values, trend following, you want to buy. Low value, you want to sell, and counter trend is the opposite. So just a reminder, let's reinforce the learning. So above 80, we're going to have a trend following buy or a counter trend sell, whether it's the trend meter or the stochastic RSI, trend following buy or counter trend sell above 80. So for example, here, this would be a good point for a counter trend sell or a counter trend sell. And then of course, here, this would be a trend following buy. And the reverse is true. You have a trend following sell if it's below 20 or a counter trend buy if it's below 20. Same thing here. So for example, here, this would be a counter trend buy because momentum is low. Whereas here, of course, you'd have to have a trend following, system. So I'll show you some charts. Okay, so let's test it. So I'm going to use the entry as CTM greater than 90. Once we're in, we don't care. We just need an exit. And the exit will just be the 30-day lowest low. So this is like the simplest trend following exit where we made no assumptions and there's no curve fitting. It's very important to understand. This is a priori random choice. We've not tried to look at the data and find which is the sweetest exit or anything. And we're going to use all the stocks of the NASDAQ 100 and we'll use a 10-year time period. So that's what the test looks like. Just as I've shown you before, lots of green bars, only a handful of red bars. And 79 of 100 markets were profitable. The net profit was about 876,000. The 51% of the trades were profitable, and the average win-loss was 2.4. So again, kind of makes sense, and it's consistent with what I've shown you before. And then I can do a counter trend test where I have CTM less than 10. So if it's low, you buy, and then we're buying at the market, and then we still get out at the 30-day low. So if I buy near the low and it comes back down, I get stopped out pretty quickly. Again, NASDAQ 100, 10-year time period. Lo and behold, overall test is profitable. There are a few more red bars, but you don't quite make as much money. Again, 80% of the markets are profitable, and the win-loss is 3.2. So let's summarize this so that we can visualize it. So the trend following with the CTM greater than 90, the nominal profit was about 950,000 for a loss of only 65,000. For the counter trend, it was say 700,000 versus say minus 57,000. Again, a lot of trades. Now, most people won't show you testing, or they show you testing, they have a minuscule number of trades. Here we got thousands of trades, lots and lots of trades. So we've seen all sorts of markets. And about 51% are profitable for the trend following, which is very, very typical. The win-loss is substantial, 2.4, 3.19. And then this is the key thing, right? This net profit by net loss is huge. So even if you allow for cost of trading and slippage, over a long period of time, it's still going to be profitable. So what does these results mean? What these results mean is that you can take simple rules, entry condition, CTM greater than 90 or less than 20 or less than 10, a simple exit strategy, lowest low 30. And then I've not described exactly trade sizing. That's something you'll have to figure out based on your account size and so forth. And you can basically start trading tomorrow if you wish. I mean, of course, I encourage you to do your own testing. Don't take my word for it. But my point is that instead of doing a lot of hand waving and maybe when do I get out, when do I get in, and so on and so forth, now you have a clear-cut, very, very simple set of rules. I can write it in 3 lines. If it's more than 90, buy. If it's below the 30-day low, sell, and whatever your trade sizing algorithm is. I mean, it can't get any simpler than that. It's like 3 lines. I cannot simplify it anymore for you. So what are the implications of the test? First of all, it's over a long period of time. It's over a large number of stocks with no optimization. I didn't pick these stocks. Whoever builds the index, pick the stocks. Now, the main thing here is that it's telling you that you have to execute without emotion. What did Oscar said before he ended? If it hits your stop, it hits your stop. You move on to the next trade. And by managing your risk and having a systematic process, you say, okay, fine, I'll go to the next trade. And then remember, this testing does not include capitalization because I have no idea what your capitalization will be. So you'll have to redo this to understand that you can manage your risk. And of course, you should still do your own testing. I mean, this is not a recommendation that you must trade this or should trade this. This is just to give you an idea of how to construct a process. And we're not trying to trade once or twice or 10 times. As Sunny Harris said, she's been trading for 43 years. She must have done tens of thousands of trades. So that's the kind of view you need to have. If you really want to use trading as a business, you got to say, they're going to be ups, they're going to be downs, but I want to do it for the next 20 years. So how do I do it? And this is a way for you to do it, or at least an approach for you to get you started. All right, so if you look at the package, we have the first question, is it trending? There's a trend meter. I showed you all the test data for that. And there are systems which don't necessarily use this. There's a long-term system, a volatility breakout system, and a swing system. But there are exits in here that you can use for your purposes. So you can use CTM entry and some of these exits and so on. So I'm just going to dive into, does anybody have any questions or I'll continue? Fair enough.
Oh, no, there are questions. I was just looking for my mute button.
Okay. I'm sorry. This is kind of, for me, I mean, I understand this is kind of very complicated and strange sounding when I just throw all these things at you.
Yeah. Juan was hoping that you could talk a little bit about the capital you use when you do back testing, kind of like what your settings are and kind of maybe the methodology and the mentality behind your system test. And that's the only question we have.
Okay. All right. Yeah, so for the purpose of this test, I didn't worry about capitalization because I just wanted to show you what happens if you just run it and sort of give you an inspiration to do it. I typically, what I do is I make sure that I'm only risking about 2% of my capital on any one trade. And then I try to not have more than 50 stocks in my portfolio. So I don't trade 100 stocks or 500 stocks. That is just for the purposes, of the trade, because obviously the capitalization would be much greater. But obviously you can do it to 0.5% or 1%, and then your capitalization will change. And then I have sort of my own custom software that I have developed when I was a money manager, and I have a very close correlation between my testing and my trading. And then I look at the monthly curves and I roll up everything onto the monthly equity curve and look at drawdowns. And so it's much more elaborate and complicated than what I showed you here. And unfortunately, MetaStock, won't let you do that. But at least I wanted to stay within the MetaStock, tool set. But it gives you an idea that yes, you can use systematic rules and they can be profitable. But obviously, capitalization is an important thing. And the short answer is that you would use a small number of, a low capital allocation to any one trade. So you want to do a large number of small trades. I hope that answers the question.
Cool. And then we had another question because we solicited them. Carlos wanted to know, what is the smallest time frame that would work for swing trading?
I showed you a test with 10-minute chart. You can obviously use 5-minute charts. You can use 1-minute charts. I'll show you some charts. The main thing is that you're testing over a very short time interval. If you're using like a 1-minute chart or a 5-minute chart, you're only doing it testing over a few months. So to test it over years gets really difficult because on a 5-minute chart, I don't think you can use data from 10 years ago to trade today's 5-minute chart, because the whole trading technology has changed, the participants have changed. So I don't think you can assume that some testing that you did using data from 10 years ago would still be valid today. So there are all these theoretical issues of, can you really use historical data when you're trading on a very, very short horizon? On a daily data, I have no problem using historical data, but maybe down at the 1-minute level, it's really hard because trading at the 1-minute level 20 years ago is not trading at the 1-minute level today. The technologies are completely different.
Perfect. You're all caught up with questions.
Okay. Yeah. Well, thanks. I know this is a difficult topic, but that's how I trade. So, I think that it gives you a lot of options and gives you much more control on what's happening. Okay. I just wanted to spend a little more time on the 10 meter, kind of give you a sense for where it comes from. It uses 5 different time periods, the 5 different classes of tools. And the whole problem here is how do you weight these things? There's 70% trend persistence and 30% momentum. So, and it can be used on any time interval. So again, I showed you these things. Many different functions and parameters, and what does it mean? How do you weight it? It's kind of a mystery. But we can convert all of that into one chart. Basically, a single line gives you a number between 0 and 100. You don't really care what's happening below the surface. You just say, is it above 80 or is it below 20? And you don't care if it's in between. Super easy to use. Of course, you can scan it if you have the package, and you can rank it with the trend meter and say, okay, I'll only focus on the ones that are at the top because we have capital limitations. This is Costco, so I just want to show you the chart. Costco was trending higher, and the reason I put the chart up, you see that we have to have a trailing stop. So I have a trailing stop in there. So let's go to the next chart. So this will make more sense. So you see, Costco was in this big triangular consolidation. And during the consolidation, it never really got above 90, though it came close to 80 a couple of times. And then we got below 20 a few times, but there was no real strong move above 90. And then we got this first breakout and consolidation. So we got this move above. And then during the consolidation, we got a few false breakouts. And then, of course, we have this. So again, if you took one of these breakouts and used it to stop, you wouldn't have been stopped out because the stop is wide enough. And then this is a trailing stop, you'd have gone all the way over there. So why do we need a trailing stop? So for example, one of the authors, they have profit targets and profit targets and profit targets, and eventually a position is 0. Well, you're going to miss a big move like this. So the whole idea behind my approach is to take as large a position as possible, as far up the trend or down the trend as you can. So if you keep getting out at different profit targets, I think over the long run you'll make less money, even though you'll have the satisfaction of, wow, I took some profits. And of course, you're going to give up some a larger amount of profit getting out if you have the big position from here all the way there. But if you do it over 10 years, believe me, taking profits is going to give you less overall money at the end of 10 years than if you physically just use the trailing stop, and there'll be a few just blowout trades, and that'll make all the difference for you, 10 years from now. So I personally don't like profit targets. So I just want to show you here that trailing stop is the way to go. So obviously, you'll get stopped out a few times, and I showed you that not only about 50%, 45% of the trades were profitable. So here I've got two different trading strategies. Costco still, this is the initial breakout. You take this breakout or take that breakout, and now you follow the stop. So the volatility exit is one of the exits in the package. That's this green line. And the delay channel exit is a little bit faster exit. These are the red dots. You see, you would have gotten out once here. Then you have to re-enter. And then your trade size might change when you re-enter here because of the risk parameters. But this gives you this general idea that we want to use a trend meter for entry and then a trailing stop for exit. And once you have an entry, you don't really care what's happening to the trend meter. You just want to follow the trailing stop, and it goes wherever it goes. And then this is Costco again. I just want to show you, this was a 100-bar thing. And you see that we were above the 90 reading before it ever got to the 100-bar high. So sometimes it looks like it's coming up on the 100-bar high, but it could actually come at any point because it just depends on what's happening, in the snapshot looking back. All right. This is Amazon. I want to show this chart. It's the daily data again. But this is on the downside because during the strong sell-off here, we had multiple instances where the trend following would have been to go short. Of course, you could have ignored it, but this tells you that that you could have a trend meter reading below 20. And then remember, during the strong downtrend, we got no readings above 90. So, and of course, I've shown you examples in MetaStock and say NVIDIA, when you have a strong uptrend, you get no readings below 20. So it is it's an eyeball check, right? If I show you a chart, is it going higher or lower? And you'll find that the trend meter will basically be consistent with your eyeball check. Now, somebody asked how short a time interval you can go on. So I said it's interpreted the same way on any time interval. So this is E-mini NASDAQ 1 minute. This is as small as you can go. But the interpretation is the same. So for example, here you have got a little breakout and a sustained breakout over there. And then you could use a 2x multiplier, a tight stop, or a 4x multiplier, a looser stop. And only you can decide what makes sense for you. So again, instead of trying to get out with I got $2 profit, you're better off just trying to follow the trend and see where it goes. So that's an example of a 1 minute chart. Another example of the 1 minute chart, the 4x exit or 2x exit. So this is a trailing exit. There's a multiplier. So it's using the 20-day high to calculate, say, 2x of that amplitude below or 4x of the amplitude below. So the larger the number, the further away you are from the 20-day high or the 20-bar high here. And you see that sometimes you may be better off using a faster exit, or sometimes you may be better off using a slower exit. But you can decide what works for you. And then this is again this is a 5 minute chart on the E-mini NASDAQ. Again, same pattern. You have it reading above 90. You have a strong uptrend. You can use a trailing chart to get out. Again, I just want to show you this again. Blue dots is 4x, red dots is 2x. So again, you have a breakout. You're long on this thing, and you can take the trailing stop to get out. Now remember, in real time, as everyone says, you're on the hard right edge. So when you get the breakout here or here or here, you don't know how far it's going to go. So that's why you need a trailing stop, so that you can capture as much of the trend as possible. And then, of course, NVIDIA 10 minutes, we had the earnings, big blowout. You can take a trailing stop to get there after CPI data. So the CPI data, the market was sort of consolidating ahead of the CPI data. And then the data were a little bit weaker than expected. Everybody was happy. So NVIDIA rallied. And then you can take a breakout on the 10-minute chart. SOXL, a very volatile object, the SOX semiconductor index. Same idea, above 90. Again, you can use the trailing stop and so forth. So you can use the same tools, interpreted exactly the same way, but on a shorter and shorter time frame. And this is a 60-minute chart. Again, same idea, using a 6x trailing stop. So sometimes as your time interval increases, you have to use a wider stop so that the inherent volatility of the market will be higher on a longer time frame. So you need to kind of absorb some of that volatility. So it, again, depends on your personal style in terms of how much volatility you're willing to absorb and how much capital you're willing to risk, and so on and so forth. And then again, here this is Soxel, but you have a short trade. And I want to show you that, again, we have the expected behavior of the CTM below 20, and you can be short. Once you're short, you don't really care what happens here. You just have a trailing stop, and you would get out on the trailing stop, and you can have a tighter stop or a looser stop, based on your particular. But I showed you the test initially. As your trading horizon decreases, the longs and shorts come closer together. So you need to have some, better exit strategy or more sensitive exit strategy. This is Apple after it's the Apple, I guess, their Worldwide Developer Conference. On the day of the conference, there was some unhappiness with whatever they said, but then the next day there was a big rally. So you could have caught that rally with a trailing stop. But this is a 30-minute chart, so a little bit longer time interval. So you could have gotten it on a 5-minute chart and then said, well, it's going higher, let me just extend my time period. And you could have effectively captured more of the trade. So you can still use some discretion, if you wish. And then, of course, I've got a weekly data for Amazon. During this mega trend here, you see you can have multi-year events where the value is above 90. So again, you can use it on whatever time interval you want. Amazon monthly, you see, it just stayed above 80 forever during this incredible rally. So again, if you're willing to be an investor, as people were talking about earlier, you have to use a weekly chart or a monthly chart. So, but again, you can use the trend meter and say, yes, it's trending. I'm just going to buy it and hold it, or use a very loose stop, or I'll use some other stop mechanism. Okay, so I hope I'm not totally zapped everybody with so many charts and very technical stuff. But essentially, for any trade, you have to answer 2 questions: what to trade, and then how to trade. And then the CTM can help you narrow the world to a few, stocks, or you can use a Mag 7 or whatever. And then how to trade, you need to have an entry rules, you need to have exit rules, and you need to have trade sizing rules. So you need to have, and then you just turn the crank and apply the rules all the time. So again, in terms of the package, what to trade, you have the CTM, and how to trade, you have systems. And I showed you a link at the beginning. There's a very detailed talk that you can go out and look at it. The CTM is a very nice tool. It's the key levels are 80-20 or 90-10. And I've given you a number of examples. Then one nice thing is plug and play. You can just plug it and play. You don't have to worry about, should I use this parameter or that parameter? It's all buried underneath the hood. Okay, so the package itself, I hope you'll check it out. It's really very easy and simple and powerful. The trending part of it will help you find markets that are trending now. Like, is it 90? Is it 100? And of course, the systems are all trend following. So whether you have a counter trend or trend following idea, you can still have a counter trend entry with a trend following exit. So that's kind of what I've tried to do. Just a reminder, the CTM takes this jumble of lines and gives you a single line from all of this. And essentially, it's an eyeball check. It converts, there would be, if you show somebody a strongly trending uptrend, they'll say, yes, it's trending higher. And the CTM should be, up there above 80, above 90. And a reminder, again, we did this linear regression. With the trend meter below 20, you mostly got negative returns. When above 80, you got a lot of positive returns. And then because we're using trend following, we want to take advantage of this situation where you have an open scale for returns, and then you just want to follow the market wherever it goes. You're never going to pick the exact high of the move, but over time, repeatedly capturing big trends will help you. And that's what a number of the speakers ahead of me said the same thing. And then this is just an overview of the package. Multiple time periods and indicators. You have the trend meter. Then you have the trend following buying strength. And then for these 2 systems, you're buying weakness. So you have the counter trend, and I showed you some testing for that. Okay. So I'm ready to wind up here. Just a reminder, earlier in May, MetaStock had a conference, so I didn't go into the details of it in this talk because I've gone through the package in great detail, starting at the last speaker there at the 8-hour mark. And then there's a very detailed discussion of the package and systems. So it should answer any questions you have there. And then I have a YouTube channel. You can check it out. I just post on whatever is catching my fancy for the week. And then the package itself is really very easy to use. It's powerful and it's very clear. There's no ambiguity. And of course, the big challenge here is, can you trade it over and over again systematically, just turn the crank? And that's hard to do because it's counterintuitive, right? I mean, if you listen to all the people that talked today or the previous MetaStock presentations, they'll show you like a chart with 30 up and down arrows and only focus on 5 of them. Well, this is great here, but how do you ignore the other arrows and so forth? Whereas here, I've given you very clear-cut rules, and I've shown you the testing, so there's no ambiguity about what the system is capable of doing. All right, I'm ready to answer any questions, or we can wrap up a few minutes early.
Question 1 is, where's my mic button? I found it.
Over here.
Every time. John wanted to know, have the CTM and stochastic RSI calculations changed?
No.
Okay. And then Scott wanted to know, wanted to say, I like the Tushar Chande trend meter and add-on. It's one of the best.
So thank you. Very nice.
I'm going to talk a little bit more about them in detail as well as we get wrapped up. I think that's all of the questions, though.
Oh, excellent. Well, either I confuse everybody or people dozed off. It's a long day.
I thought you did great as always.
Thanks.
All right, very cool. Let me go ahead and kind of just take over control real quick. We'll talk a little bit about everything that's actually included in the add-on. And let me show my screen. Go ahead and do this and this and this. That should be everything. Wait. Okay, here it goes. Okay, now it's everything. All right. So as part of the indicator, stochastic RSI was already in MetaStock, but we included quite a few number of indicators. The long-term SMA envelopes, the trend meter, the wide stop, and then the Vidya indicator. And also, in addition to that, there's a little bit of a breakdown on the trend meter. But as part of it, there's 3 methods that are included: a long-term system, a short-term system, and a volatility breakout system. And with the long-term system, it's more of a trend-following system, uses higher levels of smoothing, a wider stop because it's a longer term, and it's designed, of course, for that more patient position trading. With your swing system, it's going to look to buy strength after weakness. Swing moves the last several bars is what you're kind of going to be looking at, a tighter stop, and then a follow through after the breakout. I really like the way that he did the volatility breakout system because a lot of people use volatility, but what he uses in terms of the breakout is he'll use the average true range and say, hey, is it broken out to a significant degree? And that's a scan that you can run. Because it's a breakout system, there's going to be a higher risk of reversal associated with that, and it will just use a trailing stop to kind of keep you protected. And all of those trailing stops, all the stops that it uses are all built into the expert. They're all commentaries. Of course, you can scan with it. There's scans for everything. And here's the expert advisor. You've got an expert advisor for each one. Each of these, this one is on the swing system. Oops. You're going to have a long position. The short-term trend is moving up. Here's your trailing stops. It's going to kind of break down everything for you. As I've said all day, I love how that expert advisor helps explain things to you. It helps you kind of put things straight in your head. You do have the system testing. You've got the long-term system, the swing system, the breakout system. Those are testable, and they test really, really well. So $4.99 is the cost for this add-on. Again, it's a one-time purchase, and it has a 30-day money-back guarantee on it. So here at the summit, it's going to be $3.99, 30-day money-back guarantee. We did record a boot camp with Tushar where he talks about the systems, how they work, how to use them. I did a little part on MetaStock about how to scan, all that kind of good stuff. So $3.99 here, 30-day money-back guarantee. You'll get access to that boot camp as soon as you sign up. And if you haven't got MetaStock yet, we'll give you a free trial. And you too can find out why it's been rated #1 31 years in a row. So there you go. John says, winner, winner, been using for many years. Fantastic and practical use. Awesome. Okay, so if you want to do that, give us a call, 800-882-3040. You can chat online with us at metastock.com/saleschat, and you can go to metastock.com/summit promo. All 3 of those will actually get those for you. And there you go. I believe all 3 of those, Carlos asks, can you go short on those? I believe those are long. No. Long positions primarily. And I could be wrong on that. I believe they're long-term only. So thank you for the question. So 800-882-3040, metastock.com/sales-chat, or metastock.com/summit-promo. Thank you again to Stocks and Commodities for sponsoring the event. We really appreciate it. If you haven't yet, go get your free issue. And we did talk about a number of really cool add-ons today with Tushar Chande, Steve Primo, SunnyBands, and a brand new toolkit for MetaStock, the Vora Victory Method, the expansion contraction indicator by Jake Bernstein, the training that's put together by Oscar. All of those are available for you at metastock.com/summit-promo. You can call us if you have questions, 800-882-3040, or go to metastock.com/sales-chat. I want to thank everybody, all of our speakers today, for coming and spending an hour with us. Thank you for joining us. It was good to have you. We'll see you again at the next one. Thanks for coming.
Hi, Kelly Clement here from MetaStock. Before you go, I have two quick things for you. One, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTubebook, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those two things. Thanks for joining us, and keep on trading.